country. Thank you so much to all of you for joining in with your expert take and enriching us on this very, very important topic. Sharad Mahindra, Amit Bhatt, Mitali Nikore, as well as Dr. Praveen Sirhan. Thank you so much for joining us right here on NDTV Profit. With that, it's a wrap on this discussion, but do keep it tuned in to NDTV Profit. Thank you so much.
It is happening now. New tomorrows, new challenges. And all of it needs energy to work. Not afraid to imagine big. Because when energy stops taking, when it just gives, people can move. Really move. At this moment, the world's evolving. And so is energy. Suzlon. Good energies that work.
India Inc.'s most respected names chose India Inc.'s best and brightest.
I'm delighted to be chairing a committee of such distinguished fellow businessmen, bankers. It's just lovely to be back on this NDTV jury. I have been a fan of NDTV for a long time.
Many of the nominees are extremely close together in terms of what they've done.
Gender parity to be reflected while we choose leadership as well.
It's also important that how they are reshaping the industries.
We've got a fantastic jury and we've left all decisions to the wisdom of the jury.
Who will earn India's top business honors? Find out at the NDTV Profit Business Leadership Awards.
You founded this company in a way when you were 15?
I think everyone really started off as more so a project than a company. The very honest TLDR answer to why I started this company is it was just very boring during COVID. I didn't want to spend this extended summer break rewatching Suits for a fifth time.
There are now, at least, quite a few folks in India who are getting into the drone delivery space. What is disruptive about your version or your vision of drone delivery?
Our goal is to create a technology stack that leads to delivery drones that are orders of magnitude cheaper. We are actually shockingly close to being more cost effective than trucks, to being more cost effective than, let's say, a Tata Ace.
From a pet project to building a company which actually makes sense. You need someone to believe that this is a viable project, not a project, but a viable entity. Who was that person for you?
That was Grad Capital. So they were our very first check. They invested in me when I was 16. It's only over time became apparent to me that nobody would have backed a 16-year-old that was still in school the way Grad Capital did. It was also a funny experience because Abhishek Sethi, the lead investor there, literally had to get on a call with my dad to convince him that you should let your son take this money.
How much of your formal education did you complete?
I did not go to college.
Why?
I think I felt there's nothing that, I can learn out of college that I couldn't learn myself.
India's unshakable news habit. NDTV.com is India's #1 English news website.
Hi, I'm Tamanna Inamdar. Watch me on NDTV Profit, where I break down the day's biggest business stories. What happened, why it matters, and what it means for your money.
Hi, I'm Neeraj Shah. Watch me on NDTV Profit for the most incisive market intelligence and meaningful corporate conversations.
And I'm Alex Matthew. Markets, mutual funds, insurance, personal finance. I help you cut through the noise and make smarter financial choices. And here's where you can watch us.
US futures trade near flatline after the Dow Jones scales to record highs on Thursday as investors react to a weaker than expected non-farm payrolls report for the month of June, while the Nasdaq Composite languishes as semiconductors struggle once again in the truncated week. Oil steadies near pre-war levels. Benchmarks meanwhile extend gains for the second straight session on Thursday, helped by a rebound in IT stocks after a 4-day decline. A decisive move around 24,200 set to move Nifty's next direction. Adani Enterprises launches 10,000 crore rupee QIP to raise funds from institutional investors. The floor price of 3,034 rupees thereabout per equity share fixed for the issue. PM Modi and his Japanese counterpart Sanai Takaichi sign a slew of pacts. India and Japan promise to boost cooperation in artificial intelligence, metals, energy, defense, as well as prepare a joint roadmap for economic security. Good morning. You're watching Market Today with me, Shreyansi Singh, and over the next half an hour or so, we'll tell you how to really make sense of the week gone by thus far and start your day on the right note. But before that, let's quickly take a look at the handover coming in terms of Tehran as well. And Iran still remains at the center of global attention as the aftermath of the US strikes really continue to unfold. US President Trump has insisted that the mission, in fact, was about denuclearization and not war. Meanwhile, you do have Iran's new supreme leader, Mojtaba Khamenei, who's expected to skip his father, Ali Khamenei's funeral over security concerns, and preparations are in full swing right now. When you talk about the funeral, Tehran is preparing for a massive farewell. At that, with more than 20 million people expected to attend, even as Iran accuses Washington of undermining peace and stability across West Asia as well. Other than that, you do have the UN Security Council that is holding an emergency session as Iran's latest attacks in the Gulf and fresh strikes around the Strait of Hormuz heightened regional tensions at the same time. So that is the entire handover that you're looking at when it comes to West Asia. But moving on, let's also quickly talk about the markets as well in terms of the picture that you have there. And there's a lot that is happening. There's largely a mixed close that you're looking at for the truncated week. Dow Jones, of course, closing at a record high, fresh record high coming in and outperforming the entire lot. As you can see on your screens very clearly, Nasdaq, the clear underperformer here as well. And you do have US job growth that's slowed sharply in the month of June, and that's something that you're looking at as an important development. Gold, of course, gained after the weak US jobs data as well. And you do also have US factory orders beating those weak expectations. When you talk about US futures as well, you do have the entire picture. Of course, this is going to be on Monday because this Wall Street is closed today. That is Friday for them, Friday for us and for them as well. But, when you talk about the entire picture, a little bit of a positive handover coming in by the way of futures as well. And when you talk about Asian markets, a little bit of a mixed bag that you're looking at yet again, even to end the week. So largely what you're looking at right now is a little bit of not a very decisive move coming in when you talk about Nikkei that has been doing well thus far this week, and Hang Seng about 1% higher, there about 0.5% uptick coming in for Shanghai as well. So largely that's the entire update that you have coming in at this moment. But when you talk about the entire picture back home as well, let's talk about that as well and talk about the demand for fuel price cut as well. You do have Union Petroleum Minister Hardeep Singh Puri saying that India has shielded consumers from sharp swings when it comes to global energy prices. He's also said that OMCs are still carrying stocks that are bought at higher prices. He clarified all of this. Let's go across and listen in to exactly what he then had to say.
The price of petrol in Delhi in June 22, that is 4 years ago, was 96 rupees 72 paise, and in June 26 it's 102 rupees and 12 paise. Now please, 4 years, and the total increase is 5.58%. In diesel, it is 6.23%. I get irritated when I see दुनिया के crude barrel था 128 रुपए का, वो 70 रुपए पे आ गया है, and when are prices coming down? So my first response to the price never went up.
Alright, and there you go. So that's the update coming in terms of petroleum demand as well. But let's also move on and get you the entire list of stocks that is in focus when it comes to banks and NBFCs on the back of their updates. In fact, Varsha is standing by with just that list. Varsha.
Well, let me start with central bank, wherein the growth is not pretty much good, because if you see deposit growth remains sluggish, this is due to intense competition. Even CASA deposits growth slowed down quarter on quarter, with CASA ratio declining. Credit growth also slows down. Total deposit though were increased almost 12% year on year. Gross advances rose almost 29%, and CASA ratio, if you see, stood at 46.6%, which is down 27 basis points year on year. You have Union Bank as well, and credit growth, if you see, slows down. RM advances growth were too lower. Deposit sees a degrowth of quarter on quarter as deposit competitions among banks intensify. CD ratio has seen substantial decrease as growth in credit lags. You have gross advances though, which increased 12.5% year on year. CASA deposits rose almost 12% year on year. You have Ujjivan Small Finance Bank, wherein if you see, there was a modest credit growth which was led by gold loan and agri banking. CASA growth, there was a degrowth, of course, quarter on quarter, which dips to 26% versus 28% last quarter. A secured lending book sees strengthening continuously. Disbursement sees good growth led by gold loans and vehicle loans. You have Bajaj Housing Finance, good numbers overall. There was a strong disbursement growth. AUM growth remains in line with Q1 FY26. Loan assets too grew strong, which was up 24% year on year. Lastly, you have Mahindra and Mahindra, wherein there was a strong growth in disbursement, but AUM growth seems in line with the past trends, and the collection efficiency remains flat at 95%. And there was a slight moderation which was seen in asset quality. So these are all the banking stocks which will be in focus on the back of the Q1 FY27 updates.
No, absolutely, and thank you so much, Varsha, for joining us with that entire update as well. Let's also talk about the likes of CSB Bank, Punjab National Bank, Equitas Small Finance Bank, and UCO Bank. In fact, some of those stocks are going to be in focus as well. Parth is joining in with all of the updates coming in for the Q1 here. Parth.
Yeah, so yesterday was filled with just a lot of banking updates, starting with CSB Bank, which has reported good numbers. The bank's deposit growth has outpaced the credit growth amidst intense deposit competition. Their CASA growth saw a turnaround in this quarter on a QOQ basis, which is positive for the bank. The gold loan advances also saw strong growth, while the credit growth remains robust as well. The next is Punjab National Bank, which has reported numbers on the slightly weaker side. The deposit growth saw tepid growth, while the global advances remained in line with the past trends. Their CD ratio saw an increase as deposit growth has trailed their credit growth. The next is Equitas Small Finance Bank, which also saw a weak quarter. Their advances saw good growth on a YOY basis, but their microfinance QOQ growth has lagged. But on a year-on-year basis, the microfinance growth has been decent. The deposit growth also has lagged on a QOQ basis, while the cost of funds have increased on a this quarter. The CASA deposit saw good growth, while there was a slight moderation when we compare them on a QOQ basis. Next, we have UCO Bank, which has reported good numbers. The deposit growth remains flat, while the credit growth saw an improvement in this quarter. The bank's CD ratio has increased, while the deposit growth has trailed the credit growth. The last one is Bajaj Finance, which has posted strong numbers as well, as they saw very strong growth in their customer franchise. The growth in new loans remain in line with the trend, just like AUM growth, which was in line as well. However, the deposit book has seen a little bit moderation in this quarter. So these are the other banking names that you should keep in your radar for today.
No, absolutely, and thank you so much, Parth, for joining us with that entire update as well. So there you go, that's the entire update coming in when it comes to some of those banking and financial stocks as well. But let's also talk about the entire consumption pack. In fact, DMart's Q1 revenue rose about on a year-on-year basis, but growth was weaker than expected, prompting caution coming in from several brokerages. When you talk about something like a Marico, you're looking at a strong volume-led growth with revenue expected to grow in the early 20s as well, and brokerages remaining positive when it comes to this one as well. But let's also get to the verdict coming in and a snapshot really when it comes to both of these counters. In fact, Mahima is standing by with all of those details. updates?
Right, so consumption updates have also started flowing in, and today we have Avenue Supermarts, Marico, as well as PC Jewellers. For Avenue Supermarts, it's a thumbs down because overall the revenue growth is less as compared to what it did in Q4 FY26 of 19% versus that of 15% this quarter. Total number of DMart stores stood at 503, so overall a weak print. HSBC says that revenue per square feet was also down by about 3% versus an estimate of growth of 2%. UBS has said that the revenue growth of 15% is disappointing, could weigh on the stock price, and we've seen pressure on the stock in the last 2 days as well. Citi believes that overall pantry fill reversal weighs on the same-store sales growth for this one. Margins is something that will be risky going ahead, and that's something that we'll be watching out for. They remain cautious given the expensive valuation and risks to same-store sales growth and earnings from rising quick commerce competition as well. Sustained accelerated store expansion and improved throughput will likely support valuation multiples. Morgan Stanley, on the other hand, has said that the weaker than expected growth could lead to underperformance in the near term. Key monitorables will be earnings and how margins pan out from here on. And Goldman Sachs says that despite of the large store opening at the end of Q4, what we've seen is that there is higher FMCG inflation which is impacting the performance, and store additions is low relative to what the past FY26 has seen. Marico is completely opposite of Avenue Supermarts because it's a thumbs up for sure. Consolidated revenue is expected to grow in early 20s in line with what the management has guided for. India business double-digit underlying volume growth has reached a multi-quarter high. Overall, Parachute, double-digit volume growth, Saffola Oil, mid-single-digit price-led growth. Volumes, however, here declined. Value-added hair oils revenue growth in 20s. International business has also done well, mid-teens constant currency growth. Bangladesh is where the business, is experiencing a transient overall moderation in terms of growth. Crude-linked derivatives, of course, inched up because of the West Asia conflict, but overall, copra prices have come off significantly from their highs. In terms of brokerages, I think HSBC says that volume growth trajectory has accelerated further. That's something that they're liking. Morgan Stanley has said that EBITDA growth remains a key to watch from here on, and inflation and El Nino is something that they'll be watching out for. JP Morgan says that high teens EBITDA growth is likely on the cards. Believe Q1 print provides confidence in Marico's ability to clock high single-digit volumes. Macquarie believes that they expect 15% EBITDA growth in Q1, and Goldman Sachs says EBITDA growth is likely to be in high teens as margins recover sequentially. Lastly, PC Jewellers is a thumbs down because the growth that they've done this quarter is much lower as compared to what they have done in the last several quarters at that 21% mark. But the good part in the business update is that they plan to become debt-free by this quarter, and they've reduced debt by more than 90% till now. So this is the overall view of all the business updates coming in the consumption space.
No, absolutely, and thank you so much, Mahima, for joining us with that entire snapshot as well. But that's not all, in terms of Q1 business updates. Aside from that as well, you do have a bunch of news flow as well on a slew of counters as well. And Jasmeet is standing by with that entire list of stocks to watch out for on the back of news flow, Jasmeet.
Well, Shanti, thank you for that and very good morning. So here are the set of stocks that will be in focus on the back of the news flows. Well, the first one in the terms of thumbs up, we have defense stocks. While defense panel approves and considers overall 1 lakh crore investment, so that becomes a thumbs up for the entire defense pack there. And then we have Hindustan Zinc on the back of the record production in the Q1, while we also have Adani Enterprise on the back of that signing of MOU worth rupees 1.08 lakh crore. And even the Lenskart will be on thumbs up given the JV it's been doing with the China for the metal spectacles, which will be in focus. While we also have Beres Industries for 2,000 crore fundraise and JSW Infrastructure as well on the back of the upgrade we are seeing from the Moody's rating. While we also have Tata Railway System on the back of the Hyperloop partnership. And Yes Bank also will be in focus as we see that the NSE ban has been lifted as of today. While lastly, we also have Aster DM Healthcare on the back of that new MD and new CEO. The business will be something to watch out for how that flourishes going ahead. In terms of thumbs down, I have a couple of stocks again. There are United Breweries on the back of that 116 crore demand. While we also have One Source Specialty on the back of that US FDA, which we have seen coming in overall observation for the particular counter.
Absolutely, and thank you so much, Jasmeet, for joining us with that entire update coming in as far as some of those stocks to watch out for. But which are the stocks that make it to your radar and brokerage radar as well? Let's talk about those three counters as well.
Well, I have three of the stocks which are in focus on the back of that brokerage. Starting off with the first one, I have City on Bajaj Housing. While this particular brokerage maintains sell with a target price of rupees 88, though they see that the overall AUM saw a healthy uptick of nearly 24% on YY basis, while on the QOQ basis it saw an uptick of nearly 6.3% and the disbursement remains modest. While they also have a key concern stating that the portfolio yield are likely to remain under pressure for the coming quarter over the lower acquisition pricing. That's something to watch out for. While the second one is City on PNB. While they maintain sell on this counter as well with a target price of rupees 103, though they make a note that advances have increased nearly 12.8% while deposits sees an uptick on growth of roughly 8.5%, but still they lacks whatever the bank's average was. On the other hand, they also observe that the advances have surged and they expect a range-bound NIMs for the Q1, and that's the reason why they still have sell on this particular counter with a target price of 103. While the last one is a bullish note by Morgan Stanley on Lenskart, they maintain overview on this particular counter with a target price of rupees 576, while they believe that the share price will rise over next 30 days, and they also remain confident about the entire business model. While they state that they expect YY EBITDA margin improvement in the markets going ahead. Further, they also believe that continued delivery on growth and margins should support the outperforming nature of the stock.
Absolutely, and thank you so much, Jasmeet, for joining us with that entire update as well coming in here. But let's also move on and get to the word coming in from an important management in the proposed Delhi EV policy that is in the spotlight, continues to spark debate. The industry leaders, though, are seeing more opportunity than obstacles right now. You do have Asokam President and Uno Minda CMD, Nirmal Minda, who's called the policy a step in the right direction, saying that the industry is going to be working with the government to address implementation challenges while also accelerating India's clean mobility journey. Let's go across and listen into that bit of commentary.
So first reaction on the Delhi EV policy 2.0, very aggressive policy the government has rolled out. From 2028 only electric two-wheelers will be registered. So how do you look at the overall scheme of things?
First of all, I would compliment Honorable Chief Minister Shrimati Rekha Gupta ji for this wonderful, great initiative and to be the first leader in all the states. I think very good policies. Now people are talking different challenges. So I would say that, when there are challenges, there are opportunity. So all those challenges we will overcome together as an industry and as a government, central government as well as state government. And this was definitely required long ago in order to improve our environmental concern. In Delhi, we have, particularly in a period, is a huge, and then we are thinking of banning the car or order even. So, and more than that, our nation objective by Honorable Prime Minister Shri Modi ji to making our nation by 2070 a carbon neutral, zero carbon. So we are moving towards that. Today we have heard Honorable Environment Ministers Shri Bhupender Yadav ji also that this is very important. Second is the dependence upon the fossil fuel, reduction of the import of fossil fuel because of this uncertainty. Otherwise also our import bills are high, our foreign exchange goes out. So with these two initiatives, I think this is a very great move.
So considering that your group is majorly into components and considering that we are seeing electrification all across the segments of vehicles, how is Uno Minda and your component industry preparing to have more and more EV components and more localization in India?
So the EV powertrain, we are fully, end to end, whether it is motor controller, charger, we are end to end started manufacturing in our, a company called Uno Minda Electric Vehicle System. We call it UMVEVS, and we are supplying to various two-wheeler country. And two-wheeler, we know maximum localization has already taken place in the powertrain. On the four-wheeler, we have recently set up a plant in Khed in Maharashtra to localize the powertrain. We started supplying to Tata Motor Punch, but there, it is going to take some time because we have to spend more on R&D, and there are some rationalization of duty structure, so that we are in touch with the government. As I said in my speech, government is very positive, very forward-looking, and whether it is and any kind of suggestions they are looking for the benefit of nation, for the benefit of the industry.
Very lastly, a very short question. How important is the entire EV ecosystem for your company? Like you mentioned that you have a separate company for EVs, but in the coming few years, what sort of demand are you expecting from the EV industry, and how will you ensure that there is proper capex that is deployed for the same?
It's a chicken and egg story. Sometimes we say the charger need to come first, vehicle need to come later. Sometimes we say vehicle need to come first, charger later. I think we need to invest. The gestation period might be a little longer. And I think, as I mentioned, our two-wheeler EV, we are already making money, which we set up about 3 years back. We were the first leader to localize powertrain. We are the first forthcoming company to localize powertrain for four-wheeler, the passenger car and the buses. So I'm quite confident that we will grow. We have no other option rather than to work on this. And I think together we and industry and ministries, state government, central government, we all need to work together for this is a national objective now in my opinion.
Alright, then that's about the EV push, but let's also get talking about tech as well. You do have PM Modi and his Japanese counterpart that have elevated India-Japan ties with a strong push on technology, economic security and strategic cooperation. Both the nations have signed agreements covering AI, energy, metals and emerging technologies. India-Japan also signed first defense co-development project pact, and that's the update really coming in on that front. And finally, a moment that's really winning hearts across the internet, of course, is during her visit to New Delhi. You did have Japanese Prime Minister also trying her hand at playing the santoor as well, and that's also something that you're looking at as a very interesting update. But moving on, when you try and take a look at some of the other updates as well coming in, there's a lot coming in by the way of sources as well, and that's something that we should be keeping an eye on as well, because you do have, after WhatsApp, the government really issuing notices to Telegram as well as Signal. Let's talk about that as well, and this is over the username feature. Now, both the apps are directed to furnish reports on usernames features as well, and the government is concerned about the increase in online impersonation, fraud, digital arrests, etc. That's something that they had highlighted in the notice to WhatsApp as well, and this is due to potential anonymity as well, and the government had directed Meta's WhatsApp not to roll out that particular feature, that is the usernames feature, until consultation is over. And the latest update coming in right now is that after WhatsApp, the government has issued this similar notice also coming into Telegram as well as Signal, and that's something that sources are suggesting at the moment as well. So that's really the roundup coming in on that front. But with that, it's a wrap on this edition of Markets Today. Thank you so much for tuning in. India Market Open up next.
It is happening now. New tomorrows, new challenges. And all of it needs energy to work. Not afraid to imagine big. Because when energy stops taking, when it just gives, people can move. Really move. At this moment, the world's evolving. And so is energy. Suzlon. Good energies that work.
You founded this company in a way when you were 15.
I think everyone really started off as more so a project than a company. The very honest TLDR answer to why I started this company is it was just very boring during COVID. I didn't want to spend this extended summer break rewatching Suits for a fifth time.
There are now, at least, quite a few folks in India who are getting into the drone delivery space. What is disruptive about your version or your vision of drone delivery?
Our goal is to create a technology stack that leads to delivery drones that are orders of magnitude cheaper. We are actually shockingly close to being more cost effective than trucks, to being more cost effective than, let's say, a Tata Ace.
From a pet project to building a company which actually makes sense. You need someone to believe that this is a viable project, not a project, but a viable entity. Who was that person for you?
That was Grad Capital. So they were our very first check. They invested in me when I was 16. It's only over time became apparent to me that nobody would have backed a 16-year-old that was still in school the way Grad Capital did. It was also a funny experience because Abhishek Sethi, the lead investor there, literally had to get on a call with my dad to convince him that you should let your son take this money.
How much of your formal education did you complete?
I did not go to college.
Why?
I felt there's nothing that, I can learn out of college that I couldn't learn myself.
India's unshakable news habit. NDTV.com is India's #1 English news website. India Inc.'s most respected names chose India Inc.'s best and brightest.
These kind of awards and jury lineup, you are truly giving it the right weightage.
I think it's heartening to see talent that there is across India Inc.
We should be awarding companies and individuals who have focused not only on growth but also on bringing good governance.
Be part of jury and vote on the people, the men, the women, the companies in India who have the right stuff is a great opportunity for us.
For us, the biggest thing is trust. That's what we provide.
And we need leaders in India that can help take India being a global superpower.
We've got a fantastic jury and we've left all decisions to the wisdom of the jury.
Who will earn India's top business honors? Find out at the NDTV Profit Business Leadership Awards.
Hi, I'm Tamanna Inamdar. Watch me on NDTV Profit, where I break down the day's biggest business stories. What happened, why it matters, and what it means for your money.
Hi, I'm Niraj Shah. Watch me on NDTV Profit for the most incisive market intelligence and meaningful corporate conversations.
And I'm Alex Matthew. Markets, mutual funds, insurance, personal finance. I help you cut through the noise and make smarter financial choices. And here's where you can watch us.
The news, Ayush. Since when do we do scripts? Fair point. Picture this. The biggest stage. Floodlights. Wow. 4K. The works. Where's the hook? There's going to be celebrities and guaranteed eyeballs. Where's the hook? Think about this. Front page advertisements and hoardings. Bro, where's the hook? Cross-platform, digital first, virality. Without a hook, no way. The message is clear. It's 2026. You gotta be real in a world of reels. You gotta be original in a world where everything seems generated. That's it. That's what we're looking for. The best campaigns, the hottest trends, the smartest brand moves on our new show. But wait, what do we call it? The Hook.
He has been tracking markets for over a decade, spots the trends before they hit the screen. And he is now bringing his analysis to the show that the market watches. Watch Sharad Dubey on Know Your Company, a show that puts the most traded stocks under the scanner. We dissect the company so that you, the investor, don't have to. Get the management to answer questions relevant to you. Watch Know Your Company, weekdays at 11:30 a.m. to understand your next big bet. When the headlines move fast, perspective matters. You're watching live from the NDTV Profit headquarters in Mumbai. This is India Market Open with Tamanna, Alex and Neeraj.
Very good morning. You're watching India Market Open, and it looks like we're ending this week with a bang. At least if you look at the implied business updates coming in, look fairly positive.
They do.
There's no immediate red alert, which is what we've been
even
used
not
to.
even in Mumbai. Not even in Mumbai.
Not even in Mumbai. It's raining pretty heavily this morning.
It is.
But that's welcome. That kind of a rain or a downpour is welcome. But even globally, nothing major on fuel prices, etc. I hope I'm not jinxing it. This better stay through the day. But it's looking good this morning, folks.
And the US is heading into a weekend, Independence Day weekend. So they're off today. Tomorrow is Independence Day. So hopefully it stays quiet.
Yeah, Dow surged 600. And by the way, an interesting statistic, global markets by and large have surged to a number of $94 trillion, which is up 131% since the COVID lows. And as a percentage of GDP, the world GDP, the world global equity market cap is up to a record 134%.
Wow.
It's equities all the way.
Yeah, but we're looking at it from here and just look at what's happened to Indian markets.
Nifty chhod do.
No, but actually equity markets, the broader market indices, we'll talk about it.
It's 6-7% this year.
Yeah, but the broader markets are better.
For the first 6 months, yes, we pulled up that data.
But I'm saying the broader markets are within 1% of 52-week highs.
That's fine, but I'm saying the kind of numbers he's talking about.
That's true.
I'm feeling happy for everyone who's enjoying. But most of our viewers are hoping we'll eventually catch up.
Yeah, especially the ones who come in the last 18 months for sure. But if you COVID lows se ho to 6 saal mein kya baat hai?
Exactly.
Okay, here's what's happening globally this morning. Mixed day of trade in US markets. Dow zooms while semiconductor stocks weigh on the Nasdaq. Pull up the indices over there, and it's actually a couple of counters, which is the reason why the S&P 500 is flat and the Nasdaq was about 0.8%. It's all about the Dow, isn't it? Nearly 600 points up. Pull up futures as well, and we'll see what's happening there. At the AI trade is going to be a question that people are going to ask more and more over the next few days, although Nasdaq futures are looking fine now, 0.5% up. Treasury yields are in focus because the June non-farm payroll data wasn't great. It increased by 57,000 versus an expectation of 1,15,000. So the 10-year is at 4.48%. You saw a bit of a dip in the 2-year. The unemployment rate, though, came in at 4.2% versus 4.3% expectation, so that was fine. Oil prices are staying steady as traffic through the Strait of Hormuz is increasing. Let's pull up the latest. Brent is at about 72 odd, not too much movement there. Asian markets had a fairly good start. Let's see where they are right now. The Nikkei about 0.5% up. The Hang Seng is really the star today, nearly 2% up on that index. Peter Maguire joining in this morning, the CEO of Trading.com Australia. Peter, very good morning to you. Hope you're doing well. Let's just get your sense of now where is that base forming for crude prices and for the Brent. Yes, it'll take some time to get to pre-war flows through the Strait of Hormuz, but do you think we're getting there, or is 70, 72 the new base?
Well, good morning, Tamanna. I think it's probably going to trend lower from here. I noticed some really very interesting numbers. US is saying about 10 million barrels are transiting through there a day. And I looked at what Saudis are doing, and that's very, very strong, 6.3 million barrels a day as far as production. And they're nearly back at 90% of February levels. So overall, crude prices, there's going to be excess capacity, I think, leading into the second half. Certainly by Q4, that's going to be great for consumers, fantastic for India, wonderful for inflation, and I think it's going to be a lot lower than where we currently sit.
Peter, hi, morning. So the other thing that we've been looking at, of course, is the dollar and the way that it's moved in the recent past. And Wash comments in the week gone, or in the few days past, has had a bearing on the dollar as well. What did you make of the non-farm payrolls data that came through, though? It was a bit of a surprise.
what does that tell you about the US economy and the trajectory for the dollar?
Well, good morning, Alex. I think it was a little bit softer than what we were expecting. Many people were saying it could be, a 115 to 140 sort of handle. Came in at 57,000. It was soft, and there's no doubting that. So there's the first part of it. As far as Kevin Walsh is concerned, well, let's look at bond yields. You've got a 10-year sitting just under 450 at 4.48. And you've got a 2-year at 4.14. So overall, bond rates are being still fairly strong. US dollar index approaching 101. I wouldn't be surprised to take a 102 handle out, 102.50 sometime over the next week or two. I'm looking to see what Japan has to play, whether they roll the intervention card out and where the euro trends. But overall, the currencies they're fairly much range bound, and there's plenty of other money to be made in other markets other than currencies at the moment.
Okay, so where would that be then, Peter? Because if I were to ask you what you were advising your clients and what investors where you're sitting are contemplating when you look at the global landscape, where do you see the biggest opportunity? Because equity markets have gained in several pockets, but those have been concentrated. And there is a question mark about whether or not that steam will continue to last heading into the second half of this year.
Well, I think, Alex, you can't take your eyes off Asia. It's been very, very strong when you're looking at Japan and, of course, South Korea and semiconductors. We're all understanding that. Look at the NASDAQ. It's been extraordinary. And, S&P and Dow at all-time high. So the overall theme is very, very strongly bid up. You can't take your eyes either off China. That's been strong. So there's the first part of the story. Short, everyone's been short oil. Because of that 110 handle washing out to 70. It's been dramatic over the May and June period, and I think that will continue softness to the downside. And the gold traders, well, they're sitting on their hands at the moment. They're not looking for it to break out either way. It's very choppy, so until they get a clear signal, I think many people are on the sidelines. So that's probably where it weighs up at the moment.
Fair point. All right, Peter, thanks so much for taking the time. Have a great Friday and an even better weekend.
Thank you, Alex.
Let's talk about what happened in trade yesterday. Strong gains across the board as foreign institutional selling dropped. You had FI's net selling equity worth about 312 crore rupees. Domestic institutions continuing to buy a decent quantity, which is about 1,784 crore rupees in trade yesterday on a net basis. The benchmark Nifty 50 gaining as much as 0.7%, aided by an IT resurgence. You had Infi, TCS, HCL Tech ranking among the top 5 contributors points-wise. And you also had ICICI Bank that was in that top 5. It gained as much as 1.5%. It was the exception to the rule in the banking pack. I'll get to that in just a bit. The Nifty 50 ending just about 20 points shy of the intraday high. So that is indicative to you that we more or less held that strength towards the end of the session. The benchmark gained despite the Bank Nifty's underperformance. The Bank Nifty ending flat as most private sector banks failed to participate. The Nifty IT, though, was the hero of the show yesterday, gaining as much as 4.6%, recovering some of the recent losses. And you were talking about the fact that year-to-date losses have climbed quite substantially for that index. Realty, auto, metal index, all of those were gainers in trade yesterday. On the flip side, you had PSU banks that dropped 0.4%, weighed down to a certain extent by BOB's fall. And you saw what happened, that 5,700 crore rupee settlement that took place, the announcement of which came through during market hours, and the stock fell quite dramatically towards the end of trade. The broader markets gaining with market breadth healthy, and you had the mid-cap index that gained about, there you go, so that's the Bank of Baroda chart. It dropped quite significantly. The mid-cap index gaining about 0.5%, the small-cap index up about 1%, and both those broader gauges, as I mentioned at the start of today, are trading within 1% of their 52-week highs.
Yeah, I mean, good solid session, right, for the last few days. I mean, and that's good. And maybe, as Tamanna said, maybe we end this week with a bang. And in the relative terms, you could call it a bang. But the good part about the trade yesterday was that buyers managed to hold on to the relatively elevated levels throughout the day, and therefore it was more a trending day, looked solid, which is something that gives confidence to the bulls. Now, the softer US data is of course easing some of the dollar strength, and which helps metals, which helps market-wide optimism by and large, but certainly helps metals. So if you're thinking of what to do in a scenario like this, figuring out pockets which haven't rallied. Metals have had a bit of a corrective move, and therefore yesterday may have been the first day. There might be some more in store, so keep that in mind. I mean, this wider trade deficit, cooling rate expectations around Fed commentary is actually a really big push for metals per se, for markets at large, but for metals per se. I think the other point is, and Alex, I'm sure we'll talk about it in greater detail, but Bajaj Finance results show a seasonally stronger demand for consumer durable loans. The loans don't happen without the offtakes happening, right? And in consumer durables, you usually have the entire sale happening at one go. So you don't be surprised if it's a very strong quarter for some of the consumer durable companies, never mind the fact that there's a conflict-ridden quarter, if you will, and the Middle Eastern front. So there will be, we know we've spoken about air conditioners by and large because of the hot summer. It may well extend to some of the other product categories as well, and therefore related companies could well be ones that you might want to watch out for to play for the results. So all good for now. Let's see if it lasts throughout the trading day today.
Yeah, I think FMCG I would add as another notable category. They seem to have gone through this entire phase of high input prices fairly well. The updates are decent. You have today Morgan Stanley with a focus on some of the major ones, saying that we expect prices to increase, the stock price to increase within the next 30 to 45 days, including in HUL, Britannia, etc. Of course, there are some exceptions which are not going to do as well, but I think FMCG as a pack may be one to focus on today. What else? The Nifty, of course, has strengthened its short-term technical structure after extending gains for a second day. The index has now reclaimed its 100-day exponential moving average, or EMA, close to the upper end of the long-standing 23,800 to 24,200 trading range. Immediate resistance 24,200 to 24,300. Next upside targets 24,400 to 24,600 if the breakout sustains. Immediate support at 24,000, followed by 23,850 to 23,800. A fall below 24,000 could pull the index back into its earlier consolidation range. For the Bank Nifty, above all key moving averages, although momentum has moderated slightly. Resistance at 58,300 and 58,420. Supports at 57,910 and 57,790. I suppose, folks, the biggest guesses today is what happens to the Nifty IT. Does it continue one day up, one day down? Or does it continue on strength?
But there are two pieces of news which caught my eye. So just in the last half an hour, 45 minutes, if I'm not wrong, HCL Tech has won a large AI deal with a European company worth about $1 billion, $1.14 billion. And yesterday in one of the, maybe it's covered widely, but I saw it through a clipping that came in a local newspaper in Pune, that Accenture has signed a 3.45 lakh square feet office space in Pune for nearly 10 years. So lots happening out there.
Interesting.
And on the other hand, the AI trade is getting questioned globally as well.
Yeah, did you guys? I'm sure you guys saw that the Palantir CEO.
Yeah, we talked about it yesterday.
We spoke about it extensively. Yesterday.
So,
that was astonishing.
In fact, the question was: are IT stocks getting a fillip on account of those question marks?
But absolutely, it did, because he's saying that he's calling it a token tax. The cost of compute is going to be a word everyone will hear again and again.
Yeah.
So, and one of the theories that the Palantir CEO Alex Karp has is that if these companies are going to make me such a huge profit with their services as they're saying, why don't they share in my profits instead of charging me for the tokens? I'm paying for the tokens. They then get information to how I run my business, and it could be a stealth of intellectual property. I mean, huge allegations there, but it did work to sour the mood, I suppose.
And this follows a month after what Jeff Bezos had said about IT services and why they will not be decimated, if you will, and will only do well. So it's pretty interesting.
Since we're on the space, another story which I thought was very interesting is OpenAI offering up 5% of its stake to the Trump administration. Trump saying in an interview, I'm sure SpaceX will give me a piece of the pie.
Goodness.
So
but OpenAI is a very nice conditional arrangement that they are saying. Sab mein le to main bhi dunga. Pata nahi hai. It is very interesting.
Yeah. So a lot happening. Okay, let's talk about stocks over here and now. On my watch list first is HUL. Morgan Stanley has maintained an equal weight with a target price of 2,480. They're saying believe the share price will rise over the next 30 days. They expect HUL to surprise positively on top-line growth in the first quarter. Pricing actions taken to pass on the inflation should support FY27 top-line growth. They believe double-digit revenue growth and a delivery will be viewed positively. So that's a thumbs up on HUL. Punjab National Bank has come out with its business updates. It's not that great, so we're giving it a thumbs down just basis those business updates. Global deposits witnessed tepid growth. Advances remained in line with past trends. CD ratio increased as deposit growth trails credit growth. So here are the numbers. Global deposits increased 8.5% year on year to about 17,000 odd crores. Global advances rose about 13%. Global CD ratios improved to 73.92 from 71.09% a year ago. Here's what Citi is saying on the developments. They've maintained a sell with a target price of 103. They're saying advances, deposits growth at 12.85 and 8.5 year on year respectively lags system average. Overseas advances surge. They expect range-bound net interest margins for the first quarter. Modest treasury and seasonality slower recoveries in Q1 may drag ROAs close to 0.8 to 0.85%. So not a great set. And I know we started the show saying that a lot of business updates are good, but the next one I've picked is also not a great business update, and you might see some impact on the stock. I'm talking about Avenue Supermarts. So it's a thumbs down. The Q1 revenue is at 18,343 crores, so that looks better optically. Q1 revenue is up 15%. Total number of DMart stores as of June 30th is at 503. But here are what some of the brokerages are saying. HSBC has maintained a reduce with a target price of 3,870. They're saying it's a weak print. Growth lower versus Q4 standalone revenues, up 15% year on year versus 4% and 5% is a miss to consensus and HSBC estimates. Revenues per square feet are down 3% year on year versus +2 in the fourth quarter of FY26. Morgan Stanley has maintained its overweight, a target price of 5,083. They're saying Q1 saw weak growth, 15% growth. The number we told you was below expectations after a good Q4. This is a weak print, especially in context of the pre-sales updates of other retailers where growth momentum has sustained. The weaker than expected growth could lead to underperformance in the near term. Key monitorables from earnings include margins. Just to underline that point, very quick take from Macquarie as well. They've maintained an underperform with a target price of 3,100. They're saying pre-Q1 was disappointing sales growth and store additions below their estimates. Believe SSSG, that is same as store sales growth, has moderated from Q4 levels. So Avenue, I know was a big favorite. So there's a very polarized view on Avenue. On e-commerce, a take from CLSA, I think, saying that, they're really getting there, but then their Q1 numbers yesterday seem to have disappointed.
I'm also surprised, and you pointed it out, Morgan Stanley, the call that they have, the target that they have, they're still overweight and they maintain their target. So, and everybody else is actually pretty much underweight or sell. Yeah. So it'll be interesting to see what happens. I think it's a
matter of what the expectations were after seeing Q4.
There's even one brokerage note that talked about pantry stocking having dissipated. I think to a certain extent that played out in the fourth quarter of last year, before the war.
But it should show for everyone else then.
Yeah, exactly. All right, so on my list, I've got Bajaj Finance, which is a robust set of numbers. In fact, the AUM growth has picked up in the first quarter rather, and the sequential growth is actually the highest since Q2 of FY26. They've added over 5 million customers, and the new loans that have been booked have grown at 20%. On a year-on-year basis, the AUM is up as much as 24%. All of that is positive from the perspective of what Neeraj said earlier as well with regard to consumer durable loans that have come through into the system. There are several notes on Bajaj Finance, but I've picked Jefferies on this company. They've maintained a buy with a target price of 1,210. What they're seeing is that Q1 shows an uptick in AUM growth to 24%. That's the highest in 4 quarters. This reflects healthy core trends and seasonally strong demand for consumer durable loans. The seasonal uptick in consumer durable loans may also help the net interest margins. Bajaj Finance may benefit more from stronger FCNRB deposit mobilization, and it stays among the top picks. In the quarter gone by, though, you don't look at this metric very closely when you study Bajaj Finance, but the deposit growth was not very robust. The loan growth growing is a key positive, and the AUM has grown quite healthily. Let me get out the financial services space. In fact, I've got UCO Bank as well on my list, and deposit growth was flat, but really the credit growth is where the improvement is seen, and this is seemingly going to be a bit of a trend in the banking space. The CD ratio as a result of those metrics has actually increased as deposit growth has trailed the credit growth. But take a look at the metrics. Advances have grown as much as 21.3%. Remember, this is a public sector bank reporting 21+% growth in advances. Tells you something. Deposit growth is only 11% or thereabouts. That CD ratio therefore going to 82% from 75%. Still okay though compared with some other large banks. And finally, Marico. This might well be the best for the last because the volume growth was double digit in India in the first quarter. International volume growth as well, the momentum is sustained. Remember, they don't give you exact numbers, they give you ranges. This is from their commentary in their quarterly update. The revenue growth is set to be in the early 20s, and the profit is also going to be aided by the softer copra prices despite other input costs rising. Parachute coconut oil has achieved double-digit volume growth in the quarter gone by, and in fact delivered the strongest performance in several quarters. My colleague Ridhima had reported recently that they only just cut the prices of Parachute because of those copra prices coming off, and this is a very substantial portion of their overall top line. Macquarie has weighed in with an outperform rating and a target price of 890 rupees. They say that the pre-Q1 update is better than expected. The pre-quarterly update suggests a sequential uptick in volume growth. Expect a 15% EBITDA growth in the first quarter. Very quickly, GS has also weighed in with a target price of 900. The growth is accelerating to double digits in the volume space. Parachute volume is growing substantially, improving to double digits, while the VAHO and the new segments have sustained momentum. The EBITDA growth is likely to be in the high teens as margins recover sequentially. So all firing on all cylinders seemingly for Marico.
Yeah, I mean, and maybe consumption plus banks plus IT all doing well give us a really good close to the end as well, right? Because the start is going to be good. And that may really help digest a couple of these blocks or QIPs, if you will. So PB Fintech is the first one on my list, wherein there's a 2.6% stake sale via a block deal today. The floor price is set at about 1604, which is about a 4.6% discount to CMP. Could go slightly lower as well, but watch out for this one. Could be interesting. So PB Fintech might well have maybe a bit of a stick today. Keep an eye out for that. Adani Enterprises, there is a QIP at hand, a floor price of 3034.68 per share. The indicative issue price is 2883 per share. Remember, viewers, just in case people are confused, the floor price is the bare minimum that below which the company can't issue the shares, but in a QIP you are allowed a 5% discount, and therefore this 2883 is the 5% discount to the 3034. In case people wonder what's the difference between this floor price, which is SEBI nominated, versus the indicative issue price. So very likely at that price about 2883, the demand is strong, could be higher as well. So remains to be seen. Remember, I think they said that the issue could be upsized from the size of $1 billion odd that they have put out. So it'll be interesting to see what happens to Adani Enterprises today. It's trading at 3177. Could start off lower. If the demand is strong, could do well. And from amongst a lot of other updates that have come in as well, a smaller one, CSB Bank. The total deposits were up 26%. Gross advances up 24%. Very strong numbers by and large. And good deposit mobilization, if you will. It's interesting that in a bank, we are seeing the reverse happen, wherein the deposits are higher than the gross advances. Usually for this quarter, what we've seen, and for the last many quarters, the deposits are lower, the advances are higher, because banks are having a problem of deposit mobilization. In CSB Bank's case, at least in this quarter, it's quite the reverse really. So pretty interesting. Let's see how the stock does in the session today. So 2 or 3 on my list really. And you can argue HCL Tech could be in focus as well, of course.
Yeah, a bunch of others actually, because there's a flood of business updates that have come. So we're going to try and capture as many as we can very quickly for you. Just meet there with the other stocks that are in the spotlight.
Well, Tamanna, thank you for that. The stocks in my radar, first one is HCL Tech, where HCL Tech is in focus as it signs a partnership with the Fortune Global 50 client, and this partnership is worth 1.1 billion. Well, this partnership is for deploying AI model across enterprise and digitalization, and this particular tenure is for 5.5 years and has an extendable feature for another 5 years. Now, this would start in July 26 and something to watch out for as it's a new business for the company. And the second one is Mahindra & Mahindra Financials with the Q1 update for the company. Well, they said the strong growth in disbursement is up 21%, while we also see a strong growth coming in for the AUM, up nearly 12%. While if we look at the efficiency, remains flat at 95%, the collection efficiency. And lastly, the slight moderation asset quality seen in this particular quarter. Well, the last one is Tata Motors PV, a weak quarter for the company. Must say the overall wholesale is down 9.2%, even the retail sees a downtick up to 15.3%. And this downtick is on the back of the disruptions in the supply chain and the new model transition of the company. While lastly, the Range Rover Sport and Defender mix have improved efficiency to 80% from earlier 76%.
All right, very, very quick break. A lot of others, M&M Finance, good set of updates. So a whole host of them that we should talk about. I think Inox GFL will be in focus with the Poonawalla family putting in a big sum of money there.
Yeah, into Inox Clean. So that could be in focus as well.
That is going to be in focus. So there's so many stocks to cover. It's a great day where there's so many ideas, and the GIFT Nifty or the implied open is showing you 150-point uptick. We'll take a very, very short break. We're going to come right back. Don't go away.
It is happening now. New tomorrows, new challenges. And all of it needs energy to work. Not afraid to imagine big. Because when energy stops taking, when it just gives, people can move. Really move. At this moment, the world's evolving. And so is energy. Suzlon. Good energies that work.
You founded this company in a way when you were 15.
I think Airborne really started off as more so a project than a company. The very honest TLDR answer to why I started this company is it was just very boring during COVID. I didn't want to spend this extended summer break rewatching Suits for a 5th time.
There are now, at least, quite a few folks in India who are getting into the drone delivery space. What is disruptive about your version or your vision of drone delivery?
Our goal is to create a technology stack that leads to delivery drones that are orders of magnitude cheaper. We are actually shockingly close to being more cost effective than trucks, to being more cost effective than, let's say, a Tata Ace.
From a pet project to building a company which actually makes sense. You need someone to believe that this is a viable project, not a project, but a viable entity. Who was that person for you?
That was Grad Capital. So they were our very first check. They invested in me when I was 16. It's only over time became apparent to me that nobody would have backed a 16-year-old that was still
Welcome back. You're watching India Market Open. Implied Open showing a great start this morning. Parag Thakkar and Kush Bora in the studio with us. And of course, a lot that we're going to cover this morning. Kush, what was that dialogue yesterday? Darwaza tod do.
दया दरवाजा तोड़ दो.
अभी हो रहा है कि नहीं? Or we just nudging?
हो रहा है कि नहीं? I thought you'll be like, wow, Kush, what a call, मजा आ गया. आपने बोला और निफ्टी चल गया. देखो फिर follow through आ रहा है.
But that was not a तोड़ दो moment. It was, you want a little more with that kind of setup.
You need the data?
Yes.
Nifty's closing yesterday was the highest since early May. तो थोड़ा थोड़ा तो मतलब ऐसा क्रैक आ रहा है. आज 150 पॉइंट ऊपर खुलेगा तो टूट ही गया ना.
हाँ, so that was a push. अभी that was a धक्का.
Okay,
so now it is happening.
Greedy.
Yeah.
No, but मेरा पूरा ओपनिंग खराब कर दिया. I wasn't even going to say good morning today. I was going to say moshi moshi.
Moshi moshi. Moshi moshi.
So much discussion you guys had on the closing show yesterday कि कितने Japanese words पता हैं.
Yankee.
Exactly. And there I was listening to it.
You pick up the phone and you say moshi moshi.
No, moshi moshi.
This is all जिंदगी ना मिलेगी दोबारा.
जिंदगी ना मिलेगी दोबारा.
I think Kush, most of your awareness comes from Hindi movies.
And English.
No, and this one, if you guys haven't seen that, you guys have missed the trick.
Everyone would have seen it, I'm sure.
Seen it. Yes, we were having a detailed quick recap if you missed it. Alex did a pop quiz on me on how many Japanese words I know. He knew all 3 of them.
I know.
And then for the rest of the show, he was Alex-san. So, that was,
like, no one's ever called me that.
That was what you missed
weird.
yesterday. But okay, Kush has come prepared.
Yeah, and there I was wondering ki of all the things moshi moshi kaise nahi aaya, so I had to start with that. But no, moshi moshi. Very good morning to everyone. Like I said, Nifty is actually knocked on those doors. We are starting to see cracks and good ones now because we've closed at highs which have been seen in early May. Setup looks positive. We know that this was largely on the back of IT. Reliance ne kuch kiya nahi, banking was consolidating, and we'll take that. We'll take that because the two, at least the banking pack has already done quite a bit, right? Right now the momentum is positive. All of these things positive, right? थोड़ा सा कहीं ना कहीं तो काला टीका नजर का लगाना पड़ता है. So here's the thing, the PCR is already at 1.28 and in the past we've seen that once it hits 1.3 and thereabouts you see some cooling of some profit booking. Also if you remember, I think Neeraj also mentioned this yesterday and I also tracked this, 24,000 call and put option had a massive base, both of them. So that's basically a 24,000 straddle, premium put together close to 300 rupees. So now we're testing that 24,300 range if we open at about this 140, 150 points. This for me is the litmus test. The whole world's been talking about 24,100, 200. मेरे लिए 23,700 and 24,300 range है. ये break होता है तब आप यहाँ से 24,500, 25,000 भी देख सकते हो निफ्टी में. The uptick will be faster. So this is the litmus test. Yes, we've done well. Now let's see if we can cross that threshold. Bank Nifty, nothing wrong with this except maybe the nazar ka kala tika is HDFC Bank on this one and quite a big one at that. 800 being respected yet again. But with SBI, ICICI doing the heavy lifting, I think we're on good stead. Supports shifting higher. 57,000 to 57,300, that's the support zone. If you have a long position, keep your stop losses at that. If not, you can still enter and keep your stop losses around that range.
Okay, end of the week, what about the individual calls?
Going with all 3 longs and surprise, what makes the long call? SBI.
Why surprise? I mean, you've been speaking about it for a while.
Correct, but yesterday I said, okay, so I have a framework. अब उस फ्रेमवर्क में जब तक वो सारे क्राइटेरिया मीट नहीं होते, ट्रेंड भले पॉजिटिव हो, मैं कॉल नहीं देता. Yesterday it popped up, which means it ticked that box also. अब हो सकता है कि 1100 के आसपास आपको थोड़ा resistance मिले, call rating and all of that, but the trend is positive and like I said, now it's ticked all the boxes. So I remain constructive even from a call perspective now. Positive तो पहले ही थे, right? So now SBI for targets of 1080, 1110 with a stop loss at 1020. The other one is Alivis Life Sciences for targets of 1190 and 1255. And the stop loss on this one is at 1120. And GAIL, Gujarat Ambuja Exports, the other GAIL, this one too has been consolidating with a positive bias, healthy volume action. So for targets of 171, 176 and the stop loss at 160 is a long call.
Okay, some news coming in which we want to highlight for you. Ministry of Finance memorandum has granted a 2-year exemption from the provisions of public procurement for certain Chinese companies. Sumit, give us the details. Which are the companies Chinese companies who have been granted this exemption, or India has been granted this exemption to procure from these Chinese companies, and who are the beneficiaries on this side?
So basically, the Indian government has now approved 4 Chinese companies to provide their equipments
to public companies. So these companies are TBA Energy India Private Limited, Nanjing Electric India Private Limited, New Northeast Electric India Private Limited, and Taikai Electric India Private Limited. So this clearly means that the government, this clearly shows government's move towards wider approval to Chinese OEM companies. Now earlier in Feb, approval was given to only one of the companies, that is TBA, for a reactor category for 1 year. But now approval has been given to 4 Chinese companies across products. But obviously these products has to be made in India, and this is for the next couple of years. And also the local made content should be minimum 50% by these Chinese companies. So what is the presence of these Chinese companies in India? TBA has a EHV transformers and reactors unit. Nanjing has a smaller GIS insulator for HVDC. NHVS, that is Northeast Company, has 400 and 765 kilowatt GIS factory. However, the factory is non-operational, but they can import SKD and assemble in the country. And lastly, when it comes to Taikai, they have a 400 and 765 kilowatt GIS shell factory. Now, this is as per IFL report. And what would be the impact of this approval coming in for 4 Chinese companies on Indian power capital goods company? Definitely the valuations will take a knock, and this is sentimentally negative for all the companies. But as per IFL, companies like TRIL, Voltamp, Atlanta, there's a direct impact on transformers pricing, and this could these standalone companies could be worst impacted. Apart from that, the MNC grid equipment companies are also vulnerable here, given the fact that Hitachi Energy had recently announced a new capital expenditure for 765 kilowatt GIS. GE Vernova also has presence in segment with in these segment. When it comes to Siemens Energy, they have presence in 400 kilowatt with higher localization. But when it comes to CG Power, they do not have any presence in EHV GIS segment. But again, sentimentally, this would also be negative for CG Power as well.
Okay, good quick update there, Sumit, of something which is very important to note. Renu Baid Pugalia, Senior Vice President, Researcher at IFL Capital, joining in for more on this and this good spot there. Renu, what is the extent of impact? Basically, competition increases for some of the Indian players that we've talked about, isn't it?
I think we'll just get Renu back in a moment.
I think we've lost the line.
Parag Bhai might have a view here as well. Parag Bhai, what are your thoughts here? Because this clearly means that the sector which was going to get overcapacity as well in due course will now have a pricing problem too.
Yes, yes. So I have been negative on this sector from day one, right? Because the margins which they made, like 21% margins for transformer makers, was not sustainable according to a transformer maker
company
only.
Itself, yeah.
Company itself, okay. And it's the cleanest company out of the lot.
Which one?
He won't say the name, but the name starts with one of the last 5 letters in the alphabet. Okay.
What is happening?
And the other thing is that multiples of some of the names which Sumit mentioned, like Hitachi Energy, all those multiples are so stretched that if even some little goes wrong for those companies, the stock can correct big time.
Okay, but I think here the question is about competition coming in. And that which is going to impact the pricing, competition coming in. I'm just wondering if the fact, just if you pull back a bit, and the fact that now the government is easing up on procurement from Chinese companies, is it also a positive for, say, a Dixon, a Syrma, not directly related, but the fact that they are also waiting for OK and a nod with ventures
Vivo and all those
with some Chinese companies. I know they're not in the same sector and the same space, but the overhang of Indian policymakers being a little cautious about having anything to do with Chinese companies seems to be dissipating.
Yeah, correct. I agree with that.
And I think Amber got the approval as well, right? So in some
Amber
sense,
got an approval. So I think that gateway is open. So while it might be a negative today for some of these guys, it could be a positive overall
it's a policy
for the others.
shift. Policy shift.
That's a good way to look at it. Renu Baid, I'm going to take that question to you. Can you hear me?
Yes, yeah, hi.
Hi, Renu. Very good morning to you. We're looking at it from the point of view of a larger policy shift. Is that how you see it as well? And the immediate here and now impact on some of the listed Indian players?
Well, the Ministry of Finance, we had seen earlier in Feb, had also approved TBA for reactors. But the recent approval which they have given last week of June mentions 4 Chinese companies without any particular product category, which means it's open across product categories in which they operate. And this ease in restrictions is for the next 2 years. and they have to meet the local make in India requirements. It is not on imports, it is to be made in India products which is there. So I think on the transformer side, entry of TBA was broadly known and understood, and domestic capacities have also come up. So to that extent, we don't see any material incremental negative impact on transformer companies per se, but definitely TBA is here for good at least for the next 2 years plus. More importantly, on the GIS or I would say switchgear segment of the market, 765 kV, their Chinese players apparently have been approved, and if we see business volumes improving in this segment, which will happen now, these players will definitely be a bit of spoil sport on the pricing. That was a trend in the last cycle for them. And players like NHVS have local manufacturing outfits and presence. Unfortunately, these outfits were non-operational for last 2.5 to 3 years. And if they are allowed to bid in the project, they can use the next 6-9 months to restart their operations and mobilize their teams and resources. So to that extent, we see visible impact in the 765 kV GIS portfolio for companies in the grid equipment market.
Interesting. But Renu, that's one company, if I'm not mistaken, right? You're referring to a company where capacity has been non-functional. But what about the others? In that, if there is approval and there is a case to be made for business to be done in India, then capacity will need to be created. And that's not something that can see the light of day perhaps in 6 months, right? One would assume it will take a year or so for that to come through.
GIS, these companies have basic manufacturing outputs. Okay. So to that extent, maybe they will not have to do background work from scratch. But the point is, if next 6 months they start coming up for tendering and their project deliveries next year, then they would be at par with domestic companies. And in switchgear, especially 765 kV, most of the critical components all are imported. Same for domestic companies, even the listed names which we have. So they all do assembly in India plus fabrication, other testing work. So to that extent, the gap may not be too wide in terms of the local manufacturing content of an Indian company versus the Chinese peers once the factory shop floors are operational.
Renu, morning, Neeraj here. So one is, of course, the transformer names, very likely direct impact. Some of them had cooled off quite a bit too, but the margins are still not at the nadir, never, even if they are not at the pinnacle. Do you reckon that there is room for margin squeeze? Will the market price that it already, and therefore a corrective move immediately in the transformer names, you think?
I don't think so, because the transformer orders typically are 12 to 18 month execution cycle. The backlog with which these companies are sitting all are at pretty healthy margin levels. So to that extent, there is reasonable visibility that margins until first half or third, fourth quarter of F28 is broadly secured. On incremental orders, as we have been maintaining, domestic transformer prices have nearly peaked. So for companies to really deliver outperformance over the domestic market pricing, it would be exports. And we clearly think companies which are building up export portfolio and exposure to developed markets like the US, like Middle East, where margins are much better off, those companies will be able to beat the domestic market and domestic peers on the transformer side. And that is precisely where we like CG Power, because they're building up export portfolio. Even other MNC peers like GVT&D is building up a transformer export portfolio on not only on HVDC transformers, but also for the US AI data center orders.
So, okay, Renu, in which case, just the question, a lot of people are questioning the valuations at which some of these MNCs are trading, right? GVT&D, you mentioned, is doing well, but, you know, trailing 96, forward, whatever, even if you say 100% growth, what, 40, 50, Hitachi, etc., and stuff like that. Because of this particular move, could there be a valuation impact in that bucket, or not quite there also?
The switchgear or GIS portfolio is largely today with the MNC peers who are listed today. And MNC companies, as in Yusun is a large player, but they are not listed. Within the listed space, there will be some impact on valuations because of sentiments. No material impact in near term, but market will see increased competition and potential impact on margins on subsequent orders, which may come maybe later in fiscal 27 or early part of fiscal 28. So valuation may take a bit of knock, but anyway, we think there was a bit of exuberance on valuation side. These companies, especially if you look at GVT and others, are very fundamentally strongly placed in the market. Localization content, diverse portfolios. So I think all the three MNC listed peers, the portfolios are far more diverse. So there'll be no direct material big impact on earnings, but yes, sentiments and portfolios will factor in the discount.
To close out, and very quick answer perhaps, Renu, because running out of time, but if there is an impact on the prices, because you're saying there's no material impact on the business, on the fundamentals, is that going to be a buying opportunity in your opinion?
We'll have to wait and see to what extent the correction comes through. We definitely like CG Power, which has a much resilient portfolio and export story building up in terms of the numbers and valuation.
On that note, thanks so much for taking the time. Pleasure speaking with you as always.
Thank you.
Of course, you want to quickly talk about the technicals of this space, because quite a few of these stocks are widely tracked, and if there's a bit of a crack today, then what are the levels that would perhaps be on your radar?
Yeah, so I will agree with Parag bhai on one point that yes, I mean the run-up was sharp. And while fundamentally they looked, overstretched, even technically there were multiple heads of negative divergences, and you were seeing some cooling off. But primarily, the way the technical setup goes, trend is your friend, and until it's broken, you have to stay with it. Unless there is a major breakdown, for me the trend for these stocks remains positive. Some of these, if they come close to those support levels, and they're fairly deep now. So for example, for GVTND, it comes close to 4,400, 4,500. For Siemens at 3,385, 3,350 zones. Unless these supports aren't broken, I will remain constructive on these, and I'll take this as a buying on dips kind of an opportunity. So yeah, still remain constructive. Not now, maybe closer to those support levels.
Okay, let's go across to Sumit Sarkar joining in this morning with all the chatter from D Street. Sumit, what do you have on your radar?
Well, right. Well, firstly, it's Sona, BLW. Now, yesterday the stock was up nearly 7% in trade. Now, there's a buzz of a private equity investor doing its due diligence, and this is expected to complete by July 15th. And post that, dealers indicate that there could be a stake sale that could happen here. When it comes to Exide Industries, that stock was also up over 7% in trade. And there's a buzz of some joint venture tie-up that could happen when it comes to Exide Industries, and that is the reason why the stock was gaining. When it comes to Blue Jet Healthcare and FDC, there are buy flows on large HNI and PMS desk. Dealers are expecting a strong Q1 numbers coming in from both the counters. For Britannia, there are buy flows on the institutional desk. Both FI and DIs have been accumulating this counter in trade, and delivery volumes are also on the higher side. And when it comes to delivery, multiple dealing rooms are recommending a buy call to their clients, and they expect a 20% upside from the current levels when it comes to delivery. And lastly, when it comes to Dixon, there are buy flows on the large HNI desk. Dealers are indicating strong mobile phone volumes that could come in the first quarter. Now, this number is expected to be higher compared to what the street has been anticipating, and also compared to the fourth quarter of FY26. And DMart was part of a segment on July 1st where we did indicate that there are sell flows coming in on the back of expectations of weak Q1 numbers, and the store count was also weak, and overall numbers are also below compared to what the street has been anticipating.
Okay, Samit, thank you for that. All right, let's take a look at some of the other business updates we were talking about. I just, Parag bhai, we have had so many from the banking pack. We spoke about this yesterday, and I want to actually expand it to BFSI because you have Bajaj Finance, you have M&M Finance, also a good set of numbers that have come in. You have, a whole host of them. The housing finance pack has also started reporting. What is the overall picture you're getting, and which do you think are the stellar ones?
So basically, we discussed, right, that as the business from Bajaj Finance perspective, to grow 24% AUM on such a large base.
Yeah.
Of course, it was a consumer durable heavy quarter because it was a heavy summer. So that might have held them and given them a boost. But I would say that 24% growth on such a large base, and now AUM is 5.59 lakh crore. So that is very good, I think. Plus, asset quality will also remain stable because if asset quality trends would not have been better, they would not have grown so much. So I think Bajaj Finance is a good business update, and it is above expectation also. I think market was expecting 5.5 to 6% QOQ growth. They have delivered 7.5 on their standalone numbers if you remove Bajaj Housing numbers. Secondly, on housing finance part, I think all the companies whom I am talking to in housing finance side, be it, so Bajaj Housing Finance already reported business update. I have spoken about Aadhar earlier, Home First earlier, Canfin Home, in fact, Canfin Home kind of company also, the disbursement growth is looking like upwards of 25%. So that is another segment which is doing extremely well.
Interesting. Yep. Housing finance is doing well. Financials by and large, smaller banks are doing really well. The updates point towards a very strong quarter, arguably a fairly good year as well. So don't be surprised if that end of the market has some really good showing. You know, the other one, of course, Kush, actually, before I come to Kush, Parag bhai, there was a fair degree of debate around us, around Avenue Supermarts, right? And not a debate really, I think all three of us were in consensus, if you will, but brokerages are not. Some are constructive, some are not, as is the case mostly. But by and large, would you agree that the quarterly update was a bit sedate, a lot more off than expected, and could there be a corrective move therefore?
I think we discussed in the March quarter results also, and me and Alex were talking about that point, that there was stocking in the March. That's why March quarter was very good. So there was stocking, so now there was a little bit of destocking. So
we did speak about
it. So I remember correctly
before
that,
the war.
So
at the onset of the war.
So 15% growth and same store sales slightly disappointment, plus valuations are extremely high. So, and you compare it with Marico, again Marico I'm not saying is cheap, but I'm saying the parachute volume growth was 10%. Consolidated EBITDA growth looks like, from business update numbers, if you see, it is 18-19%. So sometimes when we talk about so many highly technological things, this hair oil like Zaho, value added hair oil, is about 20%, 25% margin product. That has grown in 20% levels, right? Yeah. So I would say that for Marico hair oil, for Bajaj Auto 3-wheelers, these are boring products, but they make huge amount of money.
Parachute is 25% of revenue, right? Approximately?
It should be more of revenues, but I would say that now they have various other categories also where they are scaling up big time, right? They have done 4 acquisitions, one after
Sorry,
the other.
I moved on to Marico.
No, that's fine. No, we were talking about per se Avenue and Marico, but yeah, the Vaho thing was, I think, a bit off this time, if I'm not wrong. But Parachute
from last 3 quarters, they are delivering about 20% growth in Vaho.
Okay, fine. So, well, watch out for Marico as well. Almost everybody is constructive here. The other interesting one was the flash that came at 8:30 on Adani Enterprises. They have upsized the QIP to $1.57 billion. Now, you know, a large QIP being upsized would mean that presumably there is high demand, and therefore watch out for this one as well. It's had a bit of an undercurrent the last few days, and while there is a discount, as would be the case to the QIP pricing, don't be surprised if there is a bit of a higher demand on this. Standard disclaimer, of course, the Adani Group owns NDTV and you're watching NDTV Profit, but there's no taking away the fact that the news flash could be constructive. In fact, Varsha is here to talk about this QIP details as well. Varsha, take it away.
Well, yes, as you rightly said, firstly, if they've launched QIP to raise up to 10,000 crore, which has an upsize also by $1.5 billion. Now, the issue prices are discount. You know, the indicative issue price is set at rupees 2,883 per share, which represents 9% discount to the Thursday's closing price. Now, where will these funds be used? Well, this is to expand, projects across group businesses, of course, and the part of money will also be used for a new PVC plant, and the funds will support concession fee payments for a road project. So a very big QIP when it comes to this counter, and all of the money will be, of course, used for the projects across the group businesses.
Okay, I actually want to get a quick view from Parag bhai on the whole QIP and how it will be seen.
See, I think most of the institutional investors, except barring few, might have missed this entire Adani Group rally, right? And so this is a good way to put your money when there is a QIP. You have one price where you can put big amount of money. So I am not surprised that the QIP size is increased because of higher demand, right? Because the move from 1850 when we discussed on the show, if you remember, 1850 to 3100 is so fast that even a person like me would not be able to catch it, because it is just moving so fast, right? So this is a good way to put your money into a company which is doing well, group which is doing well, and which is actually a proxy to India's growth story.
Yeah. All right. So much more to unpack. Parth is joining in this morning to tell us about all the business updates in the metal and mining stocks, breaking the sector-wise. Parth, what's on your list?
Yeah, sure. So we've got three interesting names, starting with Coal India. So the coal supplies to power plants saw a growth of 5.9% year on year to reach almost 51.5 metric tons in the month of June, and saw a growth of 1.2% year on year to reach almost 152 metric tons in the first quarter of FY27. Overall, the coal supplies saw an increase of 7.5% year on year in the month of June, and saw a growth of 3.5% year on year in the first quarter of FY27. Now, Coal India is targeting production of 815 metric tons and a supply of 850 metric tons in FY27. Moving on to Hindustan Zinc, the company achieved the highest ever first quarter mined metal production for the fifth year in a row now. The mined metal production reached a record 268 kilotons in the first quarter of FY27, growing 1% year on year, which was driven by better ore grades. And also the silver production was largely flat in the first quarter of FY27, which stood at 149 tons, and so it was basically flat, declining marginally by 0.4% year on year. And lastly, we have Sambhv Steel Tubes, which again recorded the highest ever sales volume in the first quarter of FY27, and this was thanks to the higher value-added products that the company was able to achieve sales of. The value-added product volumes grew 27% year on year to reach over 1 lakh tons, and the strong growth was seen in pre-galvanized coils and pipes, which jumped almost 50% year on year, and stainless steel coils as well, which saw a growth of 56% year on year. Overall, the sales volumes remained stable despite the disruptions that this sector was facing industry-wise as well. So these are the three biggest updates from the metals and mining sector.
On the metals space?
So metals, I have been saying that when dollar index was rising, it was a good time to buy. So JSW Steel and Hindalco are my favorites. And now that yesterday, non-farm payroll data was below the expectation.
Yeah.
So dollar index has now corrected from 101.25 to 100.60 actually. So that places metals in a good way.
Why is that?
So when dollar index corrects, generally metals like aluminium, zinc or gold or silver, they generally start doing well. They are actually you are a hedge completely against the dollar. So when dollar goes up, they all go down. When dollar goes down, they all go up. And the other point is that ArcelorMittal was up yesterday 6.5% and 3% further more in the aftermarket. So ArcelorMittal was up 9%. So I would expect some.
The trigger was only the dollar.
So basically, yeah, and globally, some little bit of hope that metal prices will go up, and they must have also corrected because of dollar index going up, right? Like in India, steel stocks.
So you're expecting metal stocks to look interesting today.
And my top bets are continue to remain too, because and this is not just a dollar index bet. This is a bet on what companies are doing.
Let me ask you, why not Hinzinc?
Basically, see, silver and zinc. Yeah, both are. So basically, if dollar index continues to fall, then definitely all this will become a very, very attractive bet. Right now, what I am sensing in JSW Steel is EBITDA, which is right now say around 40,000 crore, going to 70-80,000 crore without proportionate increase in net debt. That means entire increase of 30,000 crore of EBITDA will flow to market cap.
You made that point very well, Parag Bhai. I'm just asking, other people are also looking at silver, for example, and the argument that they've made. And I know that you're not positive on silver.
No, at this price, I'm not saying I'm negative.
Sure.
At this price, Africa, so much, 115 to 58, now I'm not so negative. In fact, you might see, this is my judgment and I have not taken a call on it, you might see some gold finances starting to do well now.
Okay.
It's like Muthuts of the world.
Even the banks.
Or banks like City Union Bank, which has 28% portfolio in gold loan. And that was the worry up till now because gold prices were falling.
Didn't they have tremendous loan growth as well, City Union Bank? I can't remember the
exact
exact
They have not
figure.
come out with business update.
No, they haven't.
But in my view, based on Tamil Nadu Mercantile Bank's business update, even City Union Bank will grow at about 20%.
Very quick view on the metal pack on the charts.
Yeah, so now a lot of them have come close to support levels. If this were to act as a trigger and if this were to turn as a trend, then the bias could turn positive. I'd perhaps wait a day or two just to confirm that yes, the uptrend is in place and the fall has indeed stopped. I will also keep JSW Steel and Hindalco obviously, but even Nalco 200 moving average respected for the last 5 days. Any kind of an uptick from here will actually see the stock head towards even 360 plus kind of levels. So keep that also on your radar. But like I said, I'll probably take a day or two through just to see whether, yes, the uptrend is in fact starting from these levels.
Okay, let's go across to Mahima very quickly. Focus on Lenskart. It's streamlining its business with the merger of 2 subsidiaries while also deepening the manufacturing push. Mahima, what's the latest?
Right, so Tamanna, as you rightly mentioned, right, 2 updates coming in from Lenskart. The first one is the merger of its subsidiaries. They've approved the merger of 2 subsidiaries with Lenskart Solution Limited. The first one is Dealskart Online Services and the second one is Lenskart iTech. What do both of these do? Dealskart is basically, it handles the operation and maintenance of the Lenskart's omni-channel stores, and Lenskart iTech operates in training centers for retail staff. Now, what will this, essentially do is that it will simplify the group structure. One, better capital allocation will take place, and of course it will provide operational synergies. The second one is a more important one because they've done a JV with China's Mingfeng Glassworld Limited. Now this incorporation of JV, the main objective behind this is that manufacturing of metal spectacle frames will happen now in India with this JV. This will strengthen the domestic manufacturing and lessen their dependence on getting it from China, and of course improve their supply chain efficiency as well. So these are 2 updates coming in from Lenskart.
Okay, so it's not just Lenskart really, which is in focus in the sort of consumption space. I just want to pull up this chart. So Morgan Stanley today has talked about their take on a whole host of companies in the consumption space. On Lenskart specifically, they have a target of 576 and they say the stock will rise over the next 30 days. They expect year-on-year EBITDA margins improvement in both markets. On Vishal Mega Mart, their view is that they're overweight with a target price of 146 rupees, will rise over the next 30 days. Expect strong continued top-line growth and double-digit momentum in SSSG. On Punjab National Bank, they are underweight, saying it will fall over the next 30 days. On Jubilant Food, their equal weight will fall over the next 30 days. But on HUL, they're saying it will rise over the next 30 days. Expect to surprise positively on top-line growth. On Tata Consumer, they're overweight and say the stock will rise over the next 45 days because India business growth momentum will sustain in Q1. And on Titan, they are overweight. They're saying it will rise over the next 30 days. Expected to report strong jewelry revenue growth in Q1. On Britannia, they expect a fall over the next 45 days because they're saying Q1 performance is expected to improve sequentially, but they don't seem too convinced. Just a take on some of these, Parag Bhai, in the entire consumption space, because we were talking about how FMCG seemed to be more resilient than expected during this entire geopolitical push.
Yeah, absolutely. And plus oil has also fallen. So that packaging cost, which was a big problem for them, will now ease.
It won't reflect in Q1 entirely though?
Yeah. No, it will not reflect. But going ahead, the trend is correct. And see, based on what Marico has declared on, like parachute kind of category has grown at double digit, 10%. I'll not be surprised if lever does a 6-7% volume growth, which will be positive, 9-10% revenue growth, which will be positive. So yes, and FMCG as actually the only problem in FMCG is the PEG ratio, right? That you are growing at 10, 12, 15% and your PE multiples are above 40, 45 times except for ITC. The only problem is that, and if July monsoon is not that great, then you will have an impact on rural facing FMCG companies.
Well, the first ticks are in and it looks like it's a good start. At this juncture, you have the benchmark that is trading with gains of about 1%. Let's see if it holds when the pre-open session ends. But a few names stand out, right? And I'm going to talk about my list first. We've got Marico, which was pointed out. It is a good set of numbers that they've talked about, 4.8%. Bajaj Finance also pretty robust in the AUM growth that they've reported. It looked good, but it's not moving too much. You have UCO Bank that had a pretty decent set of numbers with advances growing at over 20%. Okay, the stock is up about 1.2%. PNB was spoken about. Maybe its loan growth is not really at par with what the market is doing, the rest of the market, but it's growing about 9/10%. CSB had a pretty decent set of numbers as well. Loan growth quite robust, particularly in the gold loan portfolio. It's up. Pull up Adani Enterprises as well. The QIP announcement coming through. 2883, if I remember correctly, is the level that they've talked about, 1% up at this stage. Several more stocks, though. I'm pretty sure Tamanna has got her list that she's working on right now.
Yeah. I wanted to see what's happening with HCL Tech, actually. So HCL Tech in focus, they've inked a pact with a Fortune Global 50 firm for $1.14 billion, and the partnership is for an AI-led operating model. The deal will manage digital workplace networks, and the agreement is for 5.5 years, which is extendable for another 5 years, and it's an entirely net new business. I mean, we were talking about whether IT companies will continue their momentum, but deals like this are heartening, isn't it?
Absolutely. So I think that's what I said yesterday. I believe in what Mr. Nandan Nilekani or Mr. Chandra or HCL Tech management or Emphasis management are saying. I am not in so much of, I would say, pessimism like what market is showing, like 13 times for Infosys, 13 times for TCS, 16 times for HCL Tech, and most of them offering 5% dividend yields. I am not so negative.
Where in your pecking order is HCL Tech?
So it is right there.
Because right now what also needs to be seen, apart from what all of the people who run these companies are saying, is you'll have to keep an eye on new deals, AI integration in those deals, and what is actually happening, some of those tie-ups. And perceptionally, at least, HCL Tech seems to have been very fast. Whether it's the Sarvam tie-up, whether it's all of these deals coming in, they seem more nimble. Yeah, they seem more nimble.
Absolutely. So see, quarterly results or guidances for this year might be muted for sure. Infosys will report a good number just because of acquisitions they have done. Same is the case with, I think, Coforge.
In Q1 itself, you're saying?
Yeah, Q1 itself, the organic growth will be muted. It will be all acquisition-led growth. But I would say that the fact that FY27 is not good, or say bad, I would say, is there in the price. So now, as Tamanna said, now you have to look for incremental things. This year is a washout year. You have to forget about it, and that is there in the price.
What about Avenue Supermart? So we were having a conversation about this earlier today, the fact that the numbers are not necessarily very great. So it's just about 1% or so. It's not the crack that you would expect, right, Parag bhai?
Yeah, because yesterday, if you see, the stock price was down around 4%.
So in anticipation.
So for example, Bajaj Finance is not up because Bajaj Finance has gone up 10% in last 15 days. So
I want to see what's happening with Bank of Baroda. Let's quickly pull up Bank of Baroda. It cracked yesterday, but a lot of the brokerage notes today on Bank of Baroda, and I don't know if we have some of them, we can show it to you, are talking about how this is not a fundamental business operation issue. Right, they're saying that these are legacy issues which were sorted out, and then there's some provisioning which was in place as well. But I think what was startling for the markets yesterday was that 5,700 crore figure of settlement coming out of the blue.
But that's okay, I think.
It's the number which notwithstanding.
Anything which is one-off, and it is not very big compared to the size of the bank.
5,700 crore. एक क्वार्टर का प्रॉफिट है.
हाँ तो ठीक है ना, तो वो उससे थोड़ा सा गिर जाएगा स्टॉक. It's okay. But the other thing is in Bank of Baroda, like other business updates, QOQ loan book growth and deposit growth was also not that great. Like what we saw in Canara Bank or Bank of India, amongst the PSU banks, I'm saying, the business update was also not that strong.
Are you just wondering? Why is it that you think it is just about okay?
No, my point is, see, now most of the PSU banks' old problems, that they were continuous round of lapses on asset quality front, that is over. That
for a while now.
That phase is over. So this is one-off, right? So market will take it as one-off.
Okay.
But Parag bhai, 4% of the market capitalization. That's huge, right? So and that's what was wiped out yesterday.
So हो गया ना. तो कल
but it's from 2020.
थोड़ा सा.
This case is from 2020.
I know.
इतना पुराना नहीं है, which you're talking about the legacy case.
I'm saying yeah.
This is a 2020 case.
If it is not a recurring event.
I'm just saying this just to the point of legacy case. It's from 2020, which is after that perceptional cleanup of public sector banks was done.
But you are not going to see this again and again.
Okay.
So and 4% kal fall ho gaya hai, but I would like to again say I don't own by BOB, and my only point is that their business update was also not that strong.
Fair.
So it might correct a bit also, but for this reason it should not correct much.
By the way, the conversation we were having, guys, this morning, and I think we had a pretty decent conversation. The Ministry of Finance and what they've said about the 4 Chinese companies in the power capital goods space, right? Specifically the GIS category, and Renu Baid was pointing out that in the 765 kilowatt category. So that's having a bearing on the likes of CG Power. It's dropped as much as 5%, GT&D also 5%, Hitachi Energy dropping as much as 5%. So there's clearly a sentimental impact, even though Renu stipulated quite vociferously that on the earnings front, it may not have an immediate bearing on the stocks.
Yeah, but 5% shows that there is an immediate bearing, and maybe there could be more in store. I wonder if the transformer players, while they are flattish right now, could see some stick as the morning advances. But speaking of what brokerages have said, and IIFL's Renu Baid had said that about this space, but JP Morgan has come out with a note which is bullish on housing finance companies as asset quality improves, and there is a positive Q1 outlook. Mahima has more details. Mahima.
Right, so Neeraj, they've given different ratings, and firstly they've upgraded Bajaj Housing Finance from neutral to from underweight to neutral, and they've hiked the target price to 85 from 70 earlier. For PNB Housing, they've maintained overweight with a target price of 1150, which remains their top pick. And LIC Housing Finance, they've maintained neutral with a target price of 590. What they're saying is that this quarter is all about growth for all of these housing finance companies, placing Bajaj Housing on a positive catalyst watch, and they're expecting loan growth to be the key stock price driver in the upcoming Q1 results. NIMs are likely to contract on QOQ basis across the board, while overall AQ should remain benign. They expect Bajaj Housing loan growth guidance to beat expectations alongside the prudent cost of fund management this quarter. And lastly, they believe that the franchisee is best in class and warrants for a premium as well. So this is the overall view of what makes them bullish on the entire space. And they've of course upgraded Bajaj Housing Finance, but PNB remains the top pick.
Yeah, thanks a lot for that, Mahima. So housing finance is one, but just the way some of the stocks which have come out with those numbers have reacted is very, very interesting. So Khushbu, I want to pull up the consumption names for you and try and understand if you would trade either of them as the Nifty breaches the 24,300 mark very, very convincingly. Are you trading the Nifty, or do you want to trade the Nifty, or do you want to, for example, trade either Marico or Bajaj Finance? I'm using it as a consumer finance name, or some other.
I think it's time to book profits in some of these from a trading perspective.
Which one? Some of these meaning?
Bajaj Finance and Marico both. I'll tell you why. Marico had a stiff resistance at 845. Last 2 days se wo break kiya, and I was actually looking for a call on Marico. But with the kind of moves that it kept on making, and today with the positive uptick, I think near term mein risk reward ratio favorable nahi hoga. So you're better off booking profits, or as I suggest as an alternative, keep your trailing stop losses at about 850, 855. Bajaj Finance also, it's already run up quite a bit in the last month and a half from 865 levels, 1035 opening now. So the run up's already there. So you might want to at least book partially. Again, hold the rest of the quantity. Stop loss on this one about 990, 995, those that range. So on the whole, the trend for both these stocks is positive, just because of the run up that they've had in the recent past and the kind of opening that they're getting. Even if it's 1.5% or 2%, you're better off at least taking some money off the table on these names.
Okay, interesting call. Bajaj Housing Finance is doing well. I did want to ask Parag Bhai what he thinks, because if so memory serves, and I actually did look it up right now, but it was listed in September 2024. The issue price was 70 rupees per share. The stock is currently trading at 94 rupees. And in the first week, on the listing day itself, it went up by over 100%, right? It hit 150. So people that bought on that day and, God forbid, held for as long, they're still not seeing gains on their stock. So how should a long-term investor look at Bajaj Housing Finance?
No, I would say yesterday, by the way, it closed at 88. Today, it is, I don't know if it is opening at 94.
It's 90 plus.
Because the update has been very strong. I would say that time correction has happened. It's a great group, and it's a 25% compounding story. So I would recommend to an investor who is already holding that he should hold on.
Okay, just look at how the pre-open session has settled, and good spot I would say, by Somit Sarkar before we opened trade.
Yes.
CG Power, GE T&D, Hitachi Energy, all down in trade 5% each. I don't know if they're in circuits, but all of them at 5% in trade. PB Fintech seeing a bit of a downer. Union Bank of India, that's because of their updates, business updates have not been too exciting. Same for Avenue Supermart. We highlighted that as well for you. But it's the IT stocks which look like they're going to shine once again. The Nifty IT is closed nearly 2% up at the end of the pre-open session. Of course, 2 minutes to go, so we'll see how it actually opens up. HCL Technologies seems to be the winner over there, 4.5% up at the end of the pre-open session. Zensar Tech also looking exciting. Another set of companies that are responding to positive business updates. Bajaj Housing Finance, we spoke about that. That stock at 91 rupees, now 2.5% up. So is Mahindra and Mahindra Financial Services. So you are seeing some of these pairs out. Nalco is doing well, and I wonder if it's the impact of metals that we saw. So you have quite a few winners there. Anything that you're spotting which is looking exciting, Kush, after the pre-open session?
Quite a lot of names, and with the kind of gap up Nifty seeing, the breadth also at open looks very positive. So I will remain constructive on, the stocks that we've already discussed. SBI also opening with a mild uptick, but I think, Elevis Life Sciences is something that, you can still focus on. Massive volume accumulation on this one.
Please?
Alivis, ALIVUS.
Alivis, okay.
Alivis, my bad. We discussed this at opening as one of the calls. So yeah, this is something that you can still remain constructive on. 1190 to 1225 to reiterate the targets. 1120 stop loss.
Okay, so Parag Bhai did speak about the gold financiers, and it seems Muthoot is going to have a decent start to the morning. So pull up both Muthoot as well as Manappuram and see what they're doing. On the charts though, is that borne out?
Not Muthoot. A downtrend apparent. Manappuram is something that is positive and can be considered on the upside.
Okay. So you've given us your picks, but let me ask about HCL Tech once more because it's up about 4.5%. What's the final call?
Remain long. If you don't, you could still consider a long position. Stop losses near the 1075, 1060 zone.
Okay. Well, Kush Bora, Parag Thakkar, gentlemen, thank you so much for joining us today on India Market Open, and of course, see you back with the market action, the two of you, on Monday. But viewers, it's a great day. Sunshine, if not in the skies, then at least on the market. We'll have green on the screen. Tech will contribute. Banks might contribute. The question is, can we build on from there? I think that's the key thing. But here's how we are starting off. Nearly 0.25% in the green, about 150 odd points. Not a bad start at all. Market breadth is positive. Mid caps maybe a bit muted. I wonder if the small cap index is actually piling on some gains, about 0.5%. Banks are also relatively muted. It has to be IT, led by HCL Tech, I presume, which is really putting up a show. So 4% up yesterday, 2% up today. This is phenomenal. Okay, let's get the heat map up on the screen. HCL Tech will be top of the pile, I'm sure. Yes, it is. 4.74%. $1 billion deal win for in the AI space. So that proves that some of the IT companies are getting things right. Infosys 2.5%, TCS 2.5%. There is Hindalco bouncing back because the dollar index has come off and it's constructive for metals. Bajaj Finserv 1.7%, Tata Steel, BEL, HUL, surprise, no Bajaj Finance in the top 10. No Bajaj Finance in the top 15 either. That's quite something. Okay, Bajaj Finance is absolutely flat, but there is more green than red, which is actually a positive. What is not doing well? Tata Motors PV. Remember that updates weren't the strongest for JLR, and which is why I think a bit of a stick. Adani Enterprises 1.2% higher. The QIP upsized to $1.57 billion. Just about 1% lower for that one. M&M slightly lower. I think this is just a bit of profit booking here. Nothing to untoward there. But man, the eyes are locked on what HCL Tech is doing. Yes, Hindalco is participating meaningfully, and had it not been for HCL Tech's win, that would have been top of the pile. But well, great order win and duly showing on the stock.
Yeah. it has to be words will not matter as much as action, I think, for IT companies, because anyone can say anything. People are going to look at where the deal wins really are stacking up and what are the moves that are stacking up. Let's pull up the Nifty contributors very quickly. This Friday morning is looking like a good one, 0.5% up on the Nifty. HDFC Bank coming to the party in terms of contribution. HCL Tech is looking wonderful, but yeah, in terms of its contribution to the top pile, it's about 11 points there. Infosys 15 points there, but it's HDFC Bank and ICICI Bank which comes in. When you have that combo of tech and banking both firing, that's when you see a good morning. On the losing side, M&M, Adani Enterprises, because of that fundraise, NTPC, SBI also coming in. Let's look at what the broader indices are doing this morning, and the mid cap is about 0.25% up, not too bad. I think some of those gains also getting pared down. The small cap 250 is about 0.5% up. Advanced decline ratio is quite healthy. The sectoral heat map will show you IT once again at the top. Yes, there you go, about 2% up. Metals are following suit with the dollar index coming off because of those job data, which was not so unexciting job data, which has come in for June in the US markets. On the losing side, another down morning for the PSU Bank pack, but otherwise it's all looking good. Maybe you have Bank of Baroda also contributing to that one. Let's look at individual stocks and look and see what's happening there. It's business update season, so it's a lot about specifics. I'm going to start with Marico. M&M Finance, I'm surprised to see that downtick on Marico. Stellar business updates. Bajaj Finance mildly up in the green, and M&M Finance was a good set. PNB and Avenue Supermarts were both seen as disappointing. It's reflecting in the stock. Avenue Supermarts about 4% down. We gave a thumbs down to PNB as well. Another set of business updates from Bajaj Housing Finance, Equitas Small Finance Bank. Bajaj Housing is about 3% up. Let's look at what Ujjivan is doing, Union Bank is doing. These are the initial business updates which have come. Union Bank taking a knock, about 6% down after underwhelming Q1 business updates. Bank of Baroda, I want to pull up. It took a sharp dive during closing yesterday because of a 5,700 crore settlement they've had to do. The stock is 2% down today, even though a lot of brokerages coming out and saying this is a one-off, nothing to worry, but just the quantum of that settlement clearly weighing on the stock. HCL Tech, the star of the show, I'm just going to highlight it once more, 4% up, going strong. And the new procurement policy, NDTV Profit highlighted this for you right before the start of the morning. A number of Chinese companies have been allowed to sell equipment to India, pricing pressure for some of the Indian players, and look at what's happening with that stock. GVTND about 9% down, CG Power about 6% down, and Hitachi Energy also taking a dive this morning. So a tough morning for this pack, Alex.
Add to that list, in fact, Siemens also seeing cuts of close to 4%. Siemens Energy here. You have some of the transformer players that are also losing ground. So transformers and rectifiers trading with smaller cuts, but still down about 2% at this point. And in the PSU banking pack, actually, there are some real accidents in trade today. But we'll talk about some of those individual counters in more detail while we do, and we will over the course of the morning. But let me introduce our guest who's joining us in studio. He's Nirav Sheth, who is the Chief Executive Officer, Institutional Equities at MK Global Financial Services. Nirav, thanks so much for taking the time.
Thank you.
Pleasure to have you in studio. I love the jacket, by the way.
Me part too. Of my Friday dressing. Thank you so much.
No, but so the market's looking as spiffy as you are today.
Yeah, so I'm very constructive. I think what was holding us back was essentially the energy prices and the war and stuff like that. I don't know whether you followed the leading economic indicators, right? So we are sort of a Teflon economy. The CV sales, credit growth rate, I think, is the highest ever in Modi era. Yeah. Right? That is the biggest leading indicator in terms of what is happening, and it's surprising me. So the auto numbers, the two-wheeler numbers, so we are doing well, and the market responds to that. Only thing that keeps me worried is that I think by this time the rupee should have gone back to 90 to 93 levels, and looking at inflows of $50-60 billion, and yet yesterday I think rupee fell. I'm hoping that's more of a noise, but outside that, it's good time.
The argument has been that the RBI took certain measures to limit or mitigate the fall, it created that book, which is essentially going to require some time to be unwound, right?
Of course.
So on the derivative side, there's going to be some action that will take place that will keep it under pressure.
I'm not too worried if you're reflecting to the fact that, they've got a short position of about $106 billion over the next 2 years or something like that. I'm not too worried about that. I think that we are in a world that we can't necessarily comprehend, right? So we are talking about, we've done fairly okay on the macroeconomic side, right? And we have got this incessant outflows on the equities, which is sort of hampering our currency. Look at Japan. That's a current account surplus. South Korea, current account surplus, right? And yet their currencies are down as much as Indian currency is down. We are still running. We've structurally run a current account deficit, right? So, and that worries me because a 10% rupee depreciation is eventually 10% inflation.
Sure.
It's just a question of time. Everything gets rebased, right? Import tariffs, your import parity prices and stuff like that. So it's not direct, it's indirect inflation. And that eventually impacts my interest rates, my required rate of return and stuff like that. Let's see. You're in a world where, you don't have answers to everything else. But if I focus on rupee, I believe that countries eventually become rich if they have a strong currency. And we need to push in that direction. And therefore, I think the regulatory authorities, the political establishment needs to be cognizant of the fact that, you need to pursue a strong rupee policy. That is my view. That is when you're going to become rich 10 years, 15 years down the line.
Even at a time, sorry, I'll just add one more question on that point. Even at a time when we're talking about the exporters in the manufacturing space and increasingly in defense, in capital goods, in various other pockets, you want Indian companies now to manufacture for the world. You're saying make in India, right? Even IT, the one ray of hope at this point is that, okay, they get some AI business, but also the export revenue comes through and the dollar appreciation or rupee depreciation aids them.
Well, I think, rupee has lost half of its value in the last 10 years, right? And in the same space, IT margins are down from what they're in 2014, right? So I think it's a policy if you believe that, depreciation of the currency is going to help your exports. You have to look at slightly higher valuation products. I don't think, for example, pharma was never a product of that, right? It was never a product of the fact that, your rupee is going to be lower. And now you are 20 years into this, right? Now if you are saying that, and for example, let's argue that you're doing $30 billion of now Apple phone exports, right? That has not happened because of rupee depreciation. That has happened because you've taken the right set of policy measures. That is what you want to do.
Good point.
That's true. Okay. Nirav, the one interesting thing that's happening the last couple of months, if you will, is that there is now an openness to have the right kind of manufacturing partners independent of the country, and which is why you're seeing some approvals, 1 or 2 approvals being given to large JV policies or attempts with a Chinese firm. This morning, there is this allowance presumably given to Chinese companies in the T&D space, and which is why I think the GE, Varroa, T&D, Hitachis, etc. are correcting. One, what does this tell you, part as a policy measure? And two, what's the impact on the multiples of some of these MNC companies which literally had this stranglehold on high quality performance, and that's why they traded at 80, 90, 100 P multiples? Does that come off?
So, do you need access to Chinese technology? Unequivocally, yes. Right? So, if you are talking about battery systems, for example, 83% market share. If you are talking renewables, again, 90% market share. Rare earth, you have nothing worth speaking about, right? So, you need that. Now, the question is that what is the kind of structure you want to create? Do you want to have majority ownership with them? Probably not. Are they okay to work with a minority partnership? We've seen in case of Dixon that a lot of the companies are willing to work with that. So, you need to have a gated approach in terms of how to move forward. But that is the way forward. Anything that trades at 80, 90 P, let me tell you, will have problems. It's a question of time. Unless and until you can see 40% for the next 8 or 9 years. And in this world, if anyone comes and tells me that you can see 10 years out, I'll be very, very cautious about that. You can't. You are in AI is transformational. I've said this again and again. We have no idea what will happen in the next 10 years, right? And therefore, to say that longevity, I don't buy that.
Okay. So would the safe choice be just to stay away from IT till we figure things out?
despite great valuations right now?
110%.
Stay away.
If I was a fund manager, I'll run a zero weight. I'm very clear.
Zero weight, huh?
Zero weight. Yeah. I think some of them do. I just read yesterday that Helios runs zero weight IT for the last 1.5, 2 years. Brilliant call. So, I mean, are we going to say that, we're not talking about the fact that, they'll disappear in the next 10 years. Do we even discuss print media? Right? The circulation is still going up. Are we discussing ZTV? Right? And Netflix is just 5 million. So I've been through this process where, 15 years back we talk about India is a different country, vernacular languages, Hindi subscription, people don't know English. Kuch nahi hua. And the companies have grown. Maybe they are flattish in terms of earnings. Your sector gets disrupted. You have no idea. And this is different. This is a different level of disruption. I've read some of the books. It's scary.
So when Alex Karp, the Palantir CEO, comes and says that CEOs are livid with what's happening with AI adoption right now, and it's a token tax, etc., and you see this kind of buoyancy, the questions about the AI trade, you think those are temporary or teething troubles for disruption?
Any technology will have an S-curve, right? So I'm again repeating, I'm differentiating between what is an underlying technology and what are the valuations. We can debate about the valuation. Is SpaceX worth $2 trillion? We can debate that. There's no doubt about it. I'm talking about how profound is the technology. We have never seen anything that is inductive logic. Software, all technology was always deductive. X is equal to Y is equal to Z, therefore X is equal to Z. This is nothing. You don't know how it works, right? So I am a avid user of Claude, and I meet about 8-10 companies a week, right? And my usual process was I call up the associates, I'm building this company, give me a rundown. All I do is I just go to the Claude, I get global view, Indian view, financials, better than what any top ranking associated CA ranker will give it to me.
Are you going to hire less people? Are you going to hire less people as a result?
Yeah, and is there a disruption for the sell side business, Nirav? The buy side will probably think that why do I need sell side research?
I am certainly sure that.
Sorry, you are sell side, that's what I'm asking you.
No. So I'm saying there is to be disruption. So I've got a structure where I've got one lead analyst and 2 associates, and I'm telling my team that now we move to 2 leads and 1 associate. So productivity will multifold. That is the way I'm looking at it. Although there is not so much of buy-in from the team right now, but I have no doubts we are moving towards that.
Wow.
I have no doubts about it. As a practical user.
Yeah, no, it's a great insight because this is one question we ask everyone: what is it doing to your business, and what are you experiencing? Because it's that first-hand insight which helps. Coming back to the markets, we seem to have shrugged off a really bad period for now. Do you think it's reflective in the price already? For Indian markets, the geopolitical headwinds, tariffs is no longer a major concern. Monsoon was a bit of a concern, but seems like we are maybe catching up. What should the reflection be on the screen right now of what we're actually experiencing?
So my sense is that you're in a fairly okay space. I am again not of the view that large caps are terribly cheap and therefore you should buy it, because if I purely look at the earnings growth rate of the larger sectors, IT, my view. If you look at banking, it's growing at mid-teens or lower mid-teens, right? So I think we'll end up getting required rate of return, which is 12 or 13%, right? Now the question is whether the markets will get re-rated, depends upon what happens to the interest rates and therefore what happens to oil. And I'm bearish on oil. So there's a different sector altogether. But I think that over the next few years, the construct of the Nifty has to change. You need to have stocks like Eternal, which will grow at 30% for the next 4 or 5 years. And you'll have a lot of these platform companies making a gateway over there. You'll have a lot of infrastructure companies. Adani Enterprise, for example. I think there's some blowout subscription and stuff like that. Large companies growing in high teens growth rate is what we want, which unfortunately not the case, right? FMCG companies are struggling to go in high single digits, and they're still trading at 50-60p. So that's a no-go area.
So should one just ignore, Nirav, as an investor, you don't have Nifty futures in your portfolio, right? Ignore what the Nifty is doing or will do until the composition changes. A bottom-up portfolio, well constructed, could make money, right?
110%, it will make money, and I'm very constructive that it could be high double digits.
So let's say you are a fund manager now, because you said if you're a fund manager, you're at zero weightage IT. If you were a fund manager, what would be your top 3 weightages right now?
So I'll tell you the way I look at it and what I tell my clients. I'll have, I'll run a barbell strategy. On one side, I'll pick up sectors where I believe can grow at 15-20% for the next 5-7 years, renewables, electrification, platform companies, right? Where I have some comfort with the unit economics. The business model not completely evolved. Meesho, Paytm, we discuss this again and again. So these are high growth. There is no doubt about it. The question is whether profits will come or not, right? On another segment of the barbell, I'll say that I'll look at companies that are turning around. They're very cheap. You can have microfinance companies. Something like GE Shipping trading at 10% free cash flow yield. So there are enough ideas where you know that you can't lose money. You're not very sure whether you can make serious money or not. What can cause the re-rating? In between, I have to play with the large scales. I'll figure out, I don't like Reliance, I like Adani Enterprise, I don't like ICICI, I like HDFC Bank. That's a matter of debate. But to me, the alphas will be created from these two extreme parts.
Where is the space for utilities and those companies that will give you annuity?
Bullish. So I think that over a period of time, you will have a replica of what's happening abroad. So are we going to see multiple gigawatts of data center in the country? Unequivocally, yes. There is no doubt about it, right? So, and then you have to figure out, whether they are going to give 16% IRR, 15% IRR, and there'll be a lot of the supply chains that will benefit from this. Certainly, yes, including power. So, let me tell you, this year, that is calendar year 2025, for the first time ever, power generated from renewables globally was higher than what generated from the thermal.
Oh,
26%.
That's insane.
Great insight.
It has taken over.
Yeah.
Wow.
Where are we in that whole game? Or we need to get there?
We have the capacity. We have the capacity, but generation is not yet there. Right?
No, so I'll tell you why I'm asking. On this whole battery energy storage play and solar power play, there is also quite a divided view that have these companies now become overvalued without actually showing what they're doing? Is there a bit of a bubble blowing up, or is this the future that you need to bet on? Just wondering where you are on that.
No, it's a future that you want to bet on. So I think at least if you look at the hardware part, which is let's say solar cells, and then we have wafers and all that. So there's a very, very clear, you've got this ALMM model, which talks about the fact that, you can't import China, you have to manufacture, you have to use solar cells, and then you have to use wafers and all. So there are regulatory profits guaranteed, assuming that you can execute.
But that could change.
That could change after 5 years.
We've seen it with power equipment producers this morning.
Yeah, it can change.
It can get tweaked down, is what I'm saying.
It should get tweaked down. I can't give you 25% IRR for a long time in the future, but the bet that I am willing to take is that by that time, the cost of generating power, which is BESS or battery energy system plus renewable, today is about 6.5. It will go to 4.5. Thermal is at 6, and then it takes off on its own, like it has happened globally.
Yeah.
But you need to have the setup in the country.
Interesting.
So these are the ideas that I'm talking about that should be on the right side of the curve.
So actually, therefore, transmission is incredibly important.
Of course.
Your top favorite ideas before we let you go.
Paytm, it will be a Nifty stock.
What are you saying? Yeah?
Yeah, 2-3 years. I think, so it's incredibly cheap. The way I look at is that, you got Paytm, you got PhonePe, and you got Google. Just remove Google, right? Because they are not there in the offline space. So broadly, when I look at platform companies, I'd like companies that will have very high engagement, which is monthly transacting users, and then obviously don't have too much of competition, right? So very strong. Secondly, my sense is that, and not that VSS has told me, but when you look at his interviews and you see it, he is all in AI. And he's gone on record saying that cryptocurrency was a great tech, but he says I never believed in it, and he says AI, I'm all in. So let's say where it goes out, and it's a very well established model. Secondly, I certainly believe it has to happen. MDR on UPI has to come. It is free when you want to penetrate to a certain level, right? So, and it happens with the stock, so there is an optional value to that. And Paytm is because we cover it, but I would be very bullish on Meesho. I don't know that company very well, but if you are transacting with some 250 million customers in India, you can't displace that edge. Very, very difficult.
Interesting stories. Nirav, always great to have you come in and share your thoughts. What a fantastic chat.
Yeah, seriously, keep on coming to the studio more
Yeah,
often,
good
whenever
one.
you can.
Thank you. Pleasure to be here.
It's a pleasure to have you.
Neerav Ashar there. All right, we continue the great conversations this morning on NDTV Profit. Aditya Suresh, Managing Director, Head of India Research at Macquarie Capital with us this morning. Aditya, welcome and great to have you on. Let's just start with an overview before I get to, what you're thinking in your recent notes, etc., of whether the mood and the view on India is now ripe for a change. Brent prices have come off, geopolitical tensions have come off, trade concerns are also not up front and center. And from at least the initial business updates, it seems like a large part of India Inc. has managed this period of turmoil in Q1 fairly decently.
Tamanna, great. Thanks for having me on the show. Look, so I think conditions have clearly improved compared to a couple of months back, at least on the headline, the optics. But just zooming out, has things changed materially enough from a broader aggregate sense? That picture has not really changed too much, right? So when you think about India as a market and compare that versus broader emerging markets, the conditions for, say, foreign investors to meaningfully kind of come back to India is still absent, right? It goes back to the comments we made previously on the lack of a growth premium, the ROE premiums, but valuations are still expensive, right? So I think those aggregate conditions have not really changed enough to support foreign flows coming back. I think what is kind of starting to kind of come up in our conversations, though, is that you are seeing this diversification theme, right? And so when you think about India's beta to whether it be technology or the US as a market, etc., it's fairly low. So it's been a good diversifier in that context. And so to the extent that this entire kind of AI trade is going to cool, again, jury's still out on this. But to the extent that that's the case, and you all look at it like diversification flows, maybe we see some flows in the back of that theme. But aggregate earnings growth, return on equity, the market multiple, that's not really changed too much. Having said that, I think the bottom-up story, as we discussed last time, Tamanna, is we're finding far more kind of ideas which are interesting on the bottom-up, which is kind of where we're spending a lot of time.
What are some of those ideas that you are finding interesting, and does that include, say, your usual favorites, your large private banks, your large IT companies, if at all?
So we have this thing called Super Sixes. That's kind of our best ideas product. 6 ideas core, 6 ideas mid-cap, 6 ideas kind of tactical. Within that, there is no specific sector tilts which I can give you or point to. So for example, in the core list, we have Bharti in there. Incrementally, I'm getting more positive on the outlook there for Bharti. We do have names like Titan, JSW Steel, HDFC Bank is in there, so it does kind of fit that large private bank kind of theme. We've introduced TVS, we've taken out M&M. So these type of names, but that's in the core category. But there's no real commonality within those ideas, right? Similarly, when I look at my tactical list or my mid-cap list, there is no sector tilt or one overriding kind of theme which I can point to. It's still very bottom-up.
So the other thing that the jury's still out on, and very good morning to you, Aditya. We're speaking on a morning when HCL Tech is buzzing. Over the course of yesterday and today, the IT index as a whole is recouping some of the losses from earlier in the year. And a lot of people are uncertain about whether to sit on this side of the fence or that, in that they've gotten bludgeoned so badly that valuations, you can't say, are unattractive, but at the same time, can you call the transition as it's happening right now well on its way, or is there a lot of ground to cover?
I think that sector is still in flux, right? And I think the jury, as you say, is still out there in terms of how this shakes up. What I would tell you and point to is a few aspects of, right, is that when I actually look at the aggregate level of expectations, whether it be on revenue and EPS for the IT sector, oddly enough, I'm actually observing some stabilization in estimates. There were cuts, stabilization, maybe mild increases also kind of coming through. The EPS growth, which is kind of built in for, let's say, MSCI India IT, is roughly about 9-10%. There is a support factor in terms of free cash flows, and the free cash flow yield is attractive. The dividend yield is looking attractive. So these aspects do lend support, at least in terms of a bottom. But are we kind of in the camp of kind of calling a fairly meaningful kind of re-rating for the space? I think the jury's still out, quite candidly.
Okay. Aditya, good morning, Neeraj here. The one interesting thing or the change that we've seen in a matter of 4 months is this slight skepticism or maybe a fair degree of skepticism about what autos could do, considering that crude prices were high and considering the base effect will wean away from November. The GST base effect will wean away from the month of November, income tax, GST, etc. Versus what's happening right now, wherein suddenly there is some optimism around what autos will do because of policy push and because of just the economy coming back in a bit of a rush. What's your sense now from here on until the next 12 months? Are autos a good space to be in because metal prices have also cooled off, etc., etc.? Or would you be skeptical here?
Good morning. We are selective. So we were kind of, auto as a sector was far more clear as a place to kind of allocate maybe 18 months back, perhaps. Today, more selective. There are two names kind of in our kind of best ideas list. One is TVS, and the second is more a tactical idea, but that's Hyundai. And then the third was more in the kind of mid-cap auto components kind of space. That's Minda. But look, so I think we are selective. I would tell you that what's already in expectations for auto and components in an aggregate sense is that you have revenue growth expectations set at about, say, 9-10% on a, say, 2-year CAGR basis. We're feeling that's okay in terms of where expectations are at. But there's a fairly sharp margin expansion story which is already kind of built in. So when you look at aggregate expectations, the earnings growth kind of for MSCI India Autos is looking more like, say, north of 20%, right? So 10% revenue growth, but 20% kind of EPS growth in an aggregate sense. I do think that comment is going to be tested, in particular in fiscal 27. Fiscal 28, I think we are still kind of overriding, and we'll see how it kind of shakes up. But for fiscal 27, I still think that there is margin risk on the downside to first work through. And there is a lot of margin optimism already baked into estimates. So in that context, Neeraj, yes, we'll be highly selective. For example, we like a name like TVS. So in TVS, what we are kind of, at least our analysts are speaking about, is revenue growth of about, say, 15%. Margin down this year, but it kind of recovers. We're back in that kind of improvement trajectory. There's still upside to where kind of margins do settle at. ROE is close to about 30%. So that's one such name where we're kind of positive on, but selective.
Selective, okay. Could the same argument be in financials? I mean, credit growth at 18% is stellar, right? By any stretch of imagination, whatever state the economy may be in. And I think the updates that have come out thus far, we don't know the net interest margins, of course, there could be some question marks there. But the updates thus far on BFSI have been rock solid by and large. Are you constructive that bucket and banks over NBFCs or not quite?
So our financials analyst, he's positive on the larger private banks. He remains positive in that space. Two names where he's positive on is HDFC and then Axis. With HDFC, it's kind of the similar arguments, right? In that the credit growth is strong. There is a view that deposit growth kind of does improve in this year. And so effectively what we're looking at is HDFC as a value stock, right? At least on a core basis, trading at about 12 times earnings, 1.5 times price to book. With that improvement in credit growth kind of in favor, improvement deposit growth, also positive kind of catalyst. But again, Neeraj, I think it's quite selective. So we do have quite a few NBFCs where we're negative on, a few we're positive on. It's not a kind of overall kind of comment where financial as a category we're bullish. Certain stocks in the larger private banks we're more bullish than some of the others.
Okay. So I don't know if you have a view on this. The update this morning on the power capital goods space was that the Ministry of Finance has come in and said that it's open to Chinese players, and it's named 4, coming in and selling their products, particularly in the GIS category. And of course, the interpretation of that is that they're going to have to do it from here. They're going to have to manufacture here. But it is negative for the space, and they're all seeing cracks across the board. Valuations aren't necessarily cheap. So do you have a view on that space?
So our analysts recently kind of published a fairly constructive, positive view in that sector. This risk was not a part of that kind of initiation, though. So I think we'll see kind of how estimates do shake up. But in general, right? So we were still able to get our head around where headline valuations are at. Yes, optically high, but when we were kind of looking at whether it be the growth, on the top line, the optionality, the thematics, plus the scope for kind of margin expansion, we actually end up being positive on all these names, right? So, Alex, I think this is work in progress. So we need to kind of think about kind of what this news flow on the kind of Chinese equipment players coming into India would mean. But to the extent that's going to mean that we need to work with much slower revenue growth, then I think, these multiples will be tested. But the theme in itself for power equipment and even like transmission as a theme, we're really constructive on that theme.
Aditya, I'm just looking at your list, and if you allow me, I just want to understand the thesis behind some of them. Lenskart, I want to start with, because it's a new addition to your Rising Stars list. And this is something which, it's an interesting story, because when the stock listed, there was some, I would say, questions around it. How many people will wear glasses again and again? I keep losing mine, so I'm not in that sample size. But this is now a new addition in your Rising Stars list. Why do you think a model like this works, if you're comfortable talking about this specifically or the space?
Yeah, look, I think in general, Tamanna, when you look at that Rising Stars list, or even that core kind of category, in general, across our kind of coverage, what we're looking for is, let's say, revenue growth above, say, 15%, right? On a, say, 2-3 year kind of CAGR basis, accompanied by margin expansion and ROIC expansion, right? So those three kind of broad kind of variables we're looking at. Lenskart ticks the boxes on all three. Plus, when I kind of look at that list again, in terms of the revenue growth expectations, at least which our analyst is forecasting, it's in the high 20s. Plus, typically what you'll find with these high 20 kind of revenue growth outlooks is that there's some form of margin dilution, which is kind of in there. But at least our analysts ended up being more positive on operating leverage in the business kind of kicking in. So when you look at the EPS growth outlook, which he has forecast, it's fairly meaningful. It's more like a tripling of EPS on a, say 3-year basis. Those are some of the reasons, Tamanna, why we kind of ended up being positive.
I do want to ask, and so that is your Rising Stars list, and I like the tagging of this, I must confess, Aditya. But there are some exclusions as well, stocks that have not made the cut or have been excluded for a variety of reasons, I would imagine. And that list has some pretty well-known names. Amber Enterprises is there, Coal India is there, Reliance Industries, Make My Trip. Can you talk about some of the reasons why they've been removed from the list of potentials?
This wasn't a list of potentials as much as this is the list, right? So we have it's 18 ideas, so six ideas in these three buckets. So if I'm introducing an idea, we've got to take out an idea, right? And this is broadly within the context of Macquarie's coverage of, let's say, 150, 160 stocks. So this is the 18, which kind of is our bottom-up kind of ideas. Now, just to give you some context, Make My Trip, to be quite candid, is a stock which I like a lot. I like that OTA space in general quite a bit. I'm the analyst covering Make My Trip as well. Like the fundamentals, like the outlook, but the share price has been, it's not working. The stock price CC is not working. This is an entire kind of overhang on what AI does to these OTAs, which has been in that space. So in that context, it's more a reflection that the thesis is not working rather than being not liking a fundamental outlook. The swap was Lenskart in Make My Trip out. With Amber, it is more about, again, making space for a name which we liked a little bit more, and that was in Phoenix Mills. And so Phoenix Mills, at least our analyst is really optimistic on whether it be expansion of the leasable kind of area rentals, the office kind of portfolio kind of expanding. So a lot of growth. There is a deleveraging kind of story which is at play, ROIC expansion story at play. So we ended up being a bit more optimistic on the outlook of Phoenix. And so to make space for that, we kind of took out Amber. Coal India, Reliance, those are more on the tactical kind of list. So those do keep changing. That's more nimble and fluid. Yeah, but at least with Reliance, the idea was that we'll see kind of how the geo listing kind of plays out. Because of the nature of the transaction, at least one of the themes we're thinking about is perhaps there's a bit of overhang in the headstock to kind of fund maybe a potential kind of participation in geo. We'll see. But in general, Reliance's stock which were outperformed later on. We think that earnings momentum, at least in the short term, should pick up. But I think there's a bit of a plausible overhang here to work through in the next few quarters into the Jio IPO. In contrast, something like a Bharti Airtel is a really strong idea on the positive side, and that's kind of where I'll be expressing up. So my positivity on Jio would be expressed through Bharti Airtel, because I do think that into or around the Jio listing, the likelihood of better earnings momentum for the telecom sector through higher tariffs. I think the best way to play that is through Bharti, which is part of our kind of our core category.
I noticed, Aditya, you have Amber out and Dixon in. Just a little more on that and how you're seeing that entire space.
Dixon was more in that tactical category, Tamanna, rather than being in that kind of So we do like Dixon as a compounder, but the reason why we kind of included it in more in the tactical category at this point of time was more, at least our analyst is a bit more optimistic on whether the PLI, the second scheme being introduced or formalized. Also, this Vivo JV being formalized. So it's more a tactical kind of positive on those two events. I mean, I think there is still a dynamic in the background kind of work through in terms of what kind of higher memory price mean for kind of smartphones, all these things. So I think that's a overhang. But the specific reason for inclusion here was more in these two catalysts.
Okay. Aditya, the other question is, broadly, the last 12 odd months that we've spoken, you've not been out and out constructive on Indian markets, and that call has worked out beautifully. Now, the macro being in favor, the economy not getting impacted so badly in the month of April, May, June, and even if it would have been, people would probably give it a benefit of doubt that there was an event that has happened, so maybe there was a temporary setback, and now things will move back. What would it take for you to be out and out constructive on Indian markets? Would it be a reversal of the AI trade? Would it be, say, a surprise performance on the economic front and therefore earnings front from India, or something else?
I think, again, the aggregate comment has to be distant from the bottom-up comment, right? So like even with a not constructive top-down, when you look at, like, let's say the top 200 stocks, etc., there's a massive dispersion of stock price performance, right? We've had some fairly large absolute winners in there, right? So despite a tough backdrop, we've had quite a few kind of outsized winners. So it's not to say that there is no performance or alpha to kind of generate. It's just that the aggregate sense, when you're kind of comparing India versus Korea versus Taiwan, and these type of things, it still does not stand out. Now, in that context, if you're looking at like a country kind of allocation, and let's say the lens of a foreign investor looking at kind of different choices in different markets, I think that still has some time to go, right? Because the broader theme is that you still have a market which is trading at 18 times 2-year forward earnings, which is a substantial premium to broader emerging markets, which is about 10 times. Within that, typically we have a high premium defended by much stronger earnings growth, much stronger return on equity, so both growth and quality. At a point of time today, what we have is that our growth outlook is good, and we're feeling comfortable with kind of where expectations are broadly at. So about 14-15%. But the challenge is that in broader emerging markets, we're looking at 25% earnings growth. And if you look at like zooming in for this year, fiscal 27, that growth is much, much stronger. And if you look at markets like Korea and Taiwan, again, the growth outlook is much stronger than that 25%. And similarly, on the return on equity, the quality dimension, the outlook for emerging markets is above where India is at. Typically, it's been at a meaningful discount to where India is at. So if I had to kind of put the lens of a foreign kind of investor on and think about if foreign flows into India is a marginal driver of meaningful performance for the index at the index level, I don't think the conditions are there as yet, right? And so it really does require a fairly meaningful unwinding of expectations around this entire kind of tech semiconductor kind of story for this India kind of for us to see more meaningful allocations to India. There could be some nibbling here at the margin, because I think there is at the margin this entire theme of is there kind of an overheating, overvaluation that the semiconductor AI space is in conversation. India's beta to that theme has been, let's say, 0.4 as a market since 2020, right? And so maybe there's a bit of that risk diversification flows which we see. But yeah, in terms of fundamentals, for me to be far more constructive, I don't think we're there as yet.
Hey, Aditya, thank you for that detailed conversation and talking about all of your, investment ideas, of course, the firm's investment ideas in detail. That was really great. Aditya Suresh of Macquarie Capital joining in and talking about how he's looking at the markets right now. All right, company in focus, BLS E-Services has completed a major acquisition of Atyati Tech, worth 157 crores. We will have Shikhar Agarwal, the company's chairman, on the show in just a bit to talk about it, but just me joining in to set up that conversation.
Well, Tamanna, thank you for that. As rightly said, the company has recently acquired Atyati Tech for rupees 157 crore rupees, and management sees a lot of synergies with this particular business. When they look at the overall driven, they expect that the overall AI-related banking solution business to grow well for the company, and also they state that the current synergies of the company would help them establish the last-mile banking solutions as well. Now, well, about Atyati Tech, it's an AI-driven banking solution company currently serving over 35 odd clients, and it's based out of Bangalore. Now, a bit to give you context about the company, FY26 revenue of the company saw a double-digit uptick, and so as the EBITDA saw a double-digit uptick, but the margins are something to watch out for, given they saw a slight dip in FY26. Now, while the management does state that they remain on track to achieve the goal of growing 20 to 25% ahead, but it's a wait and watch how this turns out. From the management, I would like to understand, after the recent run-up of the overall revenue, how do they expect that going forward? And second, the visa revenue sees an uptick of 11%, and how does that grow in the coming years?
Okay, Shikhar Agarwal joining in, chairman of BLS E-Services. Shikhar, very good morning to you. Thank you for speaking with us. Tell us about Atyati Tech. Why the acquisition? What does it add?
So, as you know, BLS E-Services, last year did a revenue of around 1,100 crores and a profitability of 70 crores. And we have acquired a few companies over the last few years. Now, this acquisition of Atyati, which is a Bangalore-based AI-powered banking technology company, which is in the business of providing banking software to various banks and also in the BC business. They have around 25,000 banking correspondents across India and doing a revenue of around 300 crores, including the technology revenue. And they are doing an EBITDA of 20 crores. So definitely there are a lot of synergies to our existing network of 49,000 BCs that BLS E-Services has. There will be synergies, cross-utilization, our expenses will come down. So definitely this will lead to an increase in revenue and profitability in the company. At the same time, BLS E-Services is majorly into PSU banks, the revenue is coming, whereas Atyati is majorly into other than SBI. So we will get a big entry into other public sector and private sector banks within India.
Okay. How would the exposure to SBI help you going further? Shikhar, if you can just elaborate on that point.
See, BLS E-Services is currently, running 49,000 BCs across India, out of which around 25,000 of SBIs. And this Atyati Technologies, that the company that we've acquired, is doing non-SBI BCs. So this helps us in expansion into non-SBI, other banks, BCs across India. We have our existing network of 49,000 centers. If you add this, then there is economies of scale. We have offices existing in those cities across India. So definitely this will lead to reduction in expenses and increase in profitability of the company.
How revenue accretive will this be? Are there any numbers that you can share in terms of revenue and margin inputs coming in from Atyati Tech or opening up this space?
Yes. So I think most of the acquisitions, all of the acquisitions, in fact, that we have done are revenue accretive, EPS accretive from day one. Atyati Technology will add around 300 crores of revenue to the top line of BLS E-Services, as well as add around 20 crores to the bottom line of BLS E-Services, which is a start. Most of the acquisitions that we do is because we have synergies. We will be trying to cross-sell our existing services in the centers of Atyati Technology. That will will lead to an increase in profitability of that company. We will synergize the expenses, etc. So definitely, I feel BLS e-services, if you see the growth trajectory, March 2024, till today, we have grown at more than 50% year on year in terms of profitability. So with this acquisition also, we see the strong, steady growth happening in BLS e-services.
Shikhar, good morning, Neeraj here. Quick question. You've had, by virtue of what you're doing right now with this or some of the others, you've had a fairly decent last 3 years growth rate, right? In fact, FY26 was, in some sense, a banner year for growth. Have the disruptions in the Middle East impacted business in any fashion, or is it business as usual? And therefore, does the growth rate continue in FY27 or FY26?
See, if you're talking about our parent company, BLS International, where we delivered around 723 crores of net profit, on consolidated level last year, definitely, as we said, from the day the company started, this related to geopolitical issues, any issue happens anywhere in the world, there is small, effect. But on an annual basis, we have always seen that we have grown as a company. So we continue to remain, that we will continue to grow at 20 to 25% year on year. We are bidding for major contracts across India, globally, that we see if, realization happens, then growth can be further.
But I was talking about the company which is BLS e-services as well, right? Correct me if I'm wrong, but FY26 you did what, about 1100 crores versus 500 last year. So that's what I was referring to. Do you reckon this pace of growth in BLS e-services continues? And what could the margins be? Because the margins came off quite substantially from whatever 12-13% to 7% in FY26. Does that stay stable now? I'm talking about BLS e-services.
First of all, there is no impact of any geopolitical war
Fair
on BLS
call. Lovely. Lovely.
This is happening in India. Obviously, we have grown, the revenue has grown from 500 crore to 1100 crore because of acquisition of RD Phyllis that we did. And that is, a loan aggregation business which is at higher revenue and lesser margin. Definitely, we want to maintain the growth momentum of 20 to 25% BLS e-services as well. But if there are major M&As or major new tenders that come in, growth could be further.
Okay, but on the margin front that Neeraj just raised, where in FY26 you've seen a dramatic falling off. It was in the double digits, it's fallen to 6-7%. Does that reverse, or is this the new normal, and have you hit your base?
See, as I said, that because of the acquisition of RD Phyllis last year, that is, at only 3% margin, the business is lead generation, loan aggregation. That is the business. Because of that, the consolidated margin has fallen. So definitely, this is the base. Our target is to increase the margin from here, as we have increased in all our businesses through cross-selling of different services, through cost optimization. Even acquisition of RD Phyllis will lead to Atyati will lead to an increase in margin.
Shikhar, of course, I'm not necessarily asking you for an exact value, but there must be something that you are aspiring to, a range for margins that you will build towards. What is possible in the remainder of FY27, and what is the aspirational value? When do you expect to hit it?
See, right now, it's very soon to comment on actual numbers. If you see on our visa business, I can give you that we were at a 20% margin, we grew 30%, and in our visa business, we are doing around 40% EBITDA margins. So in this business also, our target is to increase the margins. How much it will increase by what percentage, I cannot comment right now, but definitely we are making efforts to reduce the expenses and increase the cross-selling of services, increase per application revenue in this business as well.
Okay, thank you so much, Shikhar, for speaking with us today and joining in. Shikhar Agarwal there on the new acquisition by BLS e-services. Let's talk about 2% up as we're having that conversation. All right. Now, according to sources, the Defence Acquisition Council is expected to take up procurement proposals worth over 1 lakh crore rupees at its meeting today. My colleague Rishabh Pratap from NDTV joining in with more details. Rishabh.
But definitely, see, Tamanna, good morning. And this is going to be one of the very, very important Defence Acquisition Council meeting that is expected to take place around 12 p.m. today in Delhi. And what's on the table? About 1 lakh crore worth of equipment is what we are looking at. And that's why we say this is one of the important meetings that are taking place in recent times. For Indian Army, if we go, and we are going by one, let's go one by forces. For Indian Army, we are looking at K9 Vajra self-propelled artillery guns. Remember, the howitzers have worked really well for Indian Army, and that's why K9 Vajra is, being looked at. Kamikaze, or for that matter, the loitering drone. In Operation Sindhu, they were the game changers, and we are seeing increasingly in the current geopolitical situation how kamikaze drones have been very, very important. Then you have Varva manpads, as well as you have APS for armored vehicles, and these are the reasons that we are looking at and important features that are being added to Indian Army. For Indian Navy, you are looking at anti-submarine, anti-mine equipment. We are also looking at unmanned surface vehicle. We are also looking at torpedoes and other firing equipments for Indian Navy. That is very, very important.
Okay, all right. Rishabh, we'll keep an eye on the story as it develops. Thank you so much. We're taking a very short break. Before we go into the break, I just want to pull up the markets and show you what's happening. IT stocks firing up again, but so is the Nifty. 24,300 crossed comfortably, 0.62% up. IT and large private banks both contributing well to what's happening to the Nifty right now. Broader markets also looking good. Advanced decline ratio will show you that you're having a strong day in the markets. Of course, the Nifty mid-cap not firing as much as the Nifty in terms of numbers, but that advanced decline ratio looking robust. Very quick break. On the other side, we're in conversation with Anirudh Sarkar of Equinova Investment Managers. Don't miss it.
केसरिया से मन जोगी हुआ रे दिल झूमे देखो मतवारा हुआ रे केसरिया से मन जोगी हुआ
हर पल मनाओ केसरी त्योहार विमल बोलो जुबान केसरी. It is happening now. New tomorrows, new challenges. And all of it needs energy to work. Not afraid to imagine big. Because when energy stops taking, when it just gives, people can move, really move. At this moment, the world's evolving. And so is energy. Suzlon. Good energies that work.
अंबा शक्ति प्लांट की वर्ल्ड रेनाउंड टेक्नोलॉजी देती है स्टील को ज्यादा ताकत हर बार. अंबा शक्ति SDTMT.
It is happening now. New tomorrows, new challenges. And all of it needs energy to work. Not afraid to imagine big. Because when energy stops taking, when it just gives, people can move, really move. At this moment, the world's evolving. And so is energy. Suzlon. Good energies that work.
India's unshakable news habit. NDTV.com is India's #1 English news website.
You founded this company in a way when you were 15.
I think everyone really started off as more so a project than a company. The very honest TLDR answer to why I started this company is it was just very boring during COVID. I didn't want
Hi, welcome back. You're watching India Market Open. Now, a host of companies, including banking and financial services companies, have come out with their Q1 business updates, and quite a few of them look good. Stocks are reacting positively. Parth joining in to tell you about which stocks he's looking at more closely in the BFSI space. Parth?
Absolutely, Alex. Yesterday was just filled with a lot of banking updates, and if we start with the positive ones, the first one is Ujjivan Small Finance Bank, where credit growth has remained modest, led by gold loan and agri banking segments. The CASA growth, the CASA ratio, however, has dipped to 26% versus 28% in the previous quarter. The secured lending book has strengthened continuously, while the disbursements saw good growth, which was led by again gold loans and vehicle loans. The agri loans, however, saw a slight moderation in growth as the overall asset quality saw an improvement. The next one is Bajaj Housing Finance, which saw strong disbursement growth, while AUM growth remained in line with the first quarter of FY27 growth rate. The loan assets also saw strong growth, gaining over 24% year on year. Now moving on to the negative ones, starting with Equitas Small Finance Bank, the advances saw good growth on a year on year basis, but on the microfinance side, the QOQ growth was lagging, while a strong growth was seen on a year on year basis. If we move to the deposits growth, then they have lagged on a QOQ basis, while the cost of funds also saw an increase. The CASA deposits, however, saw good growth, but there was a slight moderation if we compare on a QOQ basis. The next one is Central Bank of India, where deposit growth remains sluggish due to the intense competition that the bank is facing currently. The CASA deposits growth has slowed down on a QOQ basis, while the CASA ratios have been on a declining trend as well. Also, the credit growth for the bank has slowed down. And last one is the Union Bank, where credit growth has slowed down, with the RAM advances remaining lower. Deposits have seen a degrowth on a QOQ basis, as deposit competition has again intensified among the peer banks, and also the CD ratio has saw substantial decrease as growth in the credit has lagged. So these are the 5 important banking updates that you should keep in your radar.
Okay, thanks a lot for that part. Now, on to the other big news this week, right? Japan and the Japanese Prime Minister in India, and as Japan double downs on India with several bilateral trade pacts. Mahima is here with the list of companies which are possibly set to gain from these agreements. Mahima.
Right, Neeraj. So, as you rightly mentioned, a lot of companies in the listed space have gone ahead and signed deals with several companies in Japan. To start with, I'll start with CG Power first, because that remains in focus, as Renaissance Electronics is set to invest in CG Power's OSAT project, which is in Sanand, Gujarat. The next one is Tejas Networks. Now, overall, a company called Rakuten Symphony and Tejas Networks have entered into a partnership for development of Open RAN network solutions. The third one is HCL Tech, because it's recently gone ahead and acquired a stake in Servam AI. Preferred Networks and Servam AI has signed an MOU regarding cooperation in R&D and development of Gen AI. The fourth one is Canara Bank, where NEC and Canara Bank have commenced and kind of started utilization of NEC's data integration platform and AI-based analytical solutions. Then we have Reliance, where NEC and Reliance Jio have entered into a strategic partnership for 5G technology and Open RAN here again, along with Tejas Networks. There's a Power Grid, where JBIC, in coordination with Japanese financial institutions, have signed loan agreement of 80 billion JPY with Power Grid. And then you have L&T, where Itochu Corporation and L&T Energy Green have signed a long-term partnership agreement on green ammonia to supply green ammonia from Gujarat. And last one again, just like Power Grid, there's PFC, where again JBIC and PFC have signed loan agreement amounting to JPY 60 billion. So over 7,500 crore of loan combined, both for Power Grid and PFC, have been sanctioned. So this is an entire list of companies in the listed space, of course, which have signed several deals in this India-Japan summit.
Yep. Thank you for that, Mahima. And there's a quiz for anyone who does a Japan story on how many Japanese words they know.
I don't know any of them properly. Not a person who watches Japanese or Korean dramas, for that matter.
Okay. Let me go across to Anirudh Sarkar, co-founder and CIO, Equinova Investment Managers, joining us on the show this morning. Anirudh, very good morning to you. And it's looking like a good morning for the markets as well. Do you see this momentum sustaining? Is this a bit of a pivot or a turn, or do you think a bit of a one-off?
Yeah, hi, good morning, Tamanna. I think it's basically kind of the catch up which is happening in different pockets of the market where a lot of under ownership has been there. Because if you see, for most part of the last 4 to 6 quarters, the narrative has been that we should be in the large caps, because of all the global risk and uncertainties around there. So in the process, what has happened, and this is something, when I interact with investors on the ground, I get a feeling that a lot of under ownership has been there in good pockets of mid caps and the small caps. And that's the reason if you find a good amount of the catch up is happening in many small caps and mid cap companies where under ownership has been there. And fortunately, earnings have been very strong. So I would say it's kind of the reality hitting investors that we need to be there in the sectors, companies where earnings are, and there are earnings happening beyond the headlines.
Anirudh, we've spoken often, and good morning, this is Alex here, over the last 4 months, right? And incrementally, we've gotten a view from you during the war as it was happening, how you were positioning yourself. Quite a few of those investments that you might have made at that time would have borne fruit. So the question to you right now is, how are you approaching your portfolio management? Are you taking money off the table selectively? Are you deploying fresh monies?
Yeah, Alex, I think, the good part of the last 4 5 months has been that, with all the uncertainties, we continue to focus on our key approach, which is, look for earnings. Unfortunately or fortunately, I would say many of the stocks have run up way fast for our comfort, as you rightly mentioned. So in some places, I'm doing some profit booking, just trying to realign it with some other pockets where the run up has not been so fast. But yes, overall biasness towards small caps and mid caps, it continues, because I think I'm not going to go off the small caps anytime soon. But yes, selectively in companies which have run up too fast for comfort, some amount of profit taking is happening. On the other side, I would say some amount of underperformance which has happened in some of the sectors, like for example the banks, and we have been underweight on the banks for a long time. So there incrementally we are looking at adding some exposure.
What about IT, Anirudh? Seems to be a change of mood over there as well. Do you think finally people are seeing that IT was being punished unnecessarily?
Yes, I think with the prices and the valuation of most IT stocks, it definitely looks like, how much more can they fall. But I think, this is something which we keep hearing almost every month, because, what has happened in the sector is a lot of the price movements have been driven with the news flow. There is one announcement happening in the US of something new coming up in the AI space, and all of a sudden you'll find Accenture and the likes down 6-7%, and the next day everything gets beaten down here. So I would say what we are seeing today is more kind of the dead cat bounce. I'm not a buyer in IT even today. And for the last 6 months on your channel, I've been maintaining my avoid stance on IT. Even today, I'm not getting into IT for sure. I see this more kind of a dead cat bounce. Yes, I think next week we'll have all the earnings season picking up in this IT sector. Would want to wait and watch how the guidance looks like. There's a possibility there could be an upgrade of guidance in a couple of companies. But yes, I would want to wait and watch. I don't mind entering 10-15% higher.
So therefore, am I right in assuming, Anirudh, that your exposure to the IT pack is at this point is zero?
Yeah. I don't have any IT for the last almost 8-9 months.
Okay. So what did you make of the business updates in the consumer space? Because, and here I'm going to throw Bajaj Finance also, for example, into the mix here, because they've reported a pretty robust 24% growth in AUM, and that's the highest in 4 quarters, and that indicates that demand for consumer durables is pretty strong. So that is one pocket. FMCG companies have seemingly weathered this storm with reasonably good demand. Demand has stayed intact. So what's the view broadly?
No, I think India has always been the consumption story. And when you talk about the consumption story, I think within that always the two pockets are, one is urban consumption and second is the non-urban consumption. So I would say Bajaj Finance is a pure play on the urban consumption, and all these FMCG companies, which you mentioned, I think that's a play on the non-urban consumption in a big way. Business updates from both these segments, it gives you confidence that India consumption continues to rock. And I think this was something which was bound to happen, because typically what happens is, if I talk about the urban consumption picks up when urban consumers, they have a good income growth, and income growth is a reflection of corporate earnings. So typically, if you see in the last 8 quarters, 6 quarters out of 8 quarters, earnings growth for corporate India was weak, which translated to weak urban income growth, which translated to a bit of a weak urban consumption. That is now getting reversed, and hence we are seeing the auto sale numbers. You're looking at the numbers from Bajaj Finance. You're looking at the numbers from different the consumer durables. So it gives you a picture that urban consumption is definitely picking up. On the FMCG side, that gives you a picture of the non-urban consumption. I think with the elections, with the MSPs going up, and also with, I would say, monsoon, which was a big concern. It continues to be a concern, but I think it's with the way the monsoon is picking up and the price appreciation which has happened, I would say that, definitely FMCG volume growth and price growth is bound to happen. So I would say, consumption can be a big play, but I am not betting on the non-urban consumption as of today. I'm still betting on the urban consumption.
Okay. Anirudh, a lot of business updates coming in so far, and I know business updates are only a partial picture. But especially in the banking and financial space, it's talking about a fairly robust Q1, unlike what was expected. Do you think that that's going to be the next driver? What, according to you, let me broaden that. What, according to you, are the next big drivers of the market rally if it has to sustain?
So I think the next big driver will be, I would say, something which has underperformed big way, which is the banking sector. And that's the reason, I mentioned that, incrementally we are looking at increasing banking for a simple reason that if you look at the last 4 months, FIs have sold almost 92,000 crore of banking stocks. And all the numbers, you can say practically $8 to $10 billion of outflows happened from that sector. Obviously, growth was a concern. All the issues with the management changes in the top of these private banks was a concern. Now, I would say the lending growth is picking up. And happily, I would say that in the last 2 quarters of 16-17% of the lending growth, which has been visible in the banking space, I think that gives you confidence that corporate borrowing and the retail borrowing is picking up. And with the FCNR deposits, I would say the NIMs will also improve. So I think this is one space which could pull up the market. And this has the potential to pull up the market.
Okay. What is your, and I understand that you're bottom up, Anirudh, but I'm just trying to understand what is your largest sector exposure at this point and why?
My biggest exposure for the last almost 6 to 8 quarters has been auto and auto ancillary, and second is the power and power ancillary. So these two makes up almost 1/3 of my portfolio, and I continue to be bullish on that because I think auto and auto ancillary is one space where I'm betting on in a big way. One is domestic demand, second is export potential, and the third is on the auto ancillary side. I think we are replacing many other export countries when it comes to supplying to global markets. On the power and power ancillary, I think we are a power hungry country. There is no shortage of power capex, and I think this can continue for the next 4, 5, 6 years. Obviously, today, most of the power stocks are down because of the news of the government allowing the Chinese companies to bid for Indian power projects. But I think the pie is so large. The reason for doing that was also that if this was not allowed, we could have a very long execution period for most of the power projects. So it's not that existing power players will not get orders, just that their hands are full. So if you want to expand, do more capex, you need more players to participate. So I'm bullish on both these spaces and continue to be bullish over there.
Anirudh, so therefore, with all of these counters, and I do not know which you hold in your portfolio, but the likes of Hitachi Energy, your GVTND, all dropping 6-7% in trade today, in your opinion, these are opportunities to pick up more?
Absolutely. So I think, the news which is out today, this was known. So this is not something new. This was already known that, the government will allow the Chinese companies which have the local manufacturing. So what people are missing out is that only those Chinese companies which have a local manufacturing in India, they will be allowed to bid. And for them to put up capacity in India, it will also take time. So it's not that, orders will be taken from Indian companies and being handed over to the Chinese companies. And as I mentioned, most Indian companies in the power space, their order books are all giving you visibility for the next 8 to 10 quarters. So I think, it's a buying opportunity for sure.
And the valuations are not necessarily the most attractive, though. Of course, Anirudh would have gotten it better valuations. Thanks so much for taking the time, though. Always a pleasure speaking with you.
Always a pleasure.
All right, on that note, that brings us to the end of this edition of India Market Open. From Tamanna, Neeraj and myself, thank you so much for watching. And the team, of course. Do stay tuned. Lots more coming up on NDTV Profit, starting with Ask Profit.
केसरिया से मन जोगी हुआ रे दिल झूमे देखो मतवारा हुआ रे केसरिया से मन जोगी हुआ
हर पल मनाओ केसरी त्योहार विमल बोलो जुबान केसरी. It is happening now. New tomorrows, new challenges. And all of it needs energy to work. Not afraid to imagine big. Because when energy stops taking, when it just gives, people can move. Really move. At this moment, the world's evolving. And so is energy. Suzlon. Good energies that work.
अंबा शक्ति प्लांट की वर्ल्ड रेनाउंड टेक्नोलॉजी देती है स्टील को ज्यादा ताकत हर बार. अंबा शक्ति SDTMT.
It is happening now. New tomorrows, new challenges. And all of it needs energy to work. Not afraid to imagine big. Because when energy stops taking, when it just gives, people can move. Really move. At this moment, the world's evolving. And so is energy. Suzlon. Good energies that work.
India Inc.'s most respected names chose India Inc.'s best and brightest.
I'm delighted to be chairing of such distinguished fellow businessmen, bankers. It's just lovely to be back on this NDTV jury. I have been a fan of NDTV for a long time.
Many of the nominees are extremely close together in terms of what they've done.
Gender parity to be reflected while we choose leadership as well.
It's also important that how they are reshaping the industries.
We got a fantastic jury and we've left all decisions to the wisdom of the jury.
Who will earn India's top business honors? Find out at the NDTV Profit Business Leadership Awards.
You founded this company in a way when you were 15.
I think Airborne really started off as more so a project than a company. The very honest TLDR answer to why I started this company is it was just very boring during COVID. I didn't want to spend this extended summer break rewatching Suits for a fifth time.
There are now, at least, quite a few folks in India who are getting into the drone delivery space. What is disruptive about your version or your vision of drone delivery?
Our goal is to create a technology stack that leads to delivery drones that are orders of magnitude cheaper. We are actually shockingly close to being more cost effective than trucks, to being more cost effective than, let's say, a Tata Ace.
From a pet project to building a company which actually makes sense. You need someone to believe that this is a viable project, not a project, but a viable entity. Who was that person for you?
That was Grad Capital. So they were our very first check. They invested in me when I was 16. It's only over time became apparent to me that like nobody would have backed a 16-year-old that was still in school the way Grad Capital did. It was also a funny experience because like Abhishek Sethi, the lead investor there,
Good morning, you're tuned in to Crypto Minutes powered by CoinSwitch for your daily dose of news and updates from the crypto world with me, Shreyanti Singh. First up, let's take a look at the top headlines. Bitcoin above 61,500 on strong macros. Robinhood rolls out public blockchain for UK residents. Meta Planet hits 43,000 BTC milestone. Bitcoin long-term holder back to accumulation. Time now to take a closer look at some of these headlines. Then first up, Bitcoin is back above $61,500 as weak US jobs data reduces Fed rate hike fears, sparking a capital rotation from some of the tech stocks into Bitcoin as well as gold. And you do have institutional flows that are also increasing for the investors. Risk-on sentiment clearly coming right back. Moving on then, let's talk about Robinhood that rolled out public blockchain planning crypto trading for UK residents, and the company also said that its tokenized stock products were live and available through its wallet app to users in more than 120 countries. Robinhood, mind you, is a financial services company famous for pioneering commission-free trades of stocks, ETFs, options, and of course crypto. Moving on then, let's talk about Meta Planet that hit the 43,000 BTC milestone on July 2nd as well. And the Tokyo-based firm now ranks as the world's third largest corporate Bitcoin treasury, trailing only Strategy and 21 Capital across the entire global corporate holder ranking. This shows greater acceptability of crypto among institutions. Let's also move on and talk about positive news coming in for long-term crypto investors. So this news is for them. Long-term holding wallets have shifted to net accumulation from net distribution as per Glassnode. In fact, the current accumulation appears to be running in somewhere between the range of 50,000 to 100,000 BTC. These signs show that there might be a further scope for a technical up move when it comes to Bitcoin prices. Moving on then, before we wrap, here's a quick check on changes to crypto prices over the last 24 hours. A great day coming in for crypto, and that's across the board. Whether you talk about Ethereum that gained over 6%, leading gains, Bitcoin following suit really, while XRP and Solana were also higher. And the support and resistance level, when you look at that as well for Bitcoin and Ethereum, that is a tad bit higher, moving in tandem with the prices. Moving on then, let's also take a look at the crypto strategy for the day. Here's what to keep in mind today. Now, first up, you do have the market outlook that is right now cautiously bullish. In terms of the momentum, you're looking at a risk-on sentiment, and that is also very important to track right now when it comes to the world of crypto. And you also are expecting more retail and institutional flows, keeping up with that momentum that we have currently. When you talk about Bitcoin, the resistance level is somewhere between $62,000 to $64,000 levels. And as we wrap, remember you can reach out to CoinSwitch's dedicated helpline where anyone can connect with in-house experts to get their queries resolved, whether it's about crypto, regulations, taxation, or the broader industry as a whole as well. The team is available to provide guidance and help users make informed decisions. And that's all on this edition of Crypto Minutes powered by CoinSwitch. Thank you so much for tuning in.
Welcome back. You're watching NDTV Profit, and this is Ask Profit, a show that gets all your stock-related queries answered. For viewers who are just tuning in, you can either give us a call or send us your query on the WhatsApp numbers that are flashing on your screen up there. While you do that, let's take a quick look as to how the markets are doing. Holding up very well in trade today. The Nifty 50 is up by about 0.7%, and consumption names are shining in trade today, leading that rally. Plus, there are a few select names that are also doing well on the Nifty 50 index, like HCL Tech, which is up 4.6%. Dr. Reddy is up 2% as well. Trent doing fairly well. Sun Pharmaceuticals, as well as Apollo Hospitals and BEL also doing fairly well. So IT, yet another day of gains coming in. But that advanced decline ratio on the Nifty 50 is looking very strong. The Bank Nifty is also trading, above the 58,000 levels, but underperforming the Nifty 50 as we speak, just gains of about 0.1%. Let's try to pull up the mid-cap 150 and the small-cap 250. Both in the green but underperforming the benchmarks, and that's been the story this week. The mid-cap 150 is just up by about 0.1%. The small-cap 250 up by about just 0.3%. But also remember that they've seen a significant run-up from their low points that it had seen in March and April. But let's also quickly pull up the advanced decline ratio and then the BSE 500. There you go. Still, at least in the favors of the buyers is what we're seeing. 1600 odd advances versus that of 950 odd declines. And quickly the BSE 500, some specific names that are seeing gains. You have Sumitomo Chemicals, which is up 10%, followed by Zensa Tech, Tamil Nadu Mercantile Bank up 5% as well. Rajesh Exports for a change in the green today, but on the flip side, you have Hitachi Energy, which is down 7.4%, PB Fintech down 6% and Welspun Corp, Parasia and Magnesita are some of the other names that continue to be under pressure. But let's quickly start taking your queries, and to answer them, we're joined by Saumil Mehta, Head Alternate Research at Mirae Asset, and Sameer Dalal of Natwarlal Sons and Stockbrokers joining us now. Welcome to both of you, gentlemen, and a very good morning to the both of you. I'll start by taking the first question, which is from Shankar, who is writing us from Bengaluru, asking about IRDA. He's holding around 1200 odd shares at the levels of 136. He wants to know whether to hold, sell, or maybe average by adding further, and what could be the price target and timeline that he can look at. So he looks at the charts generally. Saumil, what would you recommend for IRDA on the charts?
IRDA has been in a downtrend for a very long time now, and I'm not expecting too much out of it now, at least for some time. In the very short term, yes, it can go up till 135, 138 levels, but I'm not expecting too much. It has been trading below 200 daily exponential moving average since mid 2025. So a very long time, struggling below this average. I'll be expecting the stock to, still consolidate around this level. Once it crosses above 200 daily moving average and the previous swing highs of 135, 136, then probably there will be a revisit on the stock, and then we can take a medium term view. But at this point of time, sideways to negative is my view on this stock.
Okay, the next one that we have is on APL Apollo Tubes. Sagar from Bengaluru wants to know if this is the right time to buy this stock from a 2 to 3 year perspective. Sameer, any view on APL Apollo Tubes?
Unfortunately, this one is not under coverage.
No worries. Saumil, any view on the charts for this one? From a slightly long-term perspective, this is the right time to buy?
Which stock did you mention?
APL Apollo Tubes is what I'm talking about. And 2 to 3 years is what our viewer is looking at. But from a slightly long-term perspective, we can give some view on the charts.
Long-term view, definitely positive. It has been holding on by a upward sloping trend line, so I'm definitely positive on the stock. However, it can slide down till 1690, so that will be a very, very crucial support for this stock, and I'll be expecting this stock to take support around those levels. But the breakout is above 1900. Once it crosses above 1900, sustains about 1900, that will be the right time to enter the stock and then hold on for long term. If somebody is holding on to this stock, I would suggest hold on to it. I'll be expecting good returns in next couple of years.
The next query is coming in from Ria from Bangalore. It's on Wheels India. She's saying that the stock has fallen around 12% in the last few days. She still has 1 to 2% of gains left. Should she continue to hold or should she exit? Saumil, any view on this counter?
See, it has run up a lot in the very short term. In the medium term, I'll expect it to, correct a little bit, get a pause. The correction can go down till 1440. That will be my first support, and the next support would be around 1266. The stock has run up from the levels of 700 to 1800 within a span of probably 6 months. So now I'll be expecting a good retracement for the stock. So buy on decline should be the strategy. If somebody is holding on for trading purposes, like for short term or medium term, book out some profit, and you will get it probably on the lower levels.
Okay, all right. The next one that we have is coming in, and this is from Avinash Naidu. By the way, for viewers tuning in, you can also give us a call. Remember, you can pick that phone, call us online and ask your queries. The next one is from Avinash Naidu, who's writing us from Bengaluru. He's got 30 odd shares of Exide Industries at a price of 343 and wants to know if he can continue to hold this, maybe average out. Samir, any view on this?
So continue to hold on to the stock. The battery space, whether it be automobiles or whether it be industrial, which they are also going to be catering to. Exide is setting up a plant which will do the lithium-ion batteries for the industrial, for the BESS and all of that, will continue to gain traction. Yes, the stock has seen a bit of a run-up over the last 2 years. But it's also consolidated over the last 6-8 months. So for me, I think hold on for it. Long term looks good. The opportunity is extremely large. Patience will pay. So just stay put on corrections closer to maybe 330, 340. You can add if it corrects to that level.
Okay, the next query is coming in from Pradeep Paul. It's on PNB Housing. He has bought 155 shares at a price of 1050. Should he hold or sell? Saumil, any view on PNB Housing?
Just give me a second. PNB Housing view positive in the short term, in the medium term. However, my targets are 1140. I'm not expecting too much from the stock at this point of time. In the very long term, I'll be expecting the stock to be a positive to sideways, and the higher end resistance would be around 1140.
Right, okay. Of course, JP Morgan did have a rating, and PNB Housing remains their top pick in the housing finance space. But moving on to the next one, Bindu from Hyderabad is asking about Cupid. She's got around 1270 shares, bought at the levels of 86. Wants to know if she can go ahead and book profits or continue to hold this further. Saumil, your view on the charts on this one as well?
I think hold on to this stock. It's been in a amazing run. I'll be expecting a target of at least 206, 207 in the very short term. Keep a stop loss. If you're a short term trader, 190 would be the stop loss, and if you're a medium term trader, I think the stop loss should be around 170.
Okay. The next query is coming in on Dream Folk Services. Lakshmi from Hyderabad has around 300 shares, bought at a price of 150. Should she hold this counter for long term? Samir, any view on this?
This is another counter we don't cover.
Okay, all right. The next one that we have is coming in on Ola Electric. Divya wants to know if this is the right time to enter. Samir, would you recommend that?
Yeah, I think it is. Look, we've been saying for a very long time that the electric vehicle space is going to get a lot of traction. Delhi government was the first one to pull the trigger, saying that we are not going to register two-wheelers which are not electric, basically ICE engines. We think this kind of push is going to keep progressing going forward in the bigger metros to start with, where charging infrastructure can be set up quite quickly. Once that starts happening, what you'll see is a lot of traction in sales. The operating leverage is playing out. Ola is one of the large players with good capacity. They have their gigafactory up and running, so their batteries will not be an issue for them. Going forward, it'll be domestically made at their factory, vertically integrated. The operational utilizations, as they go up, you'll see the profitability increase. So for me, Ola at this point of time is a good buy. The stock has gone through a deep correction. They are emerging slowly out of the problems that they had with servicing. And I think this is a stock that can do extremely well. I wouldn't take a very large position in the stock, but definitely maybe 2 to 3% of a portfolio can be in that.
Okay, all right. So that's the view coming in on Ola Electric. The next one that we have is on BSE. Our viewer Vijay from Dubai is holding 152 odd shares, bought at the levels of 3946. He says that he's sitting on some losses right now, but from a long-term perspective, is this a good hold? Samir, what would you recommend?
Okay, so I'm going to give two views, right? If you have a 10-year horizon, probably hold on. But if you have a 3-year horizon, I'm telling you sell. And I'll tell you why. Look, the BSE has done extremely well thanks to the weekly expiry that happens. If you look at the breakup of turnover, about 70% of the profitability is coming from the options turnover, right? The options market, the weekly expiry that they get the. Now, this is great because you have volatility in the market, things, which allows people to keep trading these options and making money. But once the volatility reduces, what you're going to see is that the volumes will decline. When volumes decline, the profits will fall exponentially because the operating leverage that helped on the positive side will work on the negative side. Long term, extremely long term, why I'm saying buying, because I think India has the opportunity to have 3 times to 4 times the turnover that it currently has. But it's cyclical in nature, structurally good, but very cyclical. And when the cyclicality of the bear markets hit, you'll see the stock falling probably by 50%. So for the next 2 years, 3 years, I have a cautious view. From a very long term view, and you're willing to bear 50% falls and then still stay put, hold on.
All right, okay. So that's the view coming in on BSC. The next one that we have is on Paradeep Phosphates. Satish from Bangalore is holding 500 shares at the levels of 153. Somil, on Paradeep Phosphates, should he continue to hold, add more? What's the view like?
Paradeep, yes, it has just broken out of a consolidation. A previous quarter high has been crossed as well. Trading about 20, 40, 200 daily moving average. Momentum indicators on the weekly, monthly charts have just given a buy signal. Great stock to be in, actually. Just give me a second. Okay, so the next target for the stock would be 170. And if it sustains above 170, then the next target would be around 200. So these are my targets for the stock. Very bullish on in the short term, medium term. Strategy should be to buy on declines. 200 daily exponential moving average is at 136. And another support swing low is around 131, 132.
Right, the next query is coming in from Harjeet from Mohali. It's on Morpen Labs. He entered the counter around 32 rupees price, and now for about the last 8 months, the share prices have jumped to around 58 or 60 right now trading at. So he's sitting on a handsome gain. He hasn't entered this counter. He has been monitoring this counter since the level of 32, and right now the share prices are 60. So he wants to know whether it's the right time to enter now this counter. Any view on this, Samir?
Again, too small of a company.
Okay. Somil, any view on Morpen Labs?
Just give me a second. I can't pull up the chart, sorry.
No worries.
Let's skip over it.
Yeah, no worries. It's trading at 60 rupees and seeing gains of about 1%. If you've tried to pull up the chart, Somil, maybe now.
Got it.
Yeah,
got it. Okay. So it has had a very good run, trading above all the averages, broken out of a consolidation of basing out pattern, higher top, higher bottom formations on the weekly, monthly charts. Good trend to be in. In the very short term, I think it can go down till 58, 56 levels, but that will be a buying opportunity. Anyone who is invested in the stock, my target should be 70 plus. If it sustains above 70, then I think it is going to 85.
Right, okay. The next one that we have is on Vatek Vabag. Our viewer, Suraj, wants to know if the current price and the valuation is fair enough to enter at. Samir, what would you recommend?
Not at this price. You cannot enter at this price. The stock was at about 1,300 rupees, I think 6 months ago, right? No, we are not denying the fact that, look, the water treatment, sewage treatment opportunity is extremely large. But when you buy something that is overpriced, and this is, very important for all viewers, not only for this stock, across the board, when you buy something that has run up too much, in a very short period of time and valuations have moved up about the 35, 40 levels. Look, growth cannot keep sustaining at higher levels once the base becomes larger. growth starts tapering down, PEGs look expensive. So for me, at this point, it's an avoid. If it comes closer to 1500, yes, I would recommend buying the stock.
Okay, it's time for a rapid fire round now. Somin and Sameer, try to keep your answers as short as possible. The first one that we have is from Lakshmi, who's writing us from Vijayawada, asking about Tech Mahindra. Our buying price is of 1450, and she wants to know if she can continue to hold this one. Somin, what would you recommend?
At this point of time, hold on to it. Keep a very tight stop losses below the previous swing lows of weekly charts.
Okay, Mana from Mumbai is holding 800 shares of Hindustan Copper, bought at an average price of 550. Should he continue to hold or exit, Saumil?
Hindustan Copper, hold.
Okay, the next one that we have is from Saurabh Shah, asking about Kane's Tech. He says he's bought it at the levels of 3172. From a medium-term perspective, continue to hold, Sameer?
Hold on for right now.
The next query is for you, Saumil. It's on Eternal. S. Khan from Bangalore is holding 39 shares, bought at a price of 279. Should he hold or sell?
Bullish, hold on to it.
IRCTC bought at the levels of 519. Sameer, your view from a long-term perspective. Keshav from Chennai wants to know.
I think I'm very positive. I would recommend buy more.
Saumil, the next query is for you on Tata Power. Murthy from Vizag wants to know whether should he enter Tata Power at this level.
Not yet. Maybe after a breakout above 400.
Okay, Bank of Baroda, from a short-term perspective, what are the charts indicating, Saumil?
Bank of Baroda, hold on to it for long-term. Short-term, it's going down till at least 190.
The next query is for you, Saumil. It's on IDFC First Bank. Ramani from Chennai wants to know the next target for the next 3 months for this counter.
Hold on to it. Very bullish on it.
Okay, Tata Elxsi from a long-term perspective. Rituraj from Bengaluru wants to know. Sameer, any view?
Avoid it. If you want in that same space, Tata Tech is the one we are in.
The next query is for you, Sameer. It's on G Vernova. Vikas from Pune wants to know whether should he buy this counter today for the next 1 year.
1 year, hold at best, not a buy at this point.
Okay, Hero Motocorp, 16 shares bought at the levels of 5,005. Abhiraj from Palakkad wants to know, continue to hold from a long-term perspective. Sameer?
Absolutely, please hold on.
The next query is for you, Saumil. It's on NBCC. Radhakrishnan from Kochi is holding few shares bought at a price of 96. Should he hold or sell?
Hold on to it.
Okay, Trent, is it a good buy right now? Pakshar from Jodhpur wants to know. Saumil, on the charts for Trent?
Absolutely a good buy for investors, not for short-term traders.
The next query is for you, Sameer. It's on United Spirits. Ashok Pai from Bangalore is holding 900 shares, bought at a price of 1,360. Should he accumulate more at the current price?
You can. I would prefer if you buy it a little lower, but even this price is decent. Valuations are a little rich.
Okay, Acme Solar, good buy right now from a 2-year perspective. Sameer?
So I would avoid this one at this point. It's a hold at best. Acme Solar.
The next query is for you, Sameer. It's on Quality Wall. Sudhakar from Bangalore wants to know whether is it a good time to buy this counter for long term.
Unfortunately, no coverage. Sorry.
Saumil, any view? Quality Walls?
Quality Walls, hold on to it.
Okay, Anant Raj, 2,500 shares bought at the levels of 540. Short-term view on this one. Saumil?
Anantraj, hold on to it. Short term, I think you may see a little bit of correction, but it will bounce back.
The next query is for you, Sameer. It's on NMDC. Ramesh from Bangalore is holding 500 shares, currently sitting on a loss. Should he continue to hold or exit?
It's just a hold.
Okay, LNT bought at the levels of 3963. Our viewer wants to know from a short-term perspective, continue to hold. This is, by the way, Ram from Tirupati. Saumil?
Continue to hold.
The next query is for you, Sameer. It's on CESC. Arvind Manjareshwar is holding few shares of CESC. Should he continue to hold or exit?
Actually, I would say hold on or even add some.
Nalco bought at the levels of 398. 100 shares is what Chitra bought. Continue to hold. Average weight. Saumil on the charts.
I'll hold on to
Nalco.
it.
Okay.
Saumil, the next query is for you. It's on Thirumalai Chemical. Viraj from Mumbai is holding few shares bought at a price of around 180 to 185. Should he continue to hold or exit?
Hold on to it.
All right. Okay. That brings us, of course, to the end of this rapid fire round. Saumil, thank you so much for taking out the time and helping us with all those tech-related queries. But viewers, it's time to slip into a very, very short break. But don't go anywhere. We'll be back with answering more queries on the other side. So do stay tuned.
presented by Tata Azura, हर रास्ते का सुपरस्टार।
केसरिया से मन जोगी हुआ रे, दिल झूमे देखो मतवारा हुआ रे। केसरिया से मन जोगी हुआ।
हर पल मनाओ केसरी त्योहार। विमल, बोलो जुबान केसरी। It is happening now. New tomorrows, new challenges. And all of it needs energy to work. Not afraid to imagine big. Because when energy stops taking, when it just gives, people can move. Really move. At this moment, the world's evolving. And so is energy. Suzlon. Good energies that work.
अंबा शक्ति प्लांट की वर्ल्ड रेनाउंड टेक्नोलॉजी देती है स्टील को ज्यादा ताकत हर बार। अंबा शक्ति SDTMT।
It is happening now. New tomorrows, new challenges. And all of it needs energy to work. Not afraid to imagine big. Because when energy stops taking, when it just gives, people can move. Really move. At this moment, the world's evolving. And so is energy. Suzlon. Good energies that work.
You founded this company in a way when you were 15.
I think everyone really started off as more so a project than a company. The very honest TLDR answer to why I started this company is it was just very boring during COVID. I didn't want to spend this extended summer break rewatching Suits for a 5th time.
There are now, at least, quite a few folks in India who are getting into the drone delivery space. What is disruptive about your version or your vision of drone delivery?
Our goal is to create a technology stack that leads to delivery drones that are orders of magnitude cheaper. We are actually shockingly close to being more cost effective than trucks, to being more cost effective than, let's say, a Tata Ace.
From a pet project to building a company which actually makes sense. You need someone to believe that this is a viable project, not a project, but a viable entity. Who was that person for you?
That was Grad Capital. So they were our very first check. They invested in me when I was 16. It's only over time became apparent to me that nobody would have backed a 16-year-old that was still in school the way Grad Capital did. It was also a funny experience because Abhishek Sethi, the lead investor there, literally had to get on a call with my dad to convince him that you should let your son take this money.
How much of your formal education did you complete?
I did not go to college.
Why?
I felt there's nothing that, I can learn out of college that I couldn't learn myself.
India Inc.'s most respected names chose India Inc.'s best and brightest.
These kind of awards and jury lineup, you are truly giving it the right weightage.
I think it's heartening to see talent that there is across India Inc.
We should be awarding companies and individuals who have focused not only on growth but also on bringing good governance.
Be part of jury and vote on the people, the men, the women, the companies in India who have the right stuff is a great opportunity for us.
For us, the biggest thing is trust. That's what we provide.
We need leaders in India that can help take India being a global superpower.
We've got a fantastic jury and we've left all decisions to the wisdom of the jury.
Who will earn India's top business honors? Find out at the NDTV Profit Business Leadership Awards. India's unshakable news habit. NDTV.com is India's #1 English news website.
Hi, I'm Tamanna Inamdar.
Welcome back. In a 24-hour period that has been full of news flow, there is one that certainly stands out as well, and that is Inox Clean, where other Poonawalla family office has invested 700 crore rupees, valuing the renewable energy platform at circa 70,000 crore rupees. This is much higher than the 50,000 crore rupees valuation that the platform had in the month of January, when investors such as Sun Group Global, Autumn Investments, Akash Bansali and others had invested. Sure, this funds strengthen the P&L for the company, or the balance sheet for the company, support expansions, acquisitions, I presume. We have Executive Director Devansh Jain joining us on the same. Devansh, thanks so much for joining in, and congratulations. And I'll start off by asking you what I asked you just before we went live, which is that at a point of time when the renewable energy sector, at least the valuations are in a state of a flux because of grid connectivity issues, etc., you've amped up the valuations by 40% on that base. What is it about Inox Clean's strategy, execution, etc., that may have convinced the Poonawalla family office to invest such a large sum at this valuation?
Look, hi Neeraj, good morning. Pleasure to be back with you. First and foremost, at Inox Clean, we are building one of India's largest integrated renewable energy platforms. And as some of you may be aware, this is a platform which is primarily spread across 3 continents: India, the United States, as well as Africa. While we have a very, very large base in India, over the past 3 months, we've made a very large presence in the US, where we've gone and bought one of the largest solar integrated platforms in the US. And Africa is just on the verge of starting execution for Inox Clean's platform. Having said that, I think over the past couple of months, with the war which was looming in West Asia, obviously energy transition has become a very large buzzword. And I think to that extent, players which have strong execution, clear capital allocation policies, frankly, I think have been doing fairly well. And I think within that mix, I think we've grown at a phenomenal pace. We've had almost 10 acquisitions completed over the past 10 months, and some of them being very large. We bought Macquarie's India platform, Vibrant. We bought BlackRock GIP's India platform, Veena Energy. Of course, we made a very large US acquisition. We've also taken over Enercon India, Windworld. The final NCLT piece is coming through. But so we've really put together a very, very interesting piece together. And I think we've done it at numbers which are virtually unparalleled in India. So if you look at a company which did not exist literally 15 months ago and is now one of the largest in India, with a very, very strong pipeline ahead, as well as multiple inorganic opportunities ahead of us as well. That's how we've been valued, which is, also it's a sum of the part value. I mean, you take the IPP side and then you look at the solar side, and we've had multiple bankers working with us. So it's not rocket science. I think there's a lot of juice left. And I think over the next couple of months, we should be seeing much higher numbers as we move forward.
Yeah. In some sense, a startup, if you will, Devansh, since you said it was not existing 15 months ago and getting this valuation is quite something. So it shows the promise of the future. What is that promise of the future in Inox Clean? Because I see that you've done about 10 acquisitions in the last 10 months or thereabouts. What is the promise of the future, both in terms of what you do and in terms of the growth that it entails?
Look, I think what we've targeted publicly, I think over the next 2 years, we want our IPP platform to be a 15 gigawatt operating platform. Unlike many people who talk of platform sizes with less than 1/3, 1/4 being operating, we're talking of a 15 gigawatt operating capacity. Our current operating capacity is close to 4 gigs. The pipeline, including the pipeline, we would be closer to 15 gigawatt. But I'm talking of the operating capacity being 15 gigawatts over the next 2 years. And our solar manufacturing capacity getting to about 11 gigawatts. So that's what we are working towards. That's what the targets are. Fortunately, we've literally upgraded targets, beaten every target we set out for ourselves over the past 15 months. I think across investors, we've got some of the largest Indian investors as well as global investors. So we've had Calpers, we've had Adar now, we've had Inam, Akash Bansali, we've had Autumn, we've had RJ Corp, and some of India's largest HNI and family offices invest with us. So God willing, I think all of them have made a phenomenal return on this company. And as I mentioned, going forward, we see exponential growth coming through over the next 2 years.
The best is yet to come. Could you define that, Devansh, for us? I mean, one, it's very aggressive inorganic growth that you've done thus far, and presume there is more to come. And when you say exponential growth, you've given us the targets for the capacities. What does it mean in terms of what the P&Ls could show, if you will?
Well, it's unlisted, but broadly speaking, at about 15 gigawatt of operating capacity and a healthy operating mix of the entire module cell capacity, we would be looking at an EBITDA north of about 20,000 crores.
Wow. Okay. Now, you're also positioning yourself, as I read, as an integrated renewable energy platform, right? Now, how important is this vertical integration to your competitive advantage? And also considering that there is cross-pollination, if you will, from the other group entities, which are also very, very large sized?
Look, I think the advantage which we bring, which we call our one integrated approach, is unparalleled. I think a fair part of valuations at Inox Clean also comes from the fact that as a group, we've been in renewables for north of 20 years. We are one of the largest wind turbine manufacturers. We operate the largest listed O&M company, Inox Green. We have a very, very large battery play at GFCL EV. And naturally, I think across execution as well, we are one of the largest execution platforms soon to be listed via demerger of Inox Wind's EPC arm. And I think, so there is no cross-pollination in the sense that the IPP arm is under Inox Clean and the solar manufacturing arm is under Inox Clean. But yes, when you put together all these silos and verticals at a consolidated level in the group, we would probably be amongst the top 3 integrated players in the country.
Okay. Well, maybe cross-pollination was the wrong term. Let me try and rephrase myself. Group synergies, right? Because there were some reports of how Inox Wind would supply NX capacity, right? 15 megawatts of turbines to Inox Clean. So that's what I meant. I mean, because this synergy is great to have for the group at large, right?
Oh, no, absolutely. It's game changing. I mean, frankly, a lot of our investors, when they look at, tick marks, right? The first thing they want to see is, do you have execution capability? And second, do you have the supply chain capability? Now, frankly speaking, we have the execution capability that's been demonstrated over the past 14, 15 years in the renewable business. But we control the entire supply chain. So we don't need to look outside for wind turbines. We don't need to look outside for battery chem. We don't need to look outside for solar. We don't need to look outside for operations and maintenance. We execute ourselves. And even at the group level, a part of the power will go for captive requirements as well, which is a win-win for every group company. I mean, you mentioned Inox Wind. Frankly, they recently signed a 1,500 megawatt order with Inox Clean, which is about 500 megawatts a year. But Inox Clean's ambitions are far larger than that. So, frankly speaking, I think it's a huge synergy and massive gain for every company within the ecosystem. And yet, it's arm's length transaction across each of these verticals.
I mean, I didn't second guess that at all, Devansh, going by the track record, so that was never under question at all. A couple of more questions, and one is the sector as it stands right now. Yes, the promise of 2030 targets, etc., stays, but we know that grid connectivity is an issue, and somehow, I mean, those reports of how, because there is no grid connectivity, sometimes the power rates go down to as low as 0 as well. All of those come about, right? What are the risks to the aggressive path that the Indian renewable space has and your company per se has? How are you mitigating them, Devansh?
Look, I'll talk specifically about ourselves.
Sure.
I think what's important, and we must understand, is we've been in renewables for over 20 years. We own 95% of Inox Clean. We're a very long-term player. We are not some private equity fund or some short-term promoter building a gigawatt or something and then flipping it over. So from our perspective, every asset that we're building or every IPP piece that we're putting together has to look at evacuation being available now, not in the future. As you know, across the group, we control almost 15 to 20 gigawatts of infrastructure, connectivity, plug-and-play infrastructure. And that's one of the largest, probably amongst the top three in India. When we are looking at inorganic acquisitions, we're only buying assets in places where we see zero grid curtailment. It's a very prudent and healthy mix of being on the central grid as well as being diversified across state grids. For all our organic execution, we're setting up capacities only in places where the grid is fully available. Now, what is happening in many other companies in India, people talk about grid curtailment or people talk about grid not being ready. Frankly speaking, if the grid is not ready, why are you executing the project? Number one. And number two, where you are already seeing evacuation constraints, overloading, why will you go and add assets? So I think, India is adding almost 50 to 60 gigawatts of renewables here, which is phenomenal. Yes, we want to do more. The grid is a little behind in terms of that capacity. But I think the government is doing a phenomenal job. And I'm sure in the days to come, months to come, you will see a much better prudent mix. I think what becomes the challenge sometimes is everybody wanting to go into one area, one zone, one state, without understanding. It doesn't make sense. You've got to diversify. And there's no point pumping in more and more assets in one area where the grid is already overloaded. Secondly, you spoke about sometimes power rates dropping to zero. Again, that's primarily in solar capacity, where during peak hours, during the day, you've got so much solar that, which is plain solar, which is not BESS, which is not RTC, which is not hybrid, which is not wind energy backed. That's places, those are areas where at certain points in time, power prices are close to zero on the exchange. And, at least across our entire platform, less than 5% of our power is on the exchange. And all of that is only wind energy or RTC. We don't have any solar capacity to play on the markets. It's foolish to have unlocked, untied up solar capacity.
Wow. Okay. Interesting. Fair call. And point noted, Devansh, the optimism is shining through. You seem constructive, as you always been, on this whole renewable energy push and on the government policies as well. And therefore, I'm prompted to ask you one more question before we wrap up, which is while private equity investors and family offices have had a chance to invest in your firm, when does retail get to do that? Is there a listing on the cards for Inox Clean anytime soon?
Look, Neeraj, as you may be aware, we had filed for a confidential DRHP last year. We withdrew it because we thought the balance sheet scale and the opportunities ahead of us were phenomenal. Since then, we've made a total 10 acquisitions over the past 10 months. I think the balance sheet, as I mentioned, of Inox Clean is massive now. We're one of the largest integrated players out of India across 3 continents. Yes, we've raised significant capital across Enam, CalPERS, RJ Corp, Autumn, some of India's largest family offices like DLF, Hero, and so on and so forth. But I think we would eventually be looking at a listing. And I think in the months to come, you would be hearing on that front. We would be raising more capital in the ensuing period. And yes, I think this would probably be one of the largest, if not the largest, renewable IPO of India.
All the best for that. Looking forward to talking to you on that and more. But congratulations, Devansh. Great news and all the best for the quarters ahead.
Thank you, Neeraj. Pleasure being with you.
The pleasure was entirely ours. And Mahima, it's back to you. Fascinating conversation. Here's one guy who's actually doing large things on this space and completely unfazed by those conversations around maybe overcapacity, grid connectivity, etc. And of course, raising capital at higher valuations too.
Yeah, absolutely, Nina. Thank you so much, first of all, for taking that conversation ahead. And a lot of investor interest is coming in for the company. And as the management did mention, the fact that the listing could possibly be on the cards. So that was, of course, the management of Inox Group. But let's start digging in and start taking all your stock-related questions. The next one that we have is from Preeti, who's writing us from Raipur, asking about Avenue Supermarts. She wants to know if this is a good time to enter. By the way, on this side of the show, we're joined by Rajesh Bhosle, equity technical and derivative analyst at Angel One, who will be answering all your technical queries. So, Rajesh, I'll take this up with you. Do you think it's a good time to add Avenue Supermarts? Of course, the business update coming in was on a disappointing front, but what are the charts indicating?
So as of now, we would suggest to wait because in last two sessions we have seen a vertical fall, and if you see in a chart structure, there is a lower top, lower bottom structure. So possibly the stock can slip further towards the levels of around 3800. So as of now, we suggest to wait to fresh levels.
Right, the next query is coming in from Manju from Mysore. It's on Godfrey Phillips. She has bought 29 shares at a price of 3,512. What's the outlook on this counter, Samir?
So, unfortunately, with prices of cigarettes going up because of the increase in excise duty by the government, we believe volumes will have a bit of a slowdown in growth. They have very strong brands in the sense of Marlboro and things which will scale up over time. But I think you're going to have to bear a bit of pain for a little bit longer. Stay invested. I'm not saying to add more at this point. There's one more round of hikes of prices expected, and we want to see what impact that has on the volumes. But over a longer term perspective, we still remain positive on the entire space, whether it's Godfrey Phillips or ITC. We think the opportunity is still very large.
Okay, the next one that we have is on HEG. This is from Vithi, who's wanting to know from a short-term perspective, an entry at 520 makes sense into HEG. Rajesh, what would you recommend on the charts?
So we'll suggest to wait. This is a very volatile counter. Current levels to enter would be somewhere around 470 to 480, which is a very long-term support. As of now, the stock is in a consolidation. But if it dips towards 470, 480 levels, that would be ideal levels.
Okay, right. So the next query is coming in on MCX. Siddharth from Noida is holding MCX. He hasn't mentioned the quantity, but he has bought the shares at a price of 2,840, currently sitting on a minute gain. Technical insight on this, Rajesh?
So as of now, I'll suggest to wait. Recently the price has corrected somewhere around 2,700. There is a strong support for this counter, which also coincides with 89 EMA. And once the stock crosses about 3,000, we can expect momentum back towards 3,400. So as of now, keep watch on 2,700 as a stop loss. And once 3,000 crosses, the stock will resume itself.
Okay, all right. The next one that we have is from Gautam, who's writing us from USA. Wants to know the good entry point for Eternal for the next 12 odd months. On the charts, Rajesh, what would you recommend?
So the stock is already in a strong positive momentum. In last 1 week, we have already seen strong traction. If we get a dip towards 270 levels, that would be ideal. On the high side, with a perspective of 12 months, the stock can move towards 320 to 330 levels.
Next query is coming in from Jai Krishnan from Kerala. It's on CG Power. Wants to know whether is it a good time to buy this counter for the next 6 to 9 months. Rajesh, any view on CG Power?
This stock has been in a strong uptrend, but today it's under pressure. Possibly there can be further correction. If it dips back towards 820, which is its previous swing low, and 89 EMA, that would be ideal. As of now, there is some negative momentum, so wait for now.
Okay, all right. So that's the view coming in on CG Power. Of course, the stock is seeing pressure today on the back of the news that did come in from Ministry of Finance for a 2-year exemption for a lot of provision for public procurement from 4 companies. First, only 1 company was listed, and now 4 other names were listed. But I think we've got Praneeth, who's calling us from Hyderabad. Praneeth, very good morning to you. Go ahead, ask your question.
Hello. Yeah, good morning. And I'm having a query on Bank of Baroda. Actually, I've just bought yesterday in the fall itself, and I'm just willing to do the long term also for 2 years, and I'm holding 100 shares.
Okay.
So yes, yeah.
All right. Okay. I'll take this up with Samir. Samir, with the development that happened yesterday, do you think you should remain invested in Bank of Baroda for the next 2 years?
Yeah, I think you can stay invested. Look, it's a 1 quarter. I agree. It's a very big hit. 6,000, 5,700 crore hit is huge. But that is 1 quarter's net profit if you look at it from that perspective. So the profitability, either they will take the write-off in Q4 or Q1, that we'll get to know only after the results come out. But you will see that one quarter of the profit. So in the short term, what's going to happen is, the sentiment will turn a little negative. People, when they start projecting on full year FY27, the profits will be much lower. But the way I look at it is, this is a one-off. This is not a constant thing. The bank is growing at a decent pace. The NPAs are low. The price to book value is a little bit barely above 1. So there's limited downside for them. So if you stay invested for a 2 year, and once the profits come back to normal, barring this exceptional item, you will see the ROEs staying strong and the valuation re-rating is still possible on the upside. So stay invested and you will make returns at this point. In fact, if it goes down, I would strongly suggest a buy. And when we were on the earlier half an hour, somebody said a short-term target of 190. If it comes to 230, I'd be putting in a lot of money. I think it's very, very attractive at 230 levels.
So that's the view coming on Bank of Baroda, but it's time for a rapid fire round. Rajesh and Samir, keep your answers as short as possible. The first one is on NTPC Green. 706 shares bought since the IPO. Long-term view on this one, Samir. Continue to hold.
Hold on.
Rajesh, the next query is for you. It's on City Union Bank. Pakshal from Jodhpur wants to know whether should she invest in this counter.
Yeah, definitely can invest. 240 would be the targets.
Okay, Enviro Infra Engineers, is this the right time to enter? Rajesh, on the charts?
Engineers India.
Enviro Infra is what I'm talking about.
I'm not tracking this counter.
Okay, the next query is for you, Rajesh. It's on Vedant Fashions. K. Murli wants to know whether is it a right time to enter.
I would suggest to wait. Once it crosses above 430, then can enter.
Okay, the next one is on transformers and rectifiers. Bindu from Hyderabad wants to know if she can continue to hold this from a long-term perspective. Samir?
For me, it's a buy, not only a hold, it's a buy.
The next query is for you, Rajesh. It's on Epigral. A viewer has around 100 shares bought at a price of 1,136. Should he wait or book loss or add more?
I didn't get the symbol.
Okay, Epigral.
The symbol
as
is
of
also
now, wait. Once it crosses 1160, then enter.
Okay, the next one is on Brigade Enterprises. Our viewer wants to know if from a long-term perspective, is this a good hold? Samir?
You can hold on to it.
Okay, the next query is for you, Rajesh. It's on PC Jewelers. Astha wants to know whether is it a good time to buy this counter.
Yeah, definitely can buy. There's a fresh momentum. Possibly 12 to 13 levels can be expected.
PB Fintech is the next one. Rajesh Narayana from Guntur wants to know whether to continue to hold or sell. His buying price is around 1650.
Hold on to it.
The next query is for you, Rajesh. It's on Sterling and Wilson. Sriram Raghuraman is holding 150 shares, bought at a price of 228. Wants to know the view for the next 6 months.
Possibly 300 levels.
Tenneco Clean Air, a good buy right now, Samir, from a long-term perspective?
Which one?
Tenneco Clean Air.
Sorry, this one I'm not covering.
The next query is for you, Samir. It's on Kirloskar Brothers. The viewer is holding 300 shares, bought at a price of 2,180. Should continue to hold or not?
Hold on.
Okay, Info Edge is the next one. Lalita from Bengaluru is holding 10 shares at the levels of 1454. A good hold, Rajesh, on the charts?
Yes, hold on to it.
Okay, the next query is for you, Samir. It's on Aether Energy. The viewer is holding 500 shares at a price of 944. Should hold or accumulate or book profit?
For the next 1 year, book profit. But if you have a 10-year view, stay put.
Okay, long-term view on KPI Green. Suresh wants to know, can I buy at the current levels is what he's asking. Samir?
Yes, please go ahead and buy. Disclaimer, I have bought the shares yesterday itself.
Samir, the next query is for you. It's on Vedanta Iron and Steel. Balaji from Chennai is holding few shares. Should he continue to hold or exit? Samir?
I don't have a view on Vedanta and NST, so.
Okay.
The next one that we have is on Alchem Laboratories. Atul wants to know if a short-term target on this one. His buying levels is 5540 on the charts. Rajesh?
Possibly 5800 can be expected.
Rajesh, the next query is for you. It's on HFCL. Harsha from Belgaum is holding 200 shares, bought at a price of 81. Should he continue to hold or sell?
Hold on, somewhere around 230 levels.
Okay, Hindalco for the next 2 months. What's the view like on the charts, Rajesh?
Possibly bounce back is expected towards 1015.
All right, okay, that brings us to the end of this rapid fire round. Rajesh and Samir, thank you so much for taking out the time and helping us answer all those queries. With that, viewers, completely out of time on this edition of Ask Profit, but do stay tuned because KYC comes up next.
केसरिया से मन जोगी हुआ रे दिल झूमे देखो मतवारा हुआ रे केसरिया से मन जोगी हुआ
हर पल मनाओ केसरी त्योहार विमल बोलो जुबान केसरी. It is happening now. New tomorrows, new challenges. And all of it needs energy to work. Not afraid to imagine big. Because when energy stops taking, when it just gives, people can move. Really move. At this moment, the world's evolving. And so is energy. Suzlon. Good energies that work.
अंबा शक्ति प्लांट की वर्ल्ड रेनाउंड टेक्नोलॉजी देती है स्टील को ज्यादा ताकत हर बार. अंबा शक्ति SDTMT.
Hi, I'm Tamanna Inamdar. Watch me on NDTV Profit, where I break down the day's biggest business stories. What happened, why it matters, and what it means for your money.
Hi, I'm Neeraj Shah. Watch me on NDTV Profit for the most incisive market intelligence and meaningful corporate conversations.
And I'm Alex Matthew. Markets, mutual funds, insurance, personal finance. I help you cut through the noise and make smarter financial choices. And here's where you can watch us.
It is happening now. New tomorrows, new challenges. And all of it needs energy to work. Not afraid to imagine big. Because when energy stops taking, when it just gives, people can move. Really move. At this moment, the world's evolving. And so is energy. Suzlon. Good energies that work.
You founded this company in a way when you were 15.
I think everyone really started off as more so a project than a company. The very honest TLDR answer to why I started this company is it was just very boring during COVID. I didn't want to spend this extended summer break rewatching Suits for a fifth time.
There are now, at least, quite a few folks in India who are getting into the drone delivery space. What is disruptive about your version or your vision of drone delivery?
Our goal is to create a technology stack that leads to delivery drones that are orders of magnitude cheaper. We are actually shockingly close to being more cost effective than trucks, to being more cost effective than, let's say, a Tata Ace.
From a pet project to building a company which actually makes sense. You need someone to believe that this is a viable project, not a project, but a viable entity. Who was that person for you?
That was Grad Capital. So they were our very first check. They invested in me when I was 16. It only over time became apparent to me that nobody would have backed a 16-year-old that was still in school the way Grad Capital did. It was also a funny experience because Abhishek Sethi, the lead investor there, literally had to get on a call with my dad to convince him that you should let your son take this money.
How much of your formal education did you complete?
I did not go to college.
Why?
I think I felt there's nothing that, I can learn out of college that I couldn't learn myself.
India's unshakable news habit.
Hello and welcome to KYC, a show where we decode as to what is this company going to be all about, what the company has done in the past, and going ahead, what is that outlook going to look like with all their capex plans et al. First up, I'm sure everyone wants to guess what the company is all about. This is a company that we're talking to who's one of the leading paper manufacturing companies in India. Does this give you a clue? Not yet. 23% market share is what they command in the copier paper market. Copier paper is usually the Xerox paper that we use, the photocopy paper that we use, the printing paper that we use. That's what we're talking about. 23% market share. However, the stock is down nearly 40% from its all-time highs. Any guesses here? I'm going to reveal that up shortly. The company that we're talking about over here in terms of what this is all about, let's pull up that one on the screens and we will tell you. This is JK Paper. This is one of the leading companies that we've actually looked at since very long. All of us have been using this paper also in our day-to-day lives. Moving on, if you have to know more about in terms of what we should know over here, because the stock is kindly underperformed, let's look at the other aspects as well in terms of the company and the questions we have. One, strong volume growth is what we've seen. The question is, will we see that in the profitability and in terms of the margins as well going ahead? That's one of the key questions we have. Secondly, all the disruptions that have happened, from paper prices going down, especially from raw material prices which have gone up, have the disruptions bottomed out now from here on? Because the fourth quarter showed a significant improvement as compared to what the last couple of years have been. And from this down cycle, can JK Paper actually emerge as a stronger player, stronger contender, not only from a performance perspective when you talk about financials, but also for the shareholders? Apart from that, you're looking at the debt reduction. Now, the debt is pretty much reasonable. The question is, with the kind of capex plans that it has, does that also come in place? And in terms of capex, they've just commissioned one plant in Gujarat. We're going to talk about that as well. The cost synergies that are coming in on the back of the progress of this BCTMP plant, because that is something that will go ahead and aid the margins of the business going ahead. And overall, the milestones that would actually define successful FY27 for JK Paper and the years to come. What is that going to look like for the company? And very lastly, if you have to look at on the show who's going to join us, A.S. Mehta, President and Director at JK Paper, will be joining us to talk about all of this and more. But let's look at all the criteria that we're looking at. If you have to look at the parameters, we all know, usually we talk about the company first. First up, a company that is established in 1962, part of the JK group of companies, which is the JK organization. Overall, if you have to look at the company, it's evolved from a writing and printing paper company to actually packaging board. And that is also one of the moats that the company has, because that's a high margin business. The company is operating in an integrated paper mill in Odisha, Gujarat and Telangana. So these are few of the three regions where the company has presence in terms of the plants as well. And they own some of the most recognized paper brands in India. And that's what we were talking about, the Xerox paper, the printing paper. These are the brands that we look at in terms of what they own. Copier, Easy Copier, JK Cedar and JK Excel Bond. Moving on, apart from talking about the brands, let's actually talk about their leadership. Branded copier paper, the company is the market leader there. And if you have to look at other segments as well, It's amongst the top 3 integrated paper manufacturers in India, and this is by capacity as well as by sales volumes. The question is, when does this happen and translate into revenues, margins, profitability? If you talk about FY26, their paper and board sales actually reached a record of 8.19 lakh tons. Close to 8.2 lakh tons is what they've been able to achieve as well in terms of volumes and sales. And they produce close to 8 lakh tons per annum, and this is across the integrated mills that they are operating in the 3 regions, Odisha, Gujarat and Telangana. So this is all about JK Paper, but let's quickly give its rankings as well. Now, if you have to look at the criteria that we've picked up, first up is their capacity expansion that we're talking about, which has just come on board right now on the 30th of June. Income statement, balance sheet, cash flow, the others remain as is. We're not really going to look at the outlook of this company right now because we know what the company has done and everything relies now on the expansion and the fruits it bears for the company. Your return ratios, your shareholding pattern, street credentials and valuations as compared to its average and peers. First up, let's actually look at the first parameter that we are watching out for in terms of where the capacity expansion is concerned. Now, first, they've started the commercial production at the new hardwood BCTMP plant. And this is something that the investors were actually watching out for because this is backward integration. This will be margin accretive as well to some extent. And this is a bleach chemical thermomechanical pulp plant. So this is what BCTMP actually stands for. Moving on, if you have to look at the expansion plans, this is an advanced facility at the Central Pulp Mills unit, which is in Songarh, Gujarat. This is where it is located. And they've invested close to 650 crores to build this state-of-the-art plant. In terms of the benefits it has as well, production capacity of close to 1.2 lakh air-dried metric tons per annum. This is what you're looking at in terms of full capacity. This will boost the company's internal pulp making capacity. Now, because the pulp making capacity gets boosted, the raw material that comes in for manufacturing is what becomes cheaper. So it reduces the dependence on expensive and imported pulp that we're talking about. And very lastly, if you have to look at margin expansion, that's what we could see out of this as well. So a thumbs up given to capacity expansion. Now, moving on, look at the income statement, what's happened there. This is a thumbs down to some extent because if you look at the revenue, 3-year CAGR is 3%. Your EBITDA as well, no major improvement there. Margins, in fact, that has slumped from a 14% to a 13%. And your net profits have kind of halved. 412 crores in FY25 to almost a 241 crores in FY26. This is the FY26 picture, but I want to bring to your notice what's happened in the fourth quarter as well. The question is the fourth quarter a beginning to the growth cycle? 18% revenue growth, 26% EBITDA growth. Your margins have improved by 100 basis points, in fact, from the fourth quarter as compared to the FY25. And your net profits have seen a growth of 36%. So your Q4 has been slightly better as compared to the previous quarters and the previous year. So that is a positive slightly. However, look at the margin trajectory. 25 improved to 31. 23 was a very good year, but I think rest of it is history right now because it was the entire paper cycle which has gone down, which has impacted margins, and you've gone down to levels of what, 14 and 13%. Will FY27, because of the additional capacity, have something more in store for the margins? So thumbs down in terms of the margin trajectory so far. Apart from the margin trajectory, if you have to look at the other aspects as well, let's look at the balance sheet from here on. Now, there is some bit of strength over there. If you look at the borrowings have come down to from 1,700 crores to almost a 1,574 crores. The cash in the bank has increased as well substantially from 73 crores. It did dip in FY25. However, it's come back to 180 levels. So that is a positive. Equity is increasing along with your other equity, and the book value has also been on an uptrend. So a couple of factors which are positive. So it's a pretty neutral balance sheet that the company has been sitting on. So that's what you're looking at in terms of the balance sheet. Cash flow, a positive. That's the reason a thumbs up, because look at the improvement also in terms of the net cash flow. From 27 odd crores, your net cash flow actually dipped down to almost negative 45 crores. improved to 111 crores. So that is one of the key positives. And secondly, the flow to profitability also has been pretty good. And these are the two factors why we've given it a thumbs up as well in terms of the cash flow. Now the return ratios, again, a strong performance there if you have to look at, in terms of FY23 to 24, where if you look at the ROC, the return ratios have almost doubled. However, a slump and deterioration coming in terms of FY25 and FY26, and that is the concerning area. What is this telling you? That JK Paper was generating strong operating profits relative to the capital employed in the business, and the period is actually coinciding with a favorable paper cycle, better realizations, healthy profitability, and this I'm talking about 23 to 25. But the sharp deterioration that we've seen here is what is concerning. The question is what happens, because ROC below 10% is generally considered weak for a capital intensive manufacturing business, and the decline is indicating that this incremental capital that the company would have invested is generating significantly lower returns than before, and hence a thumbs down mainly on FY25 and 26. So that's with regards to where the return ratios are concerned. Now moving on, if you have to look at the other aspects as well in terms of the factors that we are considering, let's look at the next part of the shareholding. This is a thumbs up because your promoters have consistently increased stakes. So from a 50%, you've gone down to 53%. In terms of FIs and DIIs as well, substantial increase coming in terms of the shareholding. So this is a positive where your promoters, your FIs and DIIs have some trust and faith in terms of the stock as well. However, your public shareholding because of that has gone down from 37 to 29%. So retail is subdued because of the returns. Now let's look at the street credentials over here. In terms of street cred, again a neutral because it is negative, but a 2 to 3% decline is telling you that the stock really has not done anything. It's neither given any returns nor eroded that kind of value as well for shareholders, and hence we've given it a neutral rating. And if you see 1 year period as well, it's down 5%. Someone who's holding the stock for 5 years, 59% is the kind of returns that you've seen for a JK Paper, and hence a neutral rating there. Let's look at the valuations. Very interesting because it's cheaper as compared to peers. Andhra Paper 67 times, JK Paper 23 times, and this is I'm talking about the current PE. Now in terms of West Coast, both of them are at par. The reason why we are giving it a thumbs down is because a 23 times to a 5-year average of 9 times. That is telling you what's happened here. So way expensive as compared to its 5-year average, and as compared to peers as well. I mean, not done anything in terms of value for the investor. So hence a thumbs down in terms of where valuations are concerned at this point in time. So that's what we're looking at in terms of all the rating parameters here. But let's look at the final scorecard of what comes up for a JK Paper. Considering all the 8 parameters, a thumbs up on capacity expansion and cash flow. However, income statement is a down, balance sheet is a neutral. If you have to look at the other 4 parameters as well over here, you have return ratios, valuations, which is a thumbs down, street cred is a neutral, your shareholding is a thumbs up. This gets you to a total of, if I'm not mistaken, a 4 on 8, which is still very decent. A 50% there coming in from a total of 8. 4-star is the final rating. So that's what JK Paper is all about right now. But up next, before we slip into a short break, I'll tell you we'll be speaking to A.S. Mehta, who's the president and director of JK Paper, just after a short break. Stay tuned to Know Your Company.
केसरिया से मन जोगी हुआ रे दिल झूमे देखो मतवारा हुआ रे केसरिया से मन जोगी हुआ
हर पल मनाओ केसरी त्योहार विमल बोलो जुबान केसरी. It is happening now. New tomorrows, new challenges. And all of it needs energy to work. Not afraid to imagine big. Because when energy stops taking, when it just gives, people can move. Really move. At this moment, the world's evolving. And so is energy. Suzlon. Good energies that work.
अंबा शक्ति प्लांट की वर्ल्ड रेनाउंड टेक्नोलॉजी देती है स्टील को ज्यादा ताकत हर बार। अंबा शक्ति SDTMT।
It is happening now. New tomorrows, new challenges. And all of it needs energy to work. Not afraid to imagine big. Because when energy stops taking, when it just gives, people can move. Really move. At this moment, the world's evolving. And so is energy. Suzlon. Good energies that work.
You founded this company in a way when you were 15.
I think Ivan really started off as more so a project than a company. The very honest TLDR answer to why I started this company is it was just very boring during COVID. I didn't want to spend this extended summer break rewatching Suits for a fifth time.
There are now, at least, quite a few folks in India who are getting into the drone delivery space. What is disruptive about your version or your vision of drone delivery?
Our goal is to create a technology stack that leads to delivery drones that are orders of magnitude cheaper. We are actually shockingly close to being more cost effective than trucks, to being more cost effective than, let's say, a Tata Ace.
From a pet project to building a company which actually makes sense. You need someone to believe that this is a viable project, not a project, but a viable entity. Who was that person for you?
That was Grad Capital. So they were our very first check. They invested in me when I was 16. It only over time became apparent to me that nobody would have backed a 16-year-old that was still in.
Welcome back to Know Your Company on NDTV Profit, and I'm Hiral Dadia. Now we're talking about JK Paper as we know. A.S. Mehta, President and Director at JK Paper, joins in. Mr. Mehta, welcome to the show. Always a pleasure to speak to you. This is Hiral on this side. My question first up coming to you is...
Good morning.
Good morning. My first question coming to you is overall with regards to the commercial production which has started at the BCTMP plant. If you could give us more details in terms of what is the utilization going to look like in the current financial year and what is the ramp-up plan?
Okay, this pulp mill we have set up is for our packaging board plant because this is a special pulp which is called BCTMP, means the mechanical pulp, and it is a hardwood mechanical pulp produced from the local wood available. And currently, we are able to produce close to 80% of the rated capacity of this pulp mill. And going forward, in a few months' time, we should be able to produce 100% out of this pulp mill.
So, Mr. Mehta, from what we understand, because of this facility, this facility is more in terms of backward integration as well. And that is something which helps with all the volatility that you're seeing for, the pulp. What is the kind of benefits that you're going to see from a financial perspective?
See, ultimately, the BCTMP pulp mill, what we have put up is, rightly you have pointed out, to address the volatility of the global pulp prices. Pulp means, again, the mechanical pulp prices, because we have seen in past the amount of volatility. It was that at one point of time, the rate used to be $450 a ton and went up to as high as $900 a ton. So that kind of a volatility is very difficult to address and mitigate. So what we thought is that it is better to have a BCTMP pulp mill. And in fact, this was thought when we were putting up the board machine itself. It was only a question of time. We timed it in such a manner that it should be available in the year 25-26. In fact, we thought that it should be available in the year 25-26, but because of the global disturbances, in fact, some of the equipments were delayed, and we could commission it on 30th of June. Financially, I would say that when we produce our own pulp, then we don't have to dry it out. The liquid pulp can itself be used. And when we buy from the market, the market pulp is a dried pulp. So in fact, for anybody who is producing the pulp, drying it and shipping it out, I mean, at least $50 to $100 is the extra cost. $50 is just a cost of drying a pulp. So, I mean, even if it is the same cost parameter, everything remains the same. At least you save $50.
So help me understand, Mr. Mehta, historically, 100% of the mechanical pulp requirement was something that JK Paper was importing?
Yes, we were importing 100% for the packaging board, the mechanical pulp, which is close to 50% of the total raw material component.
Interesting. And this gets your dependence on imports down to 0%?
No, we still will need something around 20% for the mechanical pulp from the softwood. Because the mechanical pulp is the two component, hardwood and softwood. So in India, we can only produce out of the hardwood. So close to 30% our dependence will be, I mean, out of 50%, the 30% will be our own pulp now. So that means the 60%, the dependence has come down.
Understood. Now, my other question to you over here is, basis the 80% dependence which has come down, what is your analysis internally in terms of the cost save that you will have? Because, and compared to the investment that you've made to this plant, so analyzing the return on the amount, ROCs, and what are the returns looking like then?
See, when we conceived this project, our thought was that the return on this project should be close to 15%. So this is what I'm saying, that the return on invested capital of 600 odd crore. So 15% would be the return. And even today, my gut feel is that, see, we can't calculate this year over year. It has to be, because such kind of investment, the return is calculated on a long-term basis, because the pulp prices also, right now the pulp prices are close to $500 a ton. But on a long-term basis, we assume that the pulp prices behave around $575 to $600 a ton. So the return has to be calculated on a long-term basis. So my gut feel is that we should be able to have 15% return, the minimum, on a long-term basis.
And is there any risk when you talk about, anything that comes in through imports that could get cheaper, then your imports are acting up much cheaper than what you're producing in-house?
I would say that our cost of production is never going to be more than the imported pulp cost. Because at this point of time, the pulp cost at the lowest level, it has touched $450. And to my mind, our cost will not be more than $425 or $430.
Okay. So, that takes me to my next question in terms of the margin profile as well. There have been times where you've really gone beyond that 20-25% kind of a mark in terms of margins. It's come down to that 14-13% mark right now, and it's for obvious reasons, right? Do you think this backward integration will be able to get you back to that kind of a margin profile and the profitability profile that we've seen back then?
Please understand that the 25% the EBITDA or the margin, that time our total profile of the company was different. See, at that point of time, close to, I would say that 70% we were the writing and printing and the coated paper. Our packaging board was just 25-30%. Now, our writing and printing paper is not more than 50%. It is rather less than 50% now. So the 50%, rest 50%, we have either the virgin packaging board or we have the corrugation boxes, corrugation business. So the margin in corrugated the box business is lower. The packaging board is also lower, but these two, the segments, they are growing very well, and they are the growth engine for the company. So when you have a growth engine, the profit percentages or the margin would be lower. And that is why, since our mix has changed, the profitability, I would say that 25% or 26% is not doable. And we are fine, even if it is 22%, 20% margin, we should be very, very well placed on the cash flow generation, on the return on capital employed basis and everything.
So, absolute good clarification here that investors should not be really expecting the 24-25% because what is achievable is what is the correct number. My last question is, if as an investor, because they've not really seen returns in the last 1 year, right, from a stock price perspective, the question is, what are the milestones they should track, not only for FY27, but over the next 2 to 3 years to actually stay invested in a JK paper?
I would say that the investor would be interested in, one is that the what way the company is growing, what way the company is diversifying, and what are our future plans. So in fact, we have diversified, we have acquired the new businesses, and we have diversified in the growth oriented businesses. See, the writing and printing paper is not growing more than 2 to 3%. And we cannot remain with a growth of 2 to 3% in our own product category. And that's the reason that the virgin packaging board and the corrugation business or a monocarton, these segments are growing at very good rate of 8 to 9% or 10%. And so our plan is that we should have a growth minimum something around 10% over next 5 years. So see, a growing organization is the subject of interest to any investor.
So 10% is what you should be looking at as well. But thank you, Mr. Mehta, always for speaking to us. And thank you for sharing your views as well for all the investors, because it brings in a lot of clarity. And that's why we do this show as well. So that was the management of JK Paper talking to us about what the backward integration would mean as well. And overall, this is going to be something which will actually lead you to understand what could the return profiles look like, margins look like. But thank you so much, folks, for watching Know Your Company. Lots more lined up on the other side. Please stay tuned to NDTV Profit.
Superstar Stocks of the Day, presented by Tata Azura. हर रास्ते का सुपरस्टार.
केसरिया से मन जोगी हुआ रे, दिल झूमे देखो मतवारा हुआ रे, केसरिया से मन जोगी हुआ.
हर पल मनाओ केसरी त्योहार. विमल, बोलो जुबान केसरी. It is happening now. New tomorrows, new challenges. And all of it needs energy to work. Not afraid to imagine big. Because when energy stops taking, when it just gives, people can move, really move. At this moment, the world's evolving. And so is energy. Suzlon. good energies that work.
अंबा शक्ति प्लांट की वर्ल्ड रेनाउंड टेक्नोलॉजी देती है स्टील को ज्यादा ताकत हर बार। अंबा शक्ति SDTMT।
You founded this company in a way when you were 15.
I think Everyone really started off as more so a project than a company. The very honest TLDR answer to why I started this company is it was just very boring during COVID. I didn't want to spend this extended summer break rewatching Suits for a fifth time.
There are now, at least, quite a few folks in India who are getting into the drone delivery space. What is disruptive about your version or your vision of drone delivery?
Our goal is to create a technology stack that leads to delivery drones that are orders of magnitude cheaper. We are actually
Friday cheer on Dalal Street today with the benchmarks hovering close to the day's highs. Another day of gains for the IT sector as well as realty and pharma lead the gains. PSU Bank's energy on the back foot. HCL Tech surged on the top of the Nifty after winning a $1.14 billion deal to build an AI-led operating model for a Europe-based Fortune Global 50 client. A tale of two lenders. Union Bank shares slumped after a softer Q1 business update, while Bajaj Housing Finance reported strong disbursement momentum, steady AUM growth, and a 24% rise in the loan assets. A big boost coming in for India's defense sector may be around the corner. Sources say the Defense Acquisition Council could clear procurement proposals worth over 1 lakh crore rupees, with drones and ammunition high on the agenda. PB Fintech shares came under pressure after block deals worth 2.5% of its equity changed hands. The transaction follows reports that Merchant Investments was looking to reduce its stake. Gold is back in favor. Softer than expected US jobs data has cooled the rate hike expectations, lifting bullion to its first weekly gain in 5 weeks. Hello and welcome. You've tuned into Markets at 12. I'm Nisha Podar. Quick look at the markets, and yes, Friday is really bringing in a lot of cheer on the markets, and Nifty 50 is smiling pretty at this particular moment with good amount of gains, and that really, take a look at that particular chart. It's sustaining the gains throughout the trading session with no really doubt coming in the minds of the investors and traders in the trading session today. So comfortably above 24,300 level is really coming in as a good news. Sensex 2 gaining over about close to 500 points is also good news. Let's take a look at the internals. Of course, IT bounce back for the last two trading sessions has added a lot of momentum, because that was a spot of bother really coming in for the markets. And now that botheration and that particular overhang being out, that is really clearing the path for an overall participation. But if you really take a look at the broader markets, it's more the benchmark indices that are really performing well today, and that is coming in because of the contribution of some of the big heavyweights coming in. HDFC Bank looks like is also coming out of the shadow of the various uncertainties that has really plagued the company. And also remember, private banks have been also the quasi-investment into the economy for the investors. So HDFC Bank, ICICI Bank gaining the momentum on that one, and HCL Tech, Bajaj Finance also adding to the might. SBI, Axis Bank are minor laggards in trade. Anil Rego, the founder and fund manager at Right Horizons PMS, joins in now. Anil, pleasure to speak to you on NDTV Profit. What do you make of the momentum that has really picked up in the market today? Is the worst over now?
Yeah, so I think there has been some bit of a consolidation, after a good rally. Of course, the rally was significant on, say, small caps especially and mid caps as well. So it needed a little bit of a pause, and we've seen that, and maybe a fresh start from here. So we continue to be reasonably positive on the structure of the market, and yes, it's interesting to see that sectors like IT services, etc., also beginning to sort of join in, and that's sort of very good news for the market.
That's right. And Anil, from here on, now that it looks like the 24,000 level has been crossed for good, mostly the monsoon-related issues also looks like are tapering off in terms of the worries. How do you see that in terms of the earnings momentum coming in? We're just about to enter the earnings cycle. And then the crude prices also at about 70 odd levels, giving a lot of comfort. How do you see the scenario going into the trade in the next week and the next few sessions that we are really looking at?
Definitely some of the global aspects like crude, and coming off has been in line with a bit of a contrarian call that we had taken. And so we think that all of these will sort of become triggers for us. And hopefully, with some bit of additional supply coming in, that will be also weak, and we as a country will sort of benefit from it. That will also, inflation, etc. Then hopefully it'll have an impact there. I think it's important that also interest rates start cooling off a little bit, and that will give a bit of a perspective for investors as well and for companies. The other part is, yes, definitely all eyes are on the earnings growth. I would think that in a period where one had a lot of volatility and you had disruptions with respect to oil and pricing hikes, etc. I think even in that period we did not see really weak earnings growth. Definitely, it had come down a little bit from the previous quarter, but I think that is something which is very heartening. So from here, with some of these factors sort of going to the background, I think that we should see some bit of acceleration back on the earnings growth side, and hopefully, we'll also start seeing this attract foreign investors back to India as well.
That's the main point right now, Anil. If the foreign investors also return, and especially the crude oil prices and rupee depreciation were the key factors because of which the FIIs had really stayed off India for some time and in fact sold heavily in the last few months. Now their return is going to be extremely critical. At this particular point, Anil, which are the sectors you think are good for investment? And of course, the valuations have got beaten down because of the long tenor of uncertainty that was there. So what's really looking like a good prospect for a short-term kind of investment in terms of 1 to 3 years?
Yeah, so I think a lot of things are broadening right now, but I would still like to go for a medium term rather than a short term type of view. So right from, I think, seeing a little bit of a turnaround, one, say, IT services, if you ask me, short term. And so once it is coming out of a period of consolidation, hopefully, some of them will, come back. But I think the ones which we have been, consistent on, and we believe that will sort of do well, is looking at, say, the cables and wireless type of, sector. Now, they also are getting tailwinds from, a lot of the AI and, the infrastructure that is required for it out there, the data centers, etc. Right? So there are some of these sectors which we like, which are niche. Again, one looks at sectors like hospitals, which I think is less impacted by the global side as well. Okay, we like some of it. We like our own industry, which is asset management and sort of wealth management, and so that we think also will do well for us. Sectors like renewable energy, again, like I said, data centers, etc., and we've seen some bit of a hit out there. So I think, even renewable energy there. I think from here, we could also see some of the momentum coming back, maybe to even real estate, including.
It's already started, Anil, and we are getting some positive commentary when it comes to the real estate space also, and probably competition is also increasing, even in residential space. But more later, Anil, completely out of time on this particular show with the market discussion. Thank you so much for all your expert take coming in on the market momentum. All right, let's also move across to Carousel. That particular stock is under a slight bit of pressure, 1.3% down in trade. And let's get chatting with the management. Chirag Parekh, who's the chairman and managing director of Carousel, joins in. Chirag, pleasure speaking to you on NDTV Profit. Lots of news developments and a strategic shift. Give us a sense on what is the vision for the company from here on by striking off the subsidiary and also now fully focusing on the kitchen business.
Yeah, thank you, Nisha, for having us on the show. I think we are entering a very great, exciting phase of our journey. We have given a vision of Carousel 2.0, where we are planning to build, to see that another 1,000 crore, revenue. How does it come from? The order booking is healthy. The market demand is healthy across the export, especially Europe, US, and the emerging markets. The Indian focus is back. We are tremendously focusing on India. We also see a very healthy momentum in India. So I think our outlook is that we are seeing a good demand coming in by increasing our wallet share, not just in India, but also globally. As far as the ceramic tech is concerned, is that, this is just one of the subsidiary. We had thought that, if we have an opportunity to make ceramic sinks one day as a part of our portfolio, because we have granite sink, we have stainless steel, so why not ceramic sinks? But I think looking at the current volatility in the gas prices and the higher cost, I think we want to switch back to our focus on the granite and stainless steel.
Right. So that is a strategic shift, and you have given some buoyant, guidance also coming in, Chirag, for FY27. EBITDA margin of 18 to 20%, and in the last, numbers that you had given the financials for FY26, you already achieved the EBITDA margin of almost 20%. So what are the key drivers here and the factors at play for really sustaining the kind of EBITDA margin and profitability?
Yeah. You see, fundamentally, Carousel is a premium sink manufacturing company. We always position our brand not just in India, but also across the world. We do it as a premium. So I think that's number one. We do not run after the top line numbers, but we always try to see we want a profitable growth. That's one of our core value of the company. Two is obviously the US, the import, the tariff has been rolled back, so we will be rolling back the prices gradually. In fact, we have been rolling back the prices. Third is we've been constantly innovative new products, not just for India, but also for the export market. So that's going to keep us increasing our average price value realization. We are focusing not just on granite sink, but also on the stainless steel sinks. We are coming out with very high-end stainless steel sinks. Sometimes we have, some models we have stainless steel sinks, which people think is a commodity product. We sell some of the stainless steel sinks, like the workstation sinks, even higher than the granite sink prices. While we are focusing on this, we need to understand, and obviously the rupee depreciation is always helping to kind of improve our bottom line. But also we have a headwinds with the the crude oil prices, which is kind of pulling down.
So all this, Chirag, many factors are really now giving that momentum, and especially in the consumption space. Give us the geographical mix, but because of course now the strategic shift also indicates that India's consumption is really growing and it may become a much bigger portfolio for you. How are you really spread currently, and how are you seeing the strategic shift going on? Because you did mention that the consumption pattern is looking strong in India.
Yes. You see, currently we have a ratio, I would say international sales, not the export sales. The international sales to India is about 20%. If I say purely on a standalone granite sinks versus India, I think we have about a 30%. So let's say it's about a 20% market share in India. And I think we have been, I mean, asked again and again, why is not your focus on India happening as a Garrison brand? Is a great opportunity. I think our first priority was try to grab the international market share, which was easier just by, dropping prices, a larger, wallet share with the key customers. But we feel that the time for India has come because fundamentally the acceptance of the premium granite and the quartz sink or any kind of kitchen product is growing quite tremendously. And we are now starting a large momentum on brand building in India. We are expanding our network. We have about 5,000 dealers across India. We plan to expand to about 10,000 dealers in the next 3 to 5 years. We plan to open our 150 brand stores over the next 3 years. I think there's a lot of excitement for India, and that's why we had rolled out a 500 crore India plan. So in long term, I really want to see that the India market share grows to anywhere to 35% from the current 20%.
All right, so that's a big bump up that you're really saying. And also, Chirag, you're completely trying to reposition in kitchen solutions from sink manufacturer and trying to really cook up our kitchen budget pretty well. So that's the plan. All the best for that. And of course, that particular counter, take a look at that. In the mid-cap universe, that particular space, which is seeing some selling pressure, 1.5% down when we talk about Carousel. So management giving the outlook on how India portfolio is set to increase for them. All right, moving on then. Deutsche Bank's retail business sale to Kotak marks the latest foreign bank exit from India. What's really pushing the global banks to scale back retail operations? HSBC remains the only major foreign bank with a sizable retail footprint. Piyush is here to put more perspective into what's really transpiring. Piyush, tell us.
That is right. We have seen a spate of foreign banks exiting India, not now, but from the last 1 or 2 decades. We have seen latest, Deutsche selling their private banking, investment banking, and wealth management business to Kotak. Before that, in 2023, we saw Axis acquiring Citi's consumer banking portfolio. Citi's global management had, said that they need to focus more precisely on selected markets, and they proposed exiting from emerging economies, including India. So Citi had offloaded their consumer banking portfolio to Axis in 2023. Not just this, but in the last decade, and Commonwealth Bank of Australia had exited the Indian market in 2016. Royal Bank of Scotland had exited Indian market in phases between 2013 and 2016, and Barclays had shut down around 1/3 of its retail branches in India in 2012. Now, why are foreign banks going, exiting Indian markets? 3 reasons to be precise. First is on taxation. Experts say that, foreign banks pay up to 36.5 to 38.2% corporate tax in India as against private and PSU domestic banks who pay around 22 to 25% corporate tax. So there's a tax arbitrage between foreign and domestic banks. The other major component is that foreign banks don't really have a lot of retail deposits in India. They rely on institutional funding, and they can't really compete with Indian banks on retail products. So this competitiveness, heightened competitiveness in the domestic Indian market is something that they see. And the third factor is, of course, you know how the regulatory expectation and the guardrails that have been set for banks in India is pretty high. So the compliance cost for foreign banks also goes very high, if they have to conduct business in India. So taxation, competition, and of course,
deposit.
On the deposit, the cost of fund. These three factors combined are leading them.
All right, very well explained there, Piyush. So the three important parts are taxation, compliance, as well as the low-cost deposits from retail. And this, by design, looks like puts the domestic players at a much more strong position than the foreign players. But Piyush, stay on. You also have another story on FCNRB deposits that are seeing steady traction, with the banks raising $3 to $4 billion so far and expecting a stronger inflow ahead, aided by the RBI's hedging cost support and attractive interest rates. So tell us more about this as well.
That is right. Last month, the RBI had said that it will bear the hedging cost for banks who are raising fresh FCNR deposit from 3 to 5 year tenor. Now, banks, RBI had recently come out with a clarification also, where they said that they can give loans against such deposits as well. So some of the banks, small finance bank in particular, raised the FCNRB deposit rate to around 7.5%, and large PSU and private banks are offering up to 6.5% interest rate on FCNRB deposits. This is a very appealing instrument to investors, especially in the Gulf region. And according to industry estimate, there is around inflow of around 3 to 4 billion US dollars that banks have already got. And banks are also making their customers aware about this new FCNRB deposit scheme, because banks already offered FCNRB deposit, but with the RBI's bearing the hedging cost and these new developments, banks are making their customers aware about such a scheme, and they are expecting around 40 to 50 billion US dollars in overall inflows till September. They are expecting more inflows to come in from mid-July onwards and progress towards August-September period. We are aware, RBI has done this, has taken this measure to curb the fall in Indian rupee and attract US dollars and foreign currencies into India.
That's right. Whatever RBI, those steps that had been taken had some impact on rupee as well. Thank you so much, Piyush, for getting us both those stories. Take a look at rupee at the current moment, because it is critical for even the FII inflows to really come in. 95.25 is where rupee is against the dollar at this point. All right, moving on. A bunch of other stocks are in the spotlight today, which should be on our radar. And Jasmeet has really drawn up that list. Jasmeet, what all makes it to your list today?
Well, Nisha, thank you for that. Starting with the first one, I have Blue Spring Enterprise. Well, this company has been in focus on the back of that massive order wins it has been gaining. And even today, we see this company being in focus on the back of the order win where it has won from Vedanta, and the order is worth rupees 1400 odd crore. Well, this order is to operate and manage the power plant, and it's spread across the next 5 years. Now, in terms of the overall contract, the Vedanta contract for them will strengthen the overall span of how they are delivering the order, and also the spans in the market. Further, the recent order win that company won in the similar space was from Balco, where the order was over 2000 odd crore. And this order is won by company's arm, that is Temj. Now, the next one is HCL Tech. While the IT company stays in focus and is gaining in trade today, one of the most bust stock in IT pack. Now, the stock is in focus after its partnership with the Fortune Global 50 firm, and the order is worth $1.1 billion. Well, this order is spread across 5.5 years, and also it has an extension of additional 5 years at the end of the 5th year. Now, in terms of the order is for the deal transformation and to manage global digital workspace and the enterprise network. It's basically AI-driven operating model that a company will provide to its client. Now, while if you look at the order details, this is one of the first of a kind order for the company, and it's a new deal win. Now, the last one is Mahindra & Mahindra Finance. While this stock is in focus on the back of that quarter one update that they have given, we have seen that the strong growth in disbursement is up nearly 21% YY basis. While we also know that the overall AUM growth sees an uptick as well, up nearly 12%. While the collection efficiency have remained flat for the company, which is a key positive. And lastly, there is a slight moderation in the asset quality numbers as well. Well, these are the three stocks that are buzzing in trade on the back of that positive news flows.
That's right. And Jasmeet, you will agree that HCL Tech's AI-led deal is really giving positive momentum to the entire IT sector.
100%, yes.
Thank you. Thank you so much for that. And completely out of time on Markets at 12, but do keep it with NDTV Profit. Thank you.
Superstar Stocks of the Day, presented by Tata Azura. हर रास्ते का सुपरस्टार.
केसरिया से मन जोगी हुआ रे, दिल झूमे देखो मतवारा हुआ रे, केसरिया से मन जोगी हुआ.
हर पल मनाओ केसरी त्योहार. विमल, बोलो जुबान केसरी. It is happening now. New tomorrows, new challenges. And all of it needs energy to work. Not afraid to imagine big. Because when energy stops taking, when it just gives, people can move. Really move. At this moment, the world's evolving. And so is energy. Suzlon. Good energies that work.
आपका पार्सल फिर से हमारे घर पे आया है.
कुछ तो बात है इस दिल में.
माँ भी हमेशा पी-मार्क मस्टर्ड ऑयल में ही खाना बनाती थी. ये आपके लिए.
कुछ तो बात है इस दिल में.
P-Mark, the mustard specialist since 1933.
सरसों से सरसों.
अंबा शक्ति प्लांट की वर्ल्ड रेनाउंड टेक्नोलॉजी देती है स्टील को ज्यादा ताकत हर बार. अंबा शक्ति SDTMT.
India Inc.'s most respected names chose India Inc.'s best and brightest.
These kind of awards and jury lineup, you are truly giving it the right weightage.
I think it's heartening to see talent that there is across India Inc.
We should be awarding companies and individuals who have focused not only on growth but also on bringing good governance.
Be part of jury and vote on the people, the men, the women, the companies in India who have the right stuff is a great opportunity for us.
For us, the biggest thing is trust. That's what we provide.
We need leaders in India that can help take India being a global superpower.
We've got a fantastic jury and we've left all decisions to the wisdom of the jury.
Who will earn India's top business honors? Find out at the NDTV Profit Business Leadership Awards.
You founded this company in a way when you were 15.
I think everyone really started off as more so a project than a company. The very honest TLDR answer to why I started this company is it was just very boring during COVID. I didn't want to spend this extended summer break rewatching Suits for a fifth time.
There are now, at least, quite a few folks in India who are getting into the drone delivery space. What is disruptive about your version or your vision of drone delivery?
Our goal is to create a technology stack that leads to delivery drones that are orders of magnitude cheaper. We are actually shockingly close to being more cost effective than trucks, to being more cost effective than, let's say, a Tata Ace.
From a pet project to building a company which actually makes sense. You need someone to believe that this is a viable project, not a project, but a viable entity. Who was that person for you?
That was Grad Capital. So they were our very first check. They invested in me when I was 16. It's only over time became apparent to me that nobody would have backed a 16-year-old that was still in school the way Grad Capital did. It was also a funny experience because Abhishek Sethi, the lead investor there, literally had to get on a call with my dad to convince him that you should let your son take this money.
How much of your formal education did you complete?
I did not go to college.
Why?
I think I felt there's nothing that, I can learn out of college that I couldn't learn myself.
India's unshakable news habit. NDTV.com is India's #1 English news website.
Hi, I'm Tamanna Inamdar. Watch me on NDTV Profit, where I break down the day's biggest business stories. What happened, why it matters, and what it means for your money.
Hi, I'm Neeraj Shah. Watch me on NDTV Profit for the most incisive market intelligence and meaningful corporate conversations.
And I'm Alex Matthew. Markets, mutual funds, insurance, personal finance. I help you cut through the noise and make smarter financial choices. And here's where you can watch us.
Hello and welcome to NDTV Profit. You're watching Trending Stocks with me, Hiral Datia, and today we have Mahima Vajrajani who's standing at the profit market pit filling in for Sharad Dubey. Clearly, Mahima, good afternoon. It's interesting to see what's happening with the markets. Good 2 days that we've seen, and today you have come off the day's highs as well. What are the cues indicating for a Friday?
Right, so Hiro, as you rightly mentioned, it's holding about, the Nifty 50 is holding about the 24,300 levels, very slightly off from its day's high point, but, cruising over 0.8 odd %. The Bank Nifty, however, is reverse of this because it's under pressure. If you can try to pull up the Bank Nifty charts as well, down by about 0.07 odd %, almost at its day's low point, and we'll have to see as to how the fate fares here. But let's take a quick look as to what the triggers are. As Hiro mentioned, it's the third straight day where we are seeing gains for Nifty 50. If you take a look at the crucial support from here on, because it's holding the 24,300 levels in the July series, of course, like I mentioned, it's a Thursday where Nifty is seeing an up move, but support levels are anywhere between that 24,150 to 24,200 levels for the Nifty 50. The PSU Bank is what is putting pressure on the Bank Nifty as we speak. But in terms of the benchmarks, they are outperforming the broader markets. The broader markets continue to underperform the benchmarks throughout this week. In terms of the advanced decline ratio, it is in the favor of the bulls, but unfortunately the gap is narrowing by the hour. In terms of sectoral performance, Nifty IT, Pharma, Realty is shining in trade, but PSU is where, and energy is where we are lacking. Of course, the biggest news today: the Ministry of Finance has provided wider approval for Chinese OEMs, and a lot of capital good names is where we are seeing downtick in pressure. So that's with regards to where the markets go. But back to you in the studio for the watch list.
Thank you so much for that. And just before we go to the watch list, let's just pick up the sectoral heat map as well to see what's happening in individual sectors, because IT is what is in focus, continues for the third day. 3% up move coming in there. Healthcare is also out an uptrend. Probably healthcare pharma probably is the sector of the day today. Real estate continues to see the buying interest. Metals has seen a good trade after that slump. What's under pressure is the banking space, as Mahima was just mentioning. But apart from that, there's no other major sector which is under pressure. You have auto, which is absolutely on the borderline as we speak. But capital goods on the watch list first. Chinese OEMs have got a 2-year extension or not, and that is what is putting pressure on your Indian capital good companies as well. Hitachi, Siemens, all of them that are in focus under pressure. HCL Tech, it is playing the IT upcycle today, but along with that, it's got a 1.14 billion mega AI deal as well. Apart from that, DMA, the revenue growth has been below what the street was estimating in terms of the quarterly update that has come in. Union Bank, the credit growth has slowed down. That is what the numbers are indicating so far. Blue Spring, strong moves there on the back of an order win close to 1,400 odd crores. Apart from that, you have Adani Enterprises, a strong QIP subscription that you've seen on that counter. You have FMCG, which has been in focus over the last couple of trading days, and probably if the rain gods continue to shine, you will see that uptrend that will continue. And now you have Morgan Stanley, which has initiated a tactical buy ahead of the earnings season in terms of FMCG names. PC Jewelers, a 21% revenue growth is what they've achieved in the first quarter. That stock is up in trade. PB Fintech on the 1,741 crore block deal, that stock is in focus. Angel One, they've seen gross client additions that have risen in the first quarter, which is a positive as well. Bajaj Finance, the first quarter AUM has climbed 24%, again a positive coming in there. Strong volumes in terms of Indofarm equipment, and IFGL Refractors, Aegis Vopak, Sumitomo Chemicals. these three counters are actually trending in trade over the last 5 to 7 trading days, because you can see the gains that range between 12 to 30% respectively for these three counters. So that's what the watch list is looking like. But over to you, Mahima, to go ahead and take the rapid fire as well.
Right, Hiral, with regards to where, the rapid fire goes, we'll try to start it in a short bit, but PC Jewellers is the one counter, that remains in focus. And of course, we are now joined by Gaurav Sharma, who's going to help us with the rapid fire round. I'll start with PC Jewellers because I was talking about it, Gaurav. The business update, of course, was slightly disappointing, but I think the debt clearance part is what is exciting the street. Your quick view on the charts for PC Jewellers.
We don't prefer this stock as much because it has been a clear-cut underperformer. Yes, a reversal and a steep up move is what we are seeing today, as well as yesterday too. The stock has mounted higher. A further up move can be expected towards 12-odd levels, but still I would prefer Titan and Thangamalai from the jewelry space from the investment perspective.
All right. Okay. The next one is Angel One. If you can try to pull that stock up and see what it's doing in trade today, it's up 2.5% as we speak. Gaurav, any view on this particular counter or any other names in this space that you like?
We are optimistic on the entire capital market space. This stock too is pretty much encouraging. A further up moves towards 380-400 zone is pretty much likely. Apart from this, AMC stocks like HDFC AMC and MCX, the multi-commodity exchange, can also be considered.
Okay, what about Bajaj Finance, Gaurav? Because the business update came in today and we're seeing, gains coming in for this one as well. 1.8% of an uptick is what we're seeing right now. What are the charts indicating? Is it a good time to enter?
I would say if we get a level closer to 1000, that is the preferred range to enter. 940 to 1000 is the preferred range. Even though one can consider at these levels as well, the inflationary pressures and the risk of rising interest rates has faded out, which is pretty much optimistic and a good news for the entire banking and NBFC space. Can be bought at current levels. Immediate level of 1100 can be expected.
Okay, Indofarm Equipments is the other one where we've seen highest volumes today since a very long time now. Since the volumes have picked up, do you think that it did find its bottom and from here on the rally should continue?
Mahima, these are not nominal or the normal volumes that we are seeing. These are, 20, maybe 20 times higher volume. These are clear-cut institutional activity that we are seeing. Certainly, when such a spike in volume with such a rise in prices, this clearly indicates continuation of an upward move. So yes, one can consider buying at even these levels, but keep a cautious approach and do maintain a stop at 155 and look for targets close to 180 and 190 zone.
Okay, then the last one on the list is PB Fintech. Now, this one remains in focus on the back of a block deal. What is the action here with regards to where charts go?
Not at all impressive. We are maintaining a cautious view on it. The stock has not performed for quite some time. Better to avoid it at the moment.
Okay. The other one is the entire capital goods space, right? You have TD Power, Hitachi Energy, CG Power, etc. that have seen a significant downtick in trade today. And this is on the back of Ministry of Finance giving wider approvals to other Chinese companies. Any quick perspective on any of these charts? Because a lot of these names have seen significant momentum run up. Now, do you think that this could be a buying opportunity that they've cooled off quite a bit today?
Absolutely. CG Power is on our radar. A further decline towards 850 will be a very good chance to enter, and especially for those who have missed the run up earlier.
All right. Okay. So, of course, that brings us to the end of this rapid fire round. But Hiral, like Gaurav mentioned, CG Power technically looking strong, but overall, yes, the news coming in from the Ministry of Finance most certainly is a negative one for all the capital good names.
Absolutely a negative, from a 2-year perspective. But what is the solution that the companies will have is going to be the key. And it absolutely stands as a bull versus bear case scenario over here, because all of these companies have been in the uptrend in the last 1 year as well. well. What happens from here on is the key question I'm sure everyone has. But let's quickly understand what's trending on Google. I'm sure there are interesting names coming up there as we speak. Marico, the stock is down 1.5%, and Bank of Baroda as well. 3.5% downtick coming in on this one, and Bank of Baroda is for obvious reasons on the back of the fine that they had to pay in terms of the number that came in yesterday and the business update that has come in. Gaurav, on the charts, Marico, Bank of Baroda, are you seeing downward momentum, or do you think this downtick in today's session should be used as an opportunity to accumulate?
For Marico, yes, this is an opportunity to accumulate. It has among the best performing FMCG stocks, wherein most of FMCGs have underperformed or provided negative return. This stock has shown reasonable resilience and has performed from 680 to the today's high is closer to 880. So any decline from here on towards 800, 820 odd levels will be a very good opportunity. But same does not follow for the other stock. Bank Baroda is reeling under pressure, and still there is room of a further decline. So better to wait for some more time, especially for Bank Baroda. Even we prefer some other banking stocks like Indian Bank, State Bank, Canara Bank, that can be considered.
All right, okay. So that's, of course, with regards to where some of these banking names go. But, let's put focus and spotlight on Adani Enterprises. Now, it's buzzing on the back of, a great response, blockbuster response coming in for its QIP. And we have Varsha joining us to give more details on what's worked here.
Well, we all know the QIP, Adani Enterprises launched QIP of around 10,000 crore, which it has inched up to 15,000 crore. Now, if I were to talk about the indicative issue price, which it's around 2,883 per share. But as Mahima was saying that, this is, the response has been really great. If you see QIP launch draw blockbuster response to top global and domestic investors have been rushed in. Even issue was oversubscribed, which sees strong 3.8x demand when it comes to the base size. Also, marquee global investors have participated. They have received participation from global names like Capital Group, Goldman Sachs, BlackRock, Blackstone, and Nomura. And the issues have seen participation from virtually every major MF house. Just to name a few, you have HDFC Mutual Fund, ICICI Prudential, Kotak, Aditya Birla, SBI, Tata Mutual Fund. So this has been a blockbuster QIP, and all these funds will actually be used to for the project across the group business that the company has.
Right, Varsha, thank you so much for getting us those details. With that, let me also welcome in Narendra Solanki. Narendra, very good afternoon to you. Your quick view on Adani Enterprises.
Yeah, good afternoon. Definitely, there has been a very great response for the QIP, and I think this would help the company, to achieve growth momentum and execute the capex planned for the future growth prospects. So I think it's sentimentally a positive boost for the stocks. Now, coming to the recommendation, we do not have any active coverage on the stock, so cannot recommend on the recommendation side. But yeah, sentimentally, it's a very big, very good positive boost to the stock.
Okay, all right. The other one in focus is Avenue Supermarts. Now, of course, it did come out with its Q1 business update, and it's been on a disappointing front. The growth that has come in has been at around that 15% mark. The expectation, Q4 it did a growth of around 19%. The expectation were that it has to be either in line with that or maybe more than that, and that's what the street is not liking. Plus, the growth in terms of store has also lowered. It did, of course, post its highest ever growth in FY26, but that seems to be lowering in FY27, and that's probably something that the street is not liking. If you take a look at the last 2 to 3 days odd performance for Avenue Supermarts, it's been under pressure. I think brokerages are also calling out for the same thing. HSBC has maintained reduced with a target price of 3870. They're saying the revenue per square feet is down by about 3% according to their estimates, versus an uptick of 2% of what they were expecting. UBS says that revenue growth of 15% is disappointing. Citi has said that overall they remain cautious because of the same-store sales growth not picking up, and this is on account of rising quick commerce competition. Morgan Stanley says that a weaker than expected growth could lead to underperformance in the near term, but key monitorables could be how earnings panned out and how margins take over from here on. Plus, Macquarie has said that they believe same-store sales growth will moderate over Q4 levels as well, and Goldman Sachs believes that overall, despite of large store openings, I think end of Q4 FY27 and Q1 FY27 is where inflation has played its part, and that's why we're seeing the growth being moderated. So this is the overall view of the brokerages plus what happened with Avenue Supermarts in Q1. Narendra, your quick view on how you take this move coming in for Avenue Supermarts.
I think definitely optically the numbers were below expectations, especially if you see the Q4 numbers that were decent, and the kind of store additions happened last year. So markets were expecting that those stores would be adding to the top line at a much greater growth rate. So that has not happened. And in this quarter, the stores additions were also small, and the same store sales growth was also not up to the mark. So this both these things have led to the subdued growth and a disappointment for the markets in the near term. Right now, we have a hold rating on the stock for the same.
So that's with Avenue Supermarts. Narendra, a quick view when it comes to real estate as a space, because pretty mixed views coming in there where people are saying that registrations are increasing, your new launches are increasing, but there is a supply chain constraint that comes in as well. The index giving you returns right now, what would you advise investors to do, and any top picks here?
Right now, we are neutral to cautious on the sector. If you see the new launches, that has been decent. But if you also look at the data on inventory side, so the amount of inventories which were used to be at around 14-month levels has risen to around 18 months level. So that has been an alarming rise. And I think that is another key monitorable data which we need to monitor. And if it remains so at such high levels, then I think we might see some kind of a consolidation or a slowdown happening 2 or 3 quarters down the line. So I think we are neutral to cautious on the sector right now.
So that's the view coming in terms of real estate. Stay with us. In fact, we're getting in the management of Marathon Next Gen Real Estate. And the stock is in focus because they've signed a redevelopment agreement for a residential society in Mumbai's Versova locality. Now, the project has an estimated gross development value of over 450 odd crores, and it spans nearly 1.5 acres. The stock right now seeing marginal gains of around 0.9%. And to talk to us more on this development, Parmeet Shah, director at Marathon Group, joins in. Parmeet, welcome to the show, and it's always a pleasure to speak to you. This is Hiral on this side. My question to you is, good afternoon. 450 crores is what the GDV is looking like. What are the expected timelines when it comes to approvals, launch, and revenue recognition?
So we've basically just signed the development agreement, and we're looking at getting all the approvals in place in about 6 months. After which we can apply for RERA and hit the market in about 9 months or so.
So you are planning to hit the market over the next 9 months, but in terms of development and the planning that you have, what is the timeline that you're looking at in terms of revenue recognition?
Sure. So the revenue recognition, as you may be aware in real estate, comes at a later stage once we have incurred at least 25% of the project cost. So that, as I mentioned, in about 9 months, we hit the market, and then probably the entire project would be taking 4 years in terms of the construction. So a year into it is when we can start looking at the revenue recognition.
Okay. Parmeet, hi. Mahima also joining this side. Just taking a step back to try to understand, because, the entire space has gone through a tough time because of West Asia conflicts with supply chain disruptions, inflation in terms of raw material prices. How has that impact been like, and how much of it is already accounted for? And going forward, when do you start to see this easing out? What is the outlook like when it comes to raw material inflation plus supply chain disruptions that you face?
So, of course, it has increased our costs, in a significant way. So, since the West Asia crisis has happened. So, but, in the real estate industry, we are always used to externalities. We've gone through a lot, but we've always come out strong. If you look at the last few quarters, it might not be a great picture, but if we zoom out a bit more, it's always an amazing picture. In fact, it always surprises me how strongly the industry always bounces back and always performs. So I think we just need to zoom out a little bit, and we'll see a much more exciting picture.
The other factor is very recently I was speaking to another company in the same space and was trying to understand as to how the demand scenario is shaping up like in Mumbai, because there's demand for everything, right? For affordable, for luxury, for ultra luxury, etc. But most of this is going in the redevelopment side of business. So going forward, what is your capital allocation looking like? Is it going to be more focused towards redevelopment phases or new launches? What is the plan going ahead in FY27? 28, 2 years down the line as well?
Yeah, so we are actually, really focusing on redevelopment. Today what you're seeing is just the first step that we've taken. We've been working on it for many years now, and we've been exploring the redevelopment market. See, if you look at the trajectory of Mumbai, redevelopment is becoming bigger and bigger, as a sector for us, because that is where the land is. There is, probably about 15-20 years ago, we pioneered mill development, which was what took us to great heights. But if you look at it today, all such opportunities are sort of dwindling, and redevelopment is emerging as a tremendous opportunity. So that's the platform that we are trying to create. And as you can see, anyone who's driving around Mumbai, there are buildings, redevelopment projects happening, everywhere. And we are, very bullish on it, and we're exploring redevelopment, in a big way now.
Okay, so that's the story in terms of the MMR region. My question to you then is, 6 projects in Kanjurmarg is what you've acquired, 90% stake in Sunset Spaces as well. Then your merged platform holding is at around 418 acres. So if you have to look at the development potential of all of this and the monetization strategy for Panvel, Bhandup and Dombivli, what is that growth and expansion going to look like for a Marathon?
Yeah, that's a great question. So, these land parcels that we've acquired have been very long-running projects for us. There are hundreds of acres in a single location. So, of course, it has its own journey in terms of the monetization. It's not possible to monetize, in a very quick way. So at the same time, we are creating this alternate strategy, which is in redevelopment, where, we can be present geographically in many more areas, so that helps us in quick monetization, quick turnaround. So as the project that we are discussing today, it's something that's going to be done in 5 or 6 years. The rest of the projects that you mentioned, they are all 100 acre projects, where I can't give you a very clear timeline on when the monetization will happen, because they are very long-term projects for us. So we are, creating a really interesting basket, of complementary projects, which can really help boost our performance.
Okay. Apart from that, the question I have for you, Parmeet, is the balance sheet is now looking pretty okay. Profit record number, a good land bank that you're sitting on as well. The concern that investors point right now, or when we talk to analysts as well, is that the booking value is remaining relatively modest as compared to the developmental potential that the company has as well. So if you have to look at the project monetization, growth acceleration over the next 2 to 3 years, what should an investor actually watch out for? Is it going to be acquisitions or is it going to be execution?
I think both, both are equally important. When it comes to the bigger land parcels that you mentioned, that is where executions, approvals, those are the things that we really need to focus on, and we need to boost our performance in each of those. But at the same time, we have to look at new acquisitions, because as I said, the big land parcels that we have brought, that we are planning to bring into the entity, they have their own journey and they have their own potential, which we are going to fully optimize and fully, monetize. But at the same time, there are so many geographies in Mumbai for example, that we are not present in. So an equally important strategy for us becomes to start sort of exploiting our brand, to start becoming present in these other geographies where we don't have these large land banks. And redevelopment becomes a great option for us in all of those places, because we have a very strong brand. And in this particular kind of, project size, we are really becoming, a very attractive player for the societies to tie up with. So that's really what we are also going to explore. So it has to be a two-pronged approach. And both of these, avenues are going to bring us, tremendous performance in the coming future.
Right. But just one last question from my end, from an industry perspective. This is what I read recently somewhere, that, a person who's investing, especially in the Mumbai real estate, at the start of the project, by the time the project ends, the value at which, the person had bought it is kind of declining. There is a depreciating value that, he or she is. Is that reading correct, first of all? And if not, what is it looking like in terms of pricing?
That's a very, very, interesting point that you made. And that's honestly something that we have been reflecting on, but my take on it, my personal take on it is we actually have to zoom out a lot. Real estate cycles, they are 20, 30-year cycles, So if you, you would not have said the same thing in the early 2000s, right? That's when the market was, booming, everything went 10x, right? Since 2010 to around 2020, we have had a bit of a stagnation in prices, which is, due to a lot of factors, one of the biggest factors being the increase in FSI in Mumbai. The FSI in Mumbai was increased dramatically, and you saw the result of it, right? Everywhere around the city, you can see these buildings popping up, on small parcels, tall buildings popping up, right? So that's the trend that we saw in those 10 years. But, and now we have an entire generation that has started believing, what you just said, which is that, property prices, don't really increase. But I think that's a very short-term, view. Because again, if you zoom out, to 20, 30 years, the story looks very, very different. And what I can tell you, that what I'm seeing and what I'm sensing in the markets is since the pandemic, since the shock of the pandemic, over the last 3 or 4 years, the property prices across Mumbai have been increasing steadily. So now again, we are seeing a bit of an uptrend, but yeah, my overall take on this is that we just need to zoom out, and it's a very different picture.
Yeah, but Parveet, it always does not really account for the inflation, does not really account for the interest costs. So all of that is what our generation is actually thinking about. But optically, yes, you do see the growth right on it. But these two factors you have to consider, because that's when your yields look pretty much interesting. But we'll have a detailed conversation on that as well. But thank you so much for joining in. It's always a pleasure to speak to you as well. Completely out of time, viewers, on this edition of Trending Stocks with Mahima, the team that put the show together, and myself. In fact, lots more lined up on the other side. Please stay tuned to NDTV Profit.
Superstar Stocks of the Day, presented by Tata Azura. Har Raaste Ka Superstar.
केसरिया से मन जोगी हुआ रे, दिल झूमे देखो मतवारा हुआ रे, केसरिया से मन जोगी हुआ।
हर पल मनाओ केसरी त्योहार। विमल, बोलो जुबान केसरी।
It is happening now. New tomorrows, new challenges. And all of it needs energy to work. Not afraid to imagine big. Because when energy stops taking, when it just gives, people can move. Really move. At this moment, the world's evolving. And so is energy. Suzlon. Good energies that work.
माँ भी हमेशा पी-मार्क मस्टर्ड ऑयल में ही खाना बनाती थी।
कुछ तो बात है इस दिल में।
P-Mark, the mustard specialist since 1933.
बरसों से सरसों
अंबा शक्ति प्लांट की वर्ल्ड रेनाउंड टेक्नोलॉजी देती है स्टील को ज्यादा ताकत हर बार। अंबा शक्ति SDTMT।
You founded this company in a way when you were 15.
I think everyone really started off as more so a project than a company. The very honest TLDR answer to why I started this company is it was just very boring during COVID. I didn't want to spend this extended summer break rewatching Suits for a 5th time.
There are now, at least, quite a few folks in India who are getting into the drone delivery space. What is disruptive about your version or your vision of drone delivery?
Our goal is to create a technology stack that leads to delivery drones that are orders of magnitude cheaper. We are actually shockingly close to being more cost effective than trucks, to being more cost effective than, let's say, a Tata Ace.
From a pet project to building a company which actually makes sense. You need someone to believe that this is a viable project, not a project, but a viable entity. Who was that person for you?
That was Grad Capital. So they were our very first check. They invested in me when I was 16. It's only over time became apparent to me that nobody would have backed a 16-year-old that was still in school the way Grad Capital did. It was also a funny experience because Abhishek Sethi, the lead investor there, literally had to get on a call with my dad to convince him that you should let your son take this money.
How much of your formal education did you complete?
I did not go to college.
Why?
I think I felt there's nothing that, I can learn out of college that I couldn't learn myself.
India Inc.'s most respected names chose India Inc.'s best and brightest.
I'm delighted to be chairing a committee of such distinguished fellow businessmen, bankers. It's just lovely to be back on this NDTV jury. I have been a fan of NDTV for a long time.
Many of the nominees are extremely close together in terms of what they've done.
I think it's also important that how they are reshaping the industries, commercial activities which they are into. And it's a very judicious mix of people to choose from. My compliments to the team.
Who will earn India's top business honors? Find out at the NDTV Profit Business Leadership Awards. India's unshakable news habit.
Friday cheer on the Lal Street with benchmarks hovering close to day's high. Another day of gains coming in for the IT index and pharma as well leading gains. PSU banks and energy meanwhile on the back foot. And HCL Tech surges to the top of the Nifty in terms of the gainers after winning as a $1.1 billion deal to build an AI-led operating model for a Europe-based Fortune Global 50 client. A tale of two lenders playing out. Union Bank shares slump after a softer Q1 business update, while Bajaj Housing Finance reports strong disbursement momentum, steady AUM growth, and a 24% rise clocked in loan assets. A big boost coming in for India's defense sector may be around the corner as well. Sources, in fact, are saying that the Defense Acquisition Council could clear procurement proposals worth over 1 lakh crore rupees with drones and ammunition high on the agenda. PB Fintech shares come under pressure meanwhile after block deals worth 2.5% of its equity changing hands. The transaction follows reports that investor Macritish Investments was looking to reduce its stake. Gold is back in favor. Softer than expected US jobs data has cooled rate hike expectations, lifting bullion to its first weekly gain in 5 weeks. Good afternoon. You're watching Lunchtime Trades with me, Shreyansi Singh, and this is the show that's going to, over the next few minutes, get you a snapshot in terms of everything that is happening in terms of markets as well as the world of commodities. But first things first, let's kickstart the show by taking a very quick look at the markets then. And you do have a very interesting picture right now playing out when you talk about markets. So Nifty 50 trading close to its highest point, as you can see on your screens as well, just about off that high as well. When you talk about Sensex as well, Strong set of gains that you've seen coming in for the rest of the indices, the rest of the benchmarks, including Sensex up about 500 odd points. Third day of up move coming in the July series. And when you talk about Nifty Bank, that actually seems to be a tad bit under pressure as PSU banks drag, and we'll come to that in just a bit. But before we do that, let's quickly take a look at the entire sectoral picture that's quite interesting right now. So it's IT that is leading gains yet again, leading the pack with a 2.5% uptick coming in. Pharma in good shape, realty, metal, consumption, financial services name also in good shape right now. And on the back foot, like I mentioned, it's actually PSU banks that are trading with quite some pressure. Energy as well, really bucking the trend in an otherwise strong, resilient market. And speaking of resilience, let's talk about HCL Tech. That's up about 6.5% on the back of a $1.1 billion mega AI deal as well. And you do have a bunch of other counters from the entire IT pack that are in focus right now. So Emphasis as well, Coforge, Persistent, TCS, Oracle, all of those counters up anywhere between about 1.2 to 6.5% thereabouts. That's the kind of gain that you're seeing coming in. On some of those counters, when you talk about the mid-cap indices, you're seeing a little bit of an underperformance coming in as compared to the benchmarks, and that's been the case since this morning. Something like a Muthoot Finance, Aurobindo Pharma, Nalco, 361, L&T Finance, all of those counters still holding up in good shape. And when you talk about the list of losers, something like Hitachi Energy trading with a cut of about 8.5%. Union Bank on the back of its numbers that failed to impress the street, 6.5% downtick coming in on that front. And even when you talk about PB Fintech on the back of a block deal, seems to be quite taking it on the chin when you talk about that 5.5% downtick coming in when it comes to this particular counter. All of that said and done, though, let's quickly talk about the entire oil markets complex as well and commodities and get you some insights. But before we do that, let's quickly take a look at the entire picture that Citi is really mapping out. And against that backdrop, we'll get you all of those insights as promised. First, when you talk about Citi, they're seeing Brent prices at somewhere close to $60 for the year end, and that's something that they're outlining, which is quite lower than some of their previous forecasts and some of the brokerage forecasts previously as well. So it's clear that the war premium has really been taken out of the barrel right now, and that's something that Citi is highlighting in their note as well. They're also talking about how the Hormuz normalization is easing some of those supply concerns. That's something that you're looking at, shipping flows steadily returning back to normal, and that's possibly why that forecast has also been revised downwards. Oversupply risks also making it to Citi's radar, as they're pointing out that $60 a barrel forecast for the year end for Brent as well, and Middle East truce is really supporting a little bit of that bearish outlook as well. That they're also highlighting that said and done, gold prices in fact rising, moving close to about 2% higher right now. But first things first, let's kickstart the show in terms of the coverage on commodities right now. Dinesh Somani, founder of Pro IntelliTrade Services, joining us on the show right now. Mr. Somani, a very good afternoon to you. Not a very good afternoon when it comes to oil prices right now. And Citi thinks that it's going to be a lot of bad afternoons actually for oil prices by the year end. Let's kickstart the discussion by talking about that as well. What are you then penciling in by the way of prices when it comes to oil?
Yes, definitely it's a bad afternoon for crude oil prices, but it's definitely a good afternoon for the economy. As long as crude oil prices stays below $70 or even below $60, it is good for the economy. More or less, it was very much expected. Now we are back to the pre-war levels. It started from $66 to $64 and we are back to $68 right now. Saudi Arab has resumed the supply close to 90% where it was before the pre-war level. The crude oil prices clearly indicates that the geopolitical tensions are now easing out. The war situation is almost getting over. The ships are moving through the Strait of Hormuz, mostly the commercial ships. Overall, I think the market would be flooded by crude oil. Henceforth, the supply would be limited, the supply would be excess and the demand would be limited. Overall, I expect prices to move towards to $62, $63 from here onwards.
Absolutely. And, you know, Mr. Somani, it's actually quite interesting because it seems like we have a time machine, right? Like we've gone back to those pre-war levels when it comes to crude as well, when it comes to the forecast as well. We're talking about the same factors that we used to previously. So just wanted to get a check going. Do you think that the supply infrastructure worries when it comes to the ones that Qatar has possibly highlighted or the ones that some of these other countries and refineries have also pointed out in terms of infrastructural damage coming in from the war? Do you think that that is going to somehow cushion the blow coming in from the supply glut that we're penciling in?
Yes, definitely the supply which was there previously 120 days back would not be resumed immediately as of now, but I think it's almost 130 days and things are almost normalized now. Everybody wants to sell crude, mostly the Saudi Arab countries, because that's only the source of income from their side. So I think the supply would resume slow and steadily. And overall, we think the prices would be under pressure. There won't be any upside pullback rallies from here onwards. Probably at most we may test $72. That's the maximum, what I feel. As far as MCX market is concerned, I think 6800 level could be the probably upside. Downside, we may test 6150, 62 levels very soon.
No, absolutely, and thank you so much for highlighting that as well. Just wanted to try and understand what you think about gold as well right now. It seems to be sustaining that little bit of recovery that we saw coming in, and case in point being that it's going to be snapping a 4-week losing streak as well. What do you expect going forward?
Yeah, we already tested 3940 odd levels around, and now we are having a pullback of almost close to $250. We are close to 4200 level marks. In last 4 days, we have seen a jump of close to 6.5% as far as gold is concerned. The possibilities of rate hike are now diminishing out. It was 70-75% earlier. Now it is below 50%. I think inflation would ease out from here onwards, taking into consideration the crude oil prices. And I think probably there could be a good boost for gold oil prices from here onwards. We may see 43.50 levels very soon as far as gold is concerned.
All right, and in terms of fresh buys as well, Mr. Somani, what do you have in mind if somebody has been waiting just for the dust to really settle and some of that volatility to subside? Do you think that they should, look at fresh buys right now in this market?
Definitely volatility is going to be there because every now and there is a huge flow of news and the tweets. So overall, I think volatility is definitely going to be there. But if I look at the last 25 years of data as far as gold is concerned, every year gold has given a positive return. We expect 10 to 15% return this year as well. So overall, I think any dip around $4,100 could be a good buying opportunity for long term.
Absolutely, and thank you so much for highlighting that as well. Any other factors that make it to your list? Of course, there's the weak jobs data that right now seems to be acting as a trigger right now. Other than that, you do have the Fed expectations, isn't it?
That's what it is. The job data is cooling off. The June data came up at 57,000 odd job. The May was also revised from 170 to 129,000 odd jobs. So I think the situation is tricky right now. Unless and until inflation eases out there, I think we won't expect a further rate hike as far as the Fed is concerned.
No, absolutely. So it's inflation that is making it to your list, weak jobs data, as well as the Fed's, expectations in terms of those lower interest rates that would be increasing the opportunity cost. Is there anything else, by the way, of factors that makes it to your list lastly when it comes to gold prices?
I think we can add to it. I think central bank would also go in for a buying because prices are quite stabilized now. From $5,600, we were close to $4,100. I think central bank, especially China and other countries, would like to buy at this level as well.
All right, thank you so much for taking time out and joining us with that entire outlook also coming in when it comes to gold prices as well as oil as well. So there you go. That's what you should be penciling in at this moment when it comes to both of these commodities as well. But that said and done, let's also get you the word coming in terms of Deutsche Bank's retail business sale to Kotak that marks the latest foreign bank exit from India. What's really pushing global banks to scale back retail operations? HSBC remains the only major foreign bank with a sizable retail footprint. In fact, Piyush is joining in with some more details when it comes to this one.
That is right. Deutsche Bank has become the latest foreign bank to actually exit its retail business in India. It has sold its retail banking portfolio to Kotak Bank for around 280 crore rupees. We have seen earlier also how Citibank sold its consumer banking portfolio to Axis Bank in 2023. And before that, in last decade also, we have seen how Commonwealth Bank of Australia had exited Indian markets in 2016. Royal Bank of Scotland had exited India between 2013 and 16, whereas Barclays had actually shut 1/3 of its retail branches in India in 2012. Now, why the exits? There are three main reasons for it. First is taxation. Now, according to the Indian, tax laws, corporate tax for foreign banks has been set at around 36.5 to 38.2%, and domestic banks pay only 22 to 25% corporate tax. So this has been a long pending request from the foreign banks that India should consider reducing corporate tax on foreign banks. Second major aspect is that foreign banks don't really have a lot of retail presence in India. They don't have retail deposits as much as the domestic peers do. Their cost of fund is higher, so they can't really compete with Indian banks on India's retail credit market. Now, the third aspect here is that a lot of foreign banks also of late have been seeing, not just foreign banks, but Indian banking industry has seen a heightened regulatory supervision, the regulatory scrutiny on all the banks have increased quite a lot, and foreign banks feel that the cost of compliance with each of these regulatory guardrail is sort of too high. So these are the three major reasons that foreign banks continue to exit from India's at least retail market. They continue to invest significantly in attracting the wealth management pie that the country has.
No, absolutely, and Piyush, it is a busy day for you. Let's get talking about FCNRB deposits that are seeing steady traction as well, with banks raising $3 to $4 billion so far and expecting stronger inflows even going forward, aided by RBI's hedging cost support and attractive interest rates. Let's also talk about that bit.
Banks are continuing to register gradual rise in the FCNRB deposits from overseas clients. Till now, we are aware how in June RBI said that it will bear the hedging cost for banks to raise FCNRB deposit with tenor of around 3 to 5 years. Now the expectation was that for around 40 to 50 billion US dollars will come in from this particular scheme, and till now what bankers and the industry estimate suggest is that around 3 to 4 billion US dollars of FCNRB inflows have already flowed in. Bankers are on their part trying, raising awareness amongst customer about this new deposit scheme, because FCNRB deposits have been a product that banks used to offer from the start. But with this new scheme, some private banks, some small finance banks are offering 7.5% interest rate on these deposits. Large banks are also offering around 6.5% on such deposits. So banks are making customers aware about this new scheme and the incentive, the good interest rate that they are getting. Banks are registering inflows majorly from Gulf region, which has typically and traditionally also been a large source of FCNRB deposits for Indian banks, and the expectation that 40-50 billion US dollars of FCNRB deposit will come in is likely to be met, is what bankers are telling us at this moment.
Absolutely. Thank you so much, Piyush, for joining us with that as well. But let's also talk about Adani Enterprises that's in the spotlight after the company launched QIP to raise up to 15,000 crore rupees. And, let's also get in Varsha to get us some of those highlights in terms of the details on the fundraise here. Varsha.
Well, yes, 10,000 crore rupees QIP, and wherein company has inched up to rupees 15,000 crore. Now, where will these funds be used? Of course, to fund expansion projects across group businesses. Part of the money will also be used for a new PVC plant, and funds will support concession fee payment for a road project. But the important thing over here is, the interesting thing is, sources tell NDTV Profit that QIP launch draws blockbuster response. Now, top global and domestic investors rush in. Issue was oversubscribed, sees strong 3.8 times demand on base size. Marquee global investors have been interested, and leading Indian mutual funds have been backing this QIP. You have names like Capital Group, Goldman Sachs, BlackRock, Blackstone and Nomura have seen the participation. Issue also sees participation from virtually every major MF house. Just to name a few, you have HDFC Mutual Fund, ICICI Prudential, Kotak Mutual Fund, SBI, Aditya Birla, Tata Mutual Fund. All these mutual funds have the company has seen interest from them. Also, if you see, several institutions seeks larger allocation than available, and issue was subscribed within 48 hours from start of the road show. Total bids were estimated at around 3.8 times, and participation of investors suggests institutional appetite for Adani Enterprises QIP. So overall, a very good a blockbuster interest coming from the bigger institutional funds in this QIP.
Absolutely. Thank you so much, Varsha, for joining us with that entire bit of information coming in as far as the Adani Enterprises is concerned. But let's also move on and get you an important piece of information coming in, an important bit of commentary on that as well, because you do have meaty probed Chinese battery applications, BAT, BMS and epoxy iron after viral e-rickshaw shutdown and as well prank videos that raised safety concerns and have been taken down from App Store and Play Store. Let's go across and listen in to what exactly the commentary from the Secretary is coming in from that at a CIA event.
That is right. I mean, there are a couple of apps which came up to our notice yesterday, and both of them have been taken down from the app stores. The point is that, this is due care that the app stores have to exercise, and we will take it up with the app stores to see that, possibly damaging apps do not come up. I have no comment to make. I mean, we have taken up the issue of using usernames because there is a serious possibility of impersonation, and there is the kind of encouragement that it provides or the facility it provides for committing more cybercrimes, which is a very serious issue. The Supreme Court, in the case relating to digital arrests, has taken up that matter, and this is another dimension of the way that cybercrimes can be committed, which is the reason why we have directed WhatsApp to explain why they have this feature, and likewise we have similarly sought explanations from others. So that is the status.
Alright then, so that's some serious commentary coming in when it comes to Meaty as well, and let's recap that little bit of commentary as well and put it in the context of everything that has happened thus far as well when you talk about WhatsApp. Now, WhatsApp this week had received a notice coming in from the government saying that these are the concerns, and some of those concerns are being voiced out in that opinion that we played out for you as well. Number one is that there's a serious possibility of impersonation, which is something that featured in the notice to WhatsApp. Other than that, usernames provide facility for committing cybercrimes, also a concern that was highlighted previously to WhatsApp as well. And continuing with that, another dimension in the way of committing cybercrimes, and that's the clear commentary coming in from the Meaty as well. But let's also move on and get you the word coming in from our sources as well. The Defence Acquisition Council is expected to take up procurement proposals worth over 1 lakh crore rupees at its meeting today. NDTV's Associate Editor Rishabh Pratap joining in with some more details here.
This is going to be one of the very, very important Defence Acquisition Council meeting that is expected to take place around 12 p.m. today in Delhi. And what's on the table? About 1 lakh crore worth of equipment is what we are looking at. And that's why we say this is one of the important meetings that are taking place in recent times. For Indian Army, if we go, and we are going by one, let's go one by forces. For Indian Army, we are looking at K9 Vajra self-propelled artillery guns. Remember, the howitzers have worked really well for Indian Army, and that's why K9 Vajra is, being looked at. Kamikaze, or for that matter, the loitering drone. In Operation Sindhu, they were the game changers, and we are seeing increasingly in, the current geopolitical situation, how kamikaze drones have been very, very important. Then you have Varva manpads, as well as you have APS for armored vehicles, and these are the reasons that we are looking at and important features that are being added to Indian Army. For Indian Navy, you are looking at anti-submarine, anti-mine equipment. We are also looking at unmanned surface vehicle. We are also looking at torpedoes and other firing equipments for Indian Navy. That is very, very important. Then you have long-range missiles.
And then that's the entire word coming in from there as well when it comes to this development. But let's talk about something like a Tata Steel that's standing out with that 1.2% gain, 1.7% gain coming in. And Hinsink as well on the back of its business update, that's also one counter to look at. It's doing quite well for itself right now in trade, 2% uptick coming in on this particular counter. But let's put all of this in context. Talk about some of the stocks that are buzzing away in trade on the back of the updates coming in from the metal and mining pack as well. And Parth is joining in with that bit of information.
Yeah, sure. So we've got three interesting names, starting with Coal India. So the coal supplies to power plants saw a growth of 5.9% year on year to reach almost 51.5 metric tons in the month of June, and saw a growth of 1.2% year on year to reach almost 152 metric tons in the first quarter of FY27. Overall, the coal supplies saw an increase of 7.5% year on year in the month of June, and saw a growth of 3.5% year on year in the first first quarter of FY27. Now Coal India is targeting production of 815 metric tons and a supply of 850 metric tons in FY27. Moving on to Hindustan Zinc, the company achieved the highest ever first quarter mined metal production for the 5th year in a row now. The mined metal production reached a record 268 kilotons in the first quarter of FY27, growing 1% year on year, which was driven by better ore grades. And also the silver production was largely flat in the first quarter of FY27, which stood at 149 tons, and so it was basically flat, declining marginally by 0.4% year on year. And lastly, we have Sambhu Steel Tubes, which again recorded the highest ever sales volume in the first quarter of FY27, and this was thanks to the higher value added products that the company was able to achieve sales of. The value added product volumes grew 27% year on year to reach over 1 lakh tons, and the strong growth was seen in pre-galvanized coils and pipes, which jumped almost 50% year on year, and stainless steel coils as well, which saw a growth of 56% year on year. Overall, the sales volumes remained stable despite the disruptions that this sector was facing industry wise as well. So these are the three biggest updates from the metals and mining sector.
And thank you so much, Parth, for joining us with that update coming in. Hind Zinc up about 2% from that entire pack as well. But let's also keep an eye on the sky as we wrap the show. The Indian Meteorological Department has issued an orange alert for Mumbai and 3 neighboring districts as heavy monsoon showers continue to batter the region. So Thane, Palghar and Raigad are also under alert with forecasts of moderate to intense rainfall at isolated places. Authorities have warned of possible waterlogging, traffic snarls and high tide conditions in some of the low-lying areas, and residents have been advised to avoid unnecessary travel and remain alert. And there's one other kind of advisory as well. Maximum city minimum infrastructure is something that we've seen play out in the last 3 days as well, with more than 3 deaths in just the last 3 days when it comes to the monsoons, and they've claimed 3 lives thus far as well. And that's the entire update coming in. Right now, the IMD is predicting an orange alert as well. And with that, we're completely out of time on this edition of the show. Thank you so much for tuning in.
Co-powered by Suzlon, good energies that work. Superstar Stocks of the Day, presented by Tata Azura, Har Raste Ka Superstar.
केसरिया से मन जोगी हुआ रे, दिल झूमे देखो मतवारा हुआ रे। केसरिया से मन जोगी हुआ।
हर पल मनाओ केसरी त्योहार। विमल, बोलो जुबान केसरी।
It is happening now. New tomorrows, new challenges. And all of it needs energy to work. Not afraid to imagine big. Because when energy stops taking, when it just gives, people can move. Really move. At this moment, the world's evolving. And so is energy. Suzlon. Good energies that work.
आपका पार्सल फिर से हमारे घर पे आया है।
कुछ तो बात है इस दिल में।
माँ भी हमेशा पीमाक मस्टर्ड ऑयल में ही खाना बनाती थी, ये आपके लिए।
कुछ तो बात है इस दिल में।
PMark, the mustard specialist since 1933.
सरसों से सरसों।
You founded this company in a way when you were 15.
I think Airbound really started off as more so a project than a company. The very honest TLDR answer to why I started this company is it was just very boring during COVID. I didn't want to spend this extended summer break rewatching Suits for a 5th time.
There are now, at least, quite a few folks in India who are getting into the drone delivery space. What is disruptive about your version or your vision of drone delivery?
Our goal is to create a technology stack that leads to delivery drones that are orders of magnitude cheaper. We are actually shockingly close to being more cost effective than trucks, to being more cost effective than, let's say, a Tata Ace.
From a pet project to building a company which actually makes sense. You need someone to believe that this is a viable project, not a project, but a viable entity. Who was that person for you?
That was Grad Capital. So they were our very first check. They invested in me when I was 16. It only over time became apparent to me that like nobody would have backed a 16-year-old that was still in school the way Grad Capital did. It was also a funny experience because like Abhishek Sethi, the lead investor there, literally had to get on a call with my dad to convince him that you should let your son take this money.
How much of your formal education did you complete?
I did not go to college.
Why?
I think I felt there's nothing that, you know, I can learn out of college that I couldn't learn myself.
India Inc.'s most respected names chose India Inc.'s best and brightest.
These kind of awards and jury lineup, you are truly giving it the right weightage.
The eminent juries who are here, and that itself speaks for the commitment towards highlighting the advantage which India is having. What I am looking for in this is that we should be awarding companies and individuals who have focused not only on growth but also on bringing good governance.
Be part of jury and vote on the people, the men, the women, the companies in India who have the right stuff is a great opportunity for us.
Who will earn India's top business honors? Find out at the NDTV Profit Business Leadership Awards. India's unshakable news habit. NDTV.com is India's #1 English news website.
Hi, I'm Tamanna Inamdar. Watch me on NDTV Profit, where I break down the day's biggest business stories. What happened, why it matters, and what it means for your money.
Hi, I'm Neeraj Shah. Watch me on NDTV Profit for the most incisive market intelligence and meaningful corporate conversations. And I'm Alex Matthew.
Welcome, you're watching NDTV Profit. I'm Mahima Vajrajani and we're putting spotlight on Kusumgar Limited. Now this is a company that's set to come out with its IPO. It's an interesting company because it is into engineered fabrics. So the fabrics that are used in defense, aerospace, etc. is something that this company manufactures. So it's a very, it has a very high level entry barrier in terms of competition as well. So one of a kind, as we speak for the company. And to, take this conversation ahead, we're now joined by Ankur Kothari, who is the CEO of Kusumgar Limited, joining us now. Ankur, thank you so much, first of all, for taking out the time. My first question to you is that this IPO that you're doing is completely offer for sale. So what is the idea behind that? And post the IPO, how do you plan to proceed with the company?
Thanks, Mahima. Thanks for your kind words. The company is targeting an offer for sale because the company's for the current growth plans, we are fully funded. We have been able, the cash that has been generated in the company over the last few years, we have been able to fully fund our growth, and that's why the current issue is OFS. In the future, we intend to continue investing into our core capabilities in engineered fabrics as well as aerospace and defense solutions, and continuing to grow from there.
When I was looking at your financials, Ankur, FY26 revenue and profit both, in fact, saw a lower growth as compared to where it was in FY27. Was this on account of the geopolitical uncertainty with prices also going high for you, or was there other reason behind it?
So I think it's a little bit of, a couple of things, Mahima. I think partially we were affected by certain delayed orders from some of our defense customers. And at the same time, the tariffs that were imposed by United States also did affect our revenues. However, I am pleased to say that that's behind us, both in terms of our defense orders and resumption of our sales to the US market. We are back on track and looking at strong growth ahead.
Well, that was the management of Kusumgar. The company will be launching its IPO very soon, so keep an eye out for that counter. But when it comes to the small cap space, it's been a good day. Nifty has been gaining for the third consecutive session. We have seen some profit booking coming in from the day's highest point, but still we are 120 points up in trade. And this is largely led by the IT names, because in the banking names, it's only the private banks which have been gaining. PSU banks have been a laggard in trade. When it comes to the small cap space now, specifically on the gaining side, we have companies like IQ Tech, which is up nearly 15% on the back of strong volumes. TPL Plastics, Solar World Energy, HT Media, Digitite Solution, and we'll be talking about most of these companies on the show today. But these are the top gainers that I'm seeing. Apart from that, there is Spandana Spurti, Patel Retail, which are also up close to around 11% in trade. On the losing side, we have National Standard India Limited, which is down 19%. Wheels India down around 9% in trade. Confidence Petro down 6%. Fridun Pharma down around 6%. Then we have IOL Chemicals, CSM Technologies, Neon Corp, which are down anywhere close to around 5% in trade. But let's get a view from Lancelot on how's the market looking like currently, given the fact that we have been gaining for the third consecutive session. A lot of buy flows or value picking coming in the small and mid cap space as well. Anything that looks attractive to you, Lancelot?
So at the moment, the market is sort of reacting to the fact that crude oil prices have come down. We have seen some amount of, macro improvement. GST numbers were up, collections were up. And I think the monsoon also has begun, and maybe there is a, hope that it will continue to remain firm and maybe make up part of the deficit that was there in the previous months. And so with a lot of positive sentiment, we are seeing some improvement in the market sentiment as well. On the valuations front, I think we should be expecting, better results from the companies, and a lot more will be known once the quarterly numbers are out in this March and for the June quarter, and the companies then announce their outlook or change their outlook for the coming year. The numbers on the auto side have been encouraging. We've seen growth in the auto numbers, which is good for the companies in that sector. So all in all, there is growth coming back, and that is driving valuations. In terms of looking at sectors which can outperform over the next 12 to 24 months.
All right, got that view. Well, Solar World Energy Solutions, that let's pull that chart up, because the stock is buzzing, of course, on the back of strong volumes. If you see, we have seen it shift. There you go. The stock is up almost 13%, but we have seen renewables shift to storage. Industry is moving beyond just adding solar capacity, and focuses now on reliable power supply and grid stability. Now, where does solar energy solutions stand here? If you see, the current order book stand at around 2,800 odd crores. Solar EPC and O&M account for almost 1,600 odd crores, and that BES and related projects account for almost 1,100 odd crores. This company also, if you see, BES is the next leg of growth. Well, we have seen a strong revenue visibility, because management is expecting almost 70 to 75% of backlog to be executed in FY27, and this translates into a potential revenue of around 1,900 to 2,000 odd crore. Also, they are also betting big on battery energy storage system. They want 60 to 40% mix between BESS and their solar EPC work. And BESS is expected to become the second growth engine, as I was saying. Even management is expecting storage as a key part for their energy transition. Now, onto the solar EPC momentum, if you see, they won a 260 megawatt solar package from NTPC, which is in Bikaner. Also, the order value, if you see, stand at around 200 odd crores. Capacity addition, let's pull up that graphics also. If you see, they've completed capacity which is yet to reflect projects nearing commissioning, and FY27 they're expecting BESS revenue to be around 800 to 1,000 odd crore. Lancelot, coming to you on the Solar World Energy Solutions, we've seen a good spike in this stock today. What's your view on the overall sector plus on this counter, and what should investors do?
Yeah, so Mahima, I think the sector has got a lot of impetus, both from the government side as well as from private sector, especially given the shock that we got in terms of rising oil prices and energy prices. It has sort of hastened the need to move to alternative energies, and that is driving up. It's good for the EPC companies because they are getting more orders. And like you see, Solar World also has got a significant order book growth. The turnover in the last year has jumped quite a bit from the previous years, and it's expected to grow at maybe 20-25% going forward, given the background of orders that they have. I think the area of concern comes in how they manage the working capital, because with an increased order book, if the working capital, both as far as debtors as well as stores, etc., gets extended, profitability could take a little bit of a beating. So that's a key thing that we need to watch out for. On a valuation perspective, it's trading at about 15 times earnings, which is fairly reasonable for a company that's growing its revenues by 25-30% a year. And the key is to see how the working capital impacts the profitability going forward.
Right, the next stock that remains in focus is Digitide Solution. The stock is up, I believe, around 30% right now in trade, and this is on the back of very strong volumes. If you look at the volumes, they are nearly 70 times their 20-day average. So strong volumes are leading such gains. But let's get in Shivam to understand what does the company do, and is there any potential reason behind this move?
The company is trading at a 4-month high due to the surge in volumes, which has been highest since its listing in June 2025. And regarding the company, Digitide Solutions provides the AI-led digital solutions, data intelligence and business process services to its customers. And if we talk about the recent management change, the company has appointed Samir Ahluwalia as CEO and Managing Director of the company. And with this appointment, the company objective is to grow global business growth and also to improve on the AI-led transformation path. Apart from that, if you look at the Q4 results, the growth in we have seen a 9% of growth in revenue, which was mainly led by its tech and digital solutions business. And in terms of international business too, we have seen a growth of around 16%. Operating cash flow of the company has remained strong in terms of if you see it in terms of percentage to EBITDA, it comes at 165%. Although the EBITDA has remained flat on quarter basis, but we have seen an improvement on YY basis of around 7%. The margins were also slightly offset by the labor codes, and the net impact of the labor codes was around 4 crores, and higher finance cost has also impacted the PAT growth, and that's why we are seeing a net loss of the company, which stands around 5 crores for the Q4 of FY26. Now the total contract value of the company stands at 620 crores in Q4, and the business pipeline involves a stronger hyperscale scalers companies such as AWS, Google Cloud Services and Microsoft. Apart from that, if we talk about the outlook of the company aims to grow 2 times faster than the market and expects around 200 to 300 basis points of movement in EBITDA margin going forward. Also, the company has 2 to 3 acquisitions planned for FY27 and till FY30. And if the revenue target of the company is at $1 billion, which will be supported by inorganic growth, and 200 million will be the inorganic growth amount by FY31. Apart from that, if we look at the stock's performance on 1 week and 1 month basis, the company has given a positive performance, while on year till date basis, the company's performance remains tepid.
Okay. Well, a lot of things going on when it comes to Digitide, Lancelot. Have you looked at this counter? Would you recommend this stock to your clients at current valuations?
The current valuation is trading more than 145 times its earnings. Even on a price to book value, it's expensive. And, the business that they are doing is a lot similar to most of the other companies, is, what they're doing. So unless we see some sustained profitability or revenue growth coming in, I think it's best to avoid at this point in time.
Well, before we move on to our next small cap stock, let's get into a short break, and then we'll address more counters post that.
केसरिया से मन जोगी हुआ रे दिल झूमे देखो मतवारा हुआ रे केसरिया से मन जोगी हुआ
हर पल मनाओ केसरी त्योहार विमल बोलो जुबां केसरी
It is happening now. New tomorrows, new challenges. And all of it needs energy to work. Not afraid to imagine big. Because when energy stops taking, when it just gives, people can move. Really move. At this moment, the world's evolving. And so is energy. Suzlon. Good energies that work.
माँ भी हमेशा पी मार्क मस्टर्ड ऑयल में ही खाना बनाती थी
कुछ तो बात है इस दिल में
B-Mark, the mustard specialist since 1933.
सरसों से सरसों
You founded this company in a way when you were 15.
I think everyone really started off as more so a project than a company. The very honest TLDR answer to why I started this company is it was just very boring during COVID. I didn't want to spend this extended summer break rewatching Suits for a fifth time.
There are now, at least, quite a few folks in India who are getting into the drone delivery space. What is disruptive about your version or your vision of drone delivery?
Our goal is to create a technology stack that leads to delivery drones that are orders of magnitude cheaper. We are actually shockingly close to being more cost effective than trucks, to being more cost effective than, let's say, a Tata Ace.
From a pet project to building a company which actually makes sense. You need someone to believe that this is a viable project, not a project, but a viable entity. Who was that person for you?
That was Grad Capital. So they were our very first check. They invested in me when I was 16. It only over time became apparent to me that nobody would have backed a 16-year-old that was still in school the way Grad Capital did. It was also a funny experience because Abhishek Sethi, the lead investor there, literally had to get on a call with my dad to convince him that you should let your son take this money.
How much of your formal education did you complete?
I did not go to college.
Why?
I think there's...
Welcome back. You're watching Small Cap Buzzers. Now, Garuda Construction and Engineering is in focus. A lot of things are happening in this company. They want to move to, higher margin projects. Also, if you see, they do have a landmark project called Gruha 5-star. We also want to know what is update on that. So, a lot of moving parts when it comes to this counter, and to speak, about that and what lies ahead for the next 2 to 3 years, we are joined by Mr. Praveen Agrawal, who is Chairman and Managing Director at Garuda Construction and Engineering. Mr. Agrawal, welcome at NDTV Profit. Pleasure to have you. The last time we spoke was before December 2025, and as of 2025, your order book was around 3,461 odd crore. Now we are in June. What's the order book looking like, and how is Q1 shaping up for you considering the monsoon that we have?
Hi, thanks for having me. So to answer your question, we are currently on an order book of around 5,000 crores. So, and we are expecting a few more orders. Currently, right now, we are at 5,000 crores approximately.
5,000 crore. And so how is Q1 looking like considering the monsoon that we are in?
No, monsoon has started late. So there was no effect. We have had a very good first quarter. So second quarter, maybe there will be some effect due to rains, but we have exceeded our expectations in quarter one, and the results will be out soon.
Understood. Got that view. And sir, your largest project is Gorakhpur Convention Center, which is around 1,000 odd crore. What percentage of that project is mobilized, and when do you see the meaningful revenues, contributing to your financials?
Yeah, so we have already completed 30% of the project. We just started around 8-9 months back. The actual site delivery is way ahead of its schedule. So it's around a 36-month project, but we'll be completing within 24 months, God permitting. So we are way ahead of that completion of that project.
If you could just give me some idea on what is your current order book looking like, and for the rest of the year, what is your order inflow target, sir?
Yeah. So I just answered that question. We are around 5,000 crore as of now, and we are expecting a few more orders to be signed. So that as soon as we sign, we'll inform the markets. But we are very positive that we will grow in this year on a very positive note.
Understood. So 136% growth in FY26 that we have seen, that was fantastic growth with strong margins that you have around 23% of PAT margins that you saw in FY26. Now, how is FY27 looking like? What kind of growth targets that you have when it comes to revenue, and what kind of margins are you expecting?
No, I'll just give you a perspective. See, our order book stands at 4,000, out of which around 4,000 crore, 4,500 crores is pending to be executed. So, and we have to complete all this in 3 years. So our growth will be, if we don't grow at double digit or more than that, in the high double digit, then we'll not be able to complete our order book. So we will do, we are striving to achieve the same pattern as we have in the past.
Okay.
And our margins are going to be standard. We don't work on low margins, so our margins are well protected.
Right. Now, given the late monsoon, obviously your execution must have been quite good in the first quarter. But when it comes to order inflow, has there been a slowdown in the first quarter, given the fact that there were some concerns about government capital expenditure slowing down, and you have nearly 50% of your orders coming in from the government side? So anything on that front, if you could share?
Yeah, we are very choosy and conservative in taking our orders. We are just not wanting to explode our order book. So we are very choosy, and when we take orders, they are going to be very nice projects and very niche projects. So yeah, in our order book to a great level till we get good projects. So I think you will hear in this quarter that what orders we are able to.
So I was actually asking on whether is there a slowdown on the government orders that were coming in, because you have around 50.
I don't see that.
No slowdown, right?
No slowdown.
Okay.
Government is supporting very much, and the government tenders are the numbers are very big. There are huge tenders coming out. So government is very positive. Our government pipeline is very positive.
So I wanted to check on this front. Earlier, I believe the company had highlighted that you're looking to transition from promoter-led projects to independent third-party projects. So at this point of time, what percentage of your order books is coming in from unrelated third-party clients?
No, related party clients were already almost finished now. All are third party clients mostly, and new orders we are not taking to related parties. All are if you see, it's a SPV based model. When we bid for a project, our SPV bids, and then Garuda is a EPC contractor. So that will continue like that.
And sir, your working capital days, though they have reduced in FY26, but still at high levels of around 195 days. What's the ideal working capital days that you are targeting for FY27?
No, first of all, I must tell you that we are a debt-free company, and we have improved our cash flows. We are now. Last year, if you see, we were negative cash flow. We are almost 50, 60, 70 crores positive cash flow. So that's a huge improvement, and we'll make it better.
Understood. Got that point. Well, thank you so much, Mr. Agarwal, for joining in and having a conversation with us. Pleasure to have you at NDTV Profit. Thank you so much.
Thank you very much. Thank you very much. Thank you.
Well, this was, Garuda Construction eyeing at least double-digit growth for FY27 with the same margins that they have been maintaining. Lancelot, coming to you, you heard the management, double-digit growth. They have to do double-digit growth, to execute the current orders that they have. What's your view when it comes to this counter?
See, if you look at, I think what should we also view is the how much of their order book is getting converted into sales. Like in the last year, they did about 500 crores sales or revenues, and if they have converted, let's say at 20%, then even though the order book is growing, unless they improve the conversion rate, the order book the revenues cannot grow significantly. So just having a large order book or a growing order book doesn't really help unless it translates into revenues and profits as well. So that's one issue which we need to monitor and see. But otherwise, the company seems to be really reasonably valued. It trades about 14 times earning. There is, if they're talking about double-digit order growth or maybe revenue growth, then that should translate into reasonable profit margins. But I think to maintain profit margins also is going to be difficult as the size of the order book grows and as the revenue grows. Because in order to, for the larger projects, there will be competition and people will start bidding at lower profit margins, and the company will be forced to reduce its margins going forward. So I think that needs to be also kept in mind. And then it's interesting to see how the company is growing and what kind of profitability it can achieve and whether it can sustain that once it grows in a larger space.
Okay. Thank you, Lancelot. Thank you for joining us and giving us your perspectives on the stocks that we discussed on the show today. Moving on to our last stock, that is IQ Tech. Let's get in Jasmeet to understand what could be the potential reason behind this sharp up move in the counter. In fact, among the small cap names, it's one of the top gainers.
Well, Samit, thank you for that. The stock has been buzzing on the back of heavy volumes. Let's quickly understand what does the company do. Well, the company is a ODM manufacturer, which means it designs the original equipments for various companies. Now, in terms of the key manufacturing, they manufacture it for LED lights, switches and RV components as well. If you look at the overall stock performance, the stock is nearly up 14% in today's trade, and it's almost at an 8-month high at this point in time. When you look at the performance over last 1 month and last 6 months, the stock has been in positive, and majority of those gains are coming from today's up move. But over 1 year, the stock is down nearly 8%. Now look at FY26 of the company. The key takeaway, we see an interesting picture coming in. The overall growth in FY26 was led by the international business, which nearly grew by 53%. But management did note a double-digit growth in terms of revenue and PAT figures, while they also state that diversification in the Middle East region has helped them, the company, grow and sustain the growth in that area. While they also mentioned that the company has acquired 88% stakes in Gaurva's Tech to strengthen the marketing and distribution, and the company is moving away from its original model and getting into the new design of wearables and hearable devices segment by the end of Q1 FY27, which becomes an interesting aspect to note out how that spans out going ahead. Apart from that, the key numbers, the revenues of 23%, while the EBITDA saw an uptick of nearly 29%. While in terms of the margin, that saw a slight moderation, which saw an uptick of nearly 70 BPS. But apart from that, net profit saw a healthy uptick of 28%. And in terms of geographical fit, the company gets nearly 18% of its revenue outside India, which saw a double-digit uptick in the previous quarter.
Understood. Well, thank you so much, Jasmeet, for all the details. Moving on, let's see what Indofarm equipment is doing in trade today. Let's pull up that chart. The stock is up almost 11% in trade. In fact, it has seen biggest single day gain since August 2025. Volumes today are 12x of its 20-day average. But, let's bring in Parth for more details on the same.
Absolutely. So Indofarm is up over 11% today, hitting a new 6-month high and achieving the biggest single day gain the stock has seen since August 2025. If we talk about the company a little bit, the company manufactures pick and carry cranes as well as tractors. They have a very big backwardly integrated manufacturing unit in which they are manufacturing 65% of the crane components and almost 40% of the tractor components all in-house. So this provides them with very good margins. Now, apart from this, they are setting up a new crane plant as well with a capex of 70 crores, which will manufacture these pick and carry and tower cranes as well. Lastly, about their FY27 guidance, the management has guided for a top line growth of around 20 to 25%, where tractors are expected to grow in the range of 25 to 30%, while cranes are expected to grow in the range of 15 to 20%. Also, in the EBITDA margin front, the management has guided for the margins of around 12.5%. So the key things to watch going forward will be if number one, the company is able to achieve these guidance which they have given, and second, if the capex works out well for the company, giving them growth in the crane segment.
Well, thank you, Parth, for that information on Indofarm. Well, with that, it's a wrap on this edition of Small Cap Buzzers. Stay tuned and keep watching NDTV Profit.
Superstar Stocks of the Day, presented by Tata Azura, हर रास्ते का सुपरस्टार.
केसरिया से मन जोगी हुआ रे दिल झूमे देखो मतवारा हुआ रे केसरिया से मन जोगी हुआ
हर पल मनाओ केसरी त्योहार विमल बोलो जुबान केसरी
It is happening now. New tomorrows, new challenges. And all of it needs energy to work. Not afraid to imagine big. Because when energy stops taking, when it just gives, people can move. Really move. At this moment, the world's evolving. And so is energy. Suzlon. Good energies that work.
आपका पार्सल फिर से हमारे घर पे आया है।
कुछ तो बात है इस दिल में।
माँ भी हमेशा पीमाक मस्टर्ड ऑयल में ही खाना बनाती थी, ये आपके लिए।
कुछ तो बात है इस दिल में।
PMark, the mustard specialist since 1933.
सरसों से सरसों
India Inc.'s most respected names chose India Inc.'s best and brightest.
These kind of awards and jury lineup, you are truly giving it the right weightage.
I think it's heartening to see talent that there is in across India Inc. We should be awarding companies and individuals who have focused not only on growth but also on bringing good governance.
Be part of jury and vote on the people, the men, the women, the companies in India who have the right stuff is a great opportunity for us.
For us, the biggest thing is trust. That's what we provide. We need leaders in India that can help take India being a global superpower.
We got a fantastic jury and we've left all decisions to the wisdom of the jury.
Who will earn India's top business honors? Find out at the NDTV Profit Business Leadership Awards.
You founded this company in a way.
Hello and welcome. You're watching Ask Profit, the afternoon edition here at NDTV Profit. I'm Mahima Vacharjani and this is a show that gets all your stock-related queries answered. And before we start doing that, by the way, in that time you can send us your query. Let's take a quick look as to how the markets are doing. The Nifty 50 is holding well above the 24,300 levels. Slightly off from its day's high point, but it's not disappointing. Up still 0.5 odd percent. So sorry, it's slipped below the 24,300 levels now, just as we speak. But 108 points of an uptick is what we are seeing. It'll be interesting to watch out for because the immediate support levels right now for the Nifty 50 are around 24,200 and 24,150. So we'll have to watch out for as to how the day ends. But let's try to also pull up the Nifty 50 heat map and see as to what are the counters that are buzzing in trade today and contributing to that gains. You have counters like HCL Tech, which is up almost 6%, Max Health, Bajaj Finserv, Dr. Reddy's, Sun Pharma, Tata Steel, etc. doing fairly well. But on the flip side, you have SBI, Interglobe Aviation, where there's profit booking coming in. M&M, Kotak Mahindra, Bajaj Auto are also some of the names that continue to be under pressure, though the advanced decline ratio has slightly changed from when we last spoke. Let's also try to pull up the sectoral heat map and see as to what sectors are doing in trade right now. You have your PSU banks which continue to be under pressure, and also Nifty Energy, which is down by about 1.3 odd percent. By the way, PSU banks almost down by about 2 odd percent, but Realty is doing really well and has been doing in fact really well, up 1.8%, followed by Nifty IT. You also have the healthcare and pharma, yet another day of gains coming in for this one, and metals also doing fairly well. But the broader end of spectrum unfortunately is not in line with where the benchmarks go. With the mid cap 150 slipped into the red, now down by about 0.3 odd percent, and the small cap 250 is almost flat, both trading near the day's lows. So that's with regards to where the markets go. But you know what? One more thing before we start taking all your stock-related questions. An NDTV Profit exclusive, another $1 billion IPO may be around the corner. Tamsek-backed Manipal Hospitals has received SEBI approval and could hit the market soon. Nimit joins us with more details on this one. Nimit.
Yes, absolutely. So SEBI has approved Temasek-backed Manipal Hospitals for its IPO. Remember, it had filed its DRHP back in March. Now we understand that it's looking at an issue size of about 1 billion, one of the largest in the healthcare space already, and one of the few large billion-plus IPOs hitting the market this year. So it's going to be one that everybody's watching. Now we understand they're looking at a valuation between 10 and 13 billion. Of course, the issue size and valuation is subject to change and market conditions based on deliberations, but we know that the book running lead managers here include Kotak Capital, Axis Capital, Goldman Sachs, Jefferies. There's about 7 there, and the important thing to understand here is that they're looking to file their updated DRHP in lieu of this approval from SEBI very soon, and they may look to list as early as the end of July itself.
Okay, all right. Nimit, thank you so much for getting us those details. Of course, viewers will keep you updated as and when the story progresses. But, let's start taking all your questions. And to answer them, we are now joined by Ruchit Jain, Vice President, Equity Technical Research at Motilal Oswal, and Rajesh Agrawal, Head of Research at, M Capital, joining us now. Rajesh, good seeing you after such a long time. And very good afternoon to both of you, Ruchit as well as Rajesh. I'll take up the first question, which is coming in on Keynes Tech. This is from Rayudu, who's writing in, and he's got at a price of 3195, 500 is the quantity, wants to know whether to continue to hold or sell. He's mentioned that his time frame is from a short-term perspective. So Ruchit, I'll take this up with you. Continue to hold Keynes.
Yeah, hi, very good afternoon. Well, the stock has been an underperformer, if you look at the recent history, but just the momentum readings are quite oversold. So some pullback move cannot be ruled out in the stock. The gap area of the resistance would come somewhere around 3650, 3700. So for now, you can hold it, but the pullback towards that 3650, 3700 can be used to exit.
The next one that we have is coming in, and this is from Ajay Kapoor. He wants to know from a long-term perspective, which of these counters can he go ahead and invest in? I'll take up the first 2 names that he's mentioned, Vikram Solar or Sterlite Tech. Rajesh, which one of these do you think is looking more promising? And if not these, anything on your radar that you think from a long-term perspective can he go ahead and invest in?
Good afternoon, Mahima. Good afternoon, Ruchit. And yes, it has been a long time, more than 5 months, I would say.
Yeah.
But still, as far as these 2 counters are concerned, I don't think both of them qualify for a long-term investment. Yes, they can be held for a trading perspective or a short-term of moves and all. But for long-term, I think at this point of time also, their valuation concerns are always there. So it's better to go for better names. Maybe in solar, you can have a look at Wari or Tata Power to be precise. These 2 are better counters. And as far as Sterlite Opticals is concerned, I think they're also you want to be very cautious because of the kind of run-up they've already witnessed in the recent past. You can have a look at maybe some of the beaten down IT names like Infosys or a TCS for a time horizon of at least 12 to 18 months, I would say, because the kind of up move which we are witnessing today, maybe a dead cut bounce or something of that sort, but for a longer term, for a meaningful upside, you have to have a time horizon of 1 year. They have a strong balance sheet, good businesses going forward. They give out good dividends. And the kind of valuation they are trading at these levels, I think they are giving quite a comfort.
Okay, all right. I think the next one is also an interesting one, Ruchit, because this is on Oberoi Realty. Kishore from Bengaluru has bought around 30 shares at the levels of 1715. He says what could be the target for the next 1 to 3 odd months, and he's done his homework. He's saying that it's given a breakout from an inverted head and shoulder pattern, which he's not wrong about, right? What would you suggest? Because the momentum is, has been good for this Realty name. Should he continue to hold?
Well, in fact, the entire sector has done good in this week. So it seems that that uptrend could continue because after a long price-wise as well as time-wise corrective phase, the realty stocks have witnessed such good price volume action. Rightly, spotted that inverted head and shoulders breakout, which recently it has given. The targets as per the pattern are coming in the range of 2050 to 2100. So from a positional basis, you can expect around 2050 to 2100 on this.
Okay, all right. The next one that we have is coming in, and I think we've got a caller. Lakshmi is calling us from Hyderabad. Lakshmi, a very good afternoon to you. Go ahead, ask your questions.
Good afternoon to the experts. I have a query. I got this Apollo Microsystems 50 shares at 196 in March low. And now the share is 456. So the stock more than doubled in the last 3 months. So my query is whether I should hold. Is it a hype or should I hold it for a long time? I'm a long-term investor, a homemaker.
Okay.
Yeah.
All right, Lakshmi, first of all, you've spotted it at the right price and you're making good profits. So kudos to that. I'll take this up with Rajesh then. Rajesh, Apollo Microsystems, I was just trying to look at stocks which are trading above, the target prices which analysts have given. And this is one of the counters that popped up. So it's trading much above the, consensus average and, analyst recommendation return potential. And, it's done well in terms of where the fundamentals also go. So your recommendation, whether she should continue to hold this from a long-term perspective?
It's a very strong company, no doubt on that. The company is doing well in different good order book. The numbers have been quite satisfying. But the kind of run-up it has seen in the recent past and the kind of profits she's setting on, I think its better strategy would be to go partial profit, maybe 50% of the holding if she sells now. The remaining would be almost free. So she can continue with that for a longer term horizon. And if by any chance it falls again to 400, 380 odd levels, one can re-enter.
Okay, all right. The next one that we have is coming in on CG Power. This is from Pramod, who's writing us from Bengaluru. Says he's purchased this at the levels of 706 and he's got around 200 odd shares. He says he has a long-term horizon of around 3 to 5 years and wants to know whether he can continue to hold this one. Rajesh, this counter has taken a significant knock today on account of the announcement coming in from Ministry of Finance, allowing 3 more companies with regards to the Chinese exposure. But from a 3 to 5 year perspective, because we've seen significant run-up in this counter as well, do you think it's a good hold?
Remember the news that came today about the Chinese company? What my understanding says is those Chinese companies that have operations in India, maybe that's what I tried to got from that news. But still, the kind of knock this counter has seen today and the others too. I think these are opportunities for long-term investors. Companies doing well after it went to Murugappa Group, it has seen quite a run-up. The kind of investment plan, the kind of capex this company is doing, and the kind of future project the management guidance, I think this stock can move to 4 figures in the next 6 to 9 months. So if one wants, one can even add at these levels.
Okay, interesting take coming in on CG Power. The next one is on housing finance companies. Satya Kumar from Hyderabad says that he's got Aptus Value Housing at the levels of 353 and GIC Housing Finance at the levels of 260. Wants to know whether he can continue to hold these or book losses. Ruchit, I'll come to you on this one. Today we saw a note from JP Morgan which did have a lot of housing names on their radar. But both of these, anywhere charts are looking attractive, or should he book his losses?
So Aptus Value Housing, I would recommend to hold because the stock has managed to form a good support base around its 50 DMA in the recent past. And if we see a follow-up move above 300, then we can expect levels around 360 kind of positionally. But GIC Housing Finance overall structure does not seem to be that positive. So I think it would stay within that consolidation phase and relative underperformance could continue. Rather, we have recommended today going long on other housing finance, within this entire space where the chart structures looks much constructive. So you can take a call to exit from GIC Housing and shift the position to other housing.
Okay, all right. The next one that we have is on Exide. Our viewer Satyan says that Exide has gone up, but he was expecting the same thing from Amara Raja as well. He bought it at the levels of 1080, and he wants to know as to what should he do now. Rajesh, I'll come to you on this one. By the way, he's also mentioning that he did miss you. So any quick take on Exide and both Amara Raja as well?
Thank you. As far as these two counters are concerned, I think both of them can be held for a long term. The prospects look good. Both are doing well in the OEM space and replacement market too. Exide has moved into moving into EV too. And with the kind of lead price cut we have witnessed in the recent past, I think the margins are going to be better in the coming quarters. So it's a hold for both of them. If somebody wants to add at these level, I think Exide would be a first preference.
Okay, all right. The next one that we have is on Anant Raj. Prashant from Bengaluru wants a short-term target on this one. His buying price is 547 and wants to know if he can go ahead and continue to hold or what should he do. Rujit, your view on the charts?
Well, the prices are range bound. 600 to 500 has been the trading range for quite some time now. So if the stock manages to go higher from current levels, then we can expect levels around 590, 600 where the next resistance comes. So hold on at current levels. If the stock comes around 590, 600, we can just take a review again over there.
Okay, all right. We've got Amit who's calling us from Bengaluru. Amit, very good afternoon to you. Go ahead, ask your question.
Very good afternoon, Joe. I'm really happy to ask. Sometime you guys give a very good suggestion. That I have a query about the Canara Bank. Okay, I have bought at 6,684 shares at the rate of 102 rupees. Okay, I'm ready to wait another 6 months.
Okay.
So it was gone on 162 and I didn't book the profit. I thought I'm planning to another 1 year planned. So 6 months I'm ready to hold. Can I have a suggestion what to do that? Is there any, is it going up shares or not?
Sure. Amit, got your question and thank you so much for the kind words. Really made my day. I'll take this up with Ruchit. Ruchit, what do you recommend Amit right now on the charts for Canara Bank?
See, overall in this leg of move in the markets, the PSU bankings have not been participating. You can see that the entire 3,000, 3,500 points up move that we've seen in the Bank Nifty index from this swing low of 54,000. The leadership has come more from the private sector banks rather than PSUs this time. But I think more or less the result season is starting, so post the numbers we can see some momentum on the positive side. For Canara Bank, 120, 117 has been a good support base in this entire consolidation what we are witnessing since last 3 months. So since the buying price is a bit lower than those levels, I would advise to keep a stop loss around 115, below that 117 support, and continue to hold on for now. And once the stock reactions, how it reacts, post the numbers, you can then take a call on this.
Okay, all right. He is sitting on profits of over 1 lakh rupees, so kudos to that. The next one is from Abdul Rashad, who's writing us from Palakkad, Kerala. He says he wants to know whether it's the right time to enter Federal Bank for the next 6 odd months, and what should be the stop loss and target that he should expect. Rujit, what would you recommend?
See, already the momentum readings are a bit overbought post the recent up move. Although the overall trend is positive, so I would advise to keep a buy and dip approach for the stock. Any declines if you get towards the range of 315, 310 range, then the risk reward ratio would become favorable. So buy on dips around 315, keeping a stop loss below 290. And if the stock resumes up move from there, then 345, 350 could be the target zone to watch out for.
Okay, the next one is on Aurobindo Pharma. KPS Rao from Bengaluru says that he's been holding this since the last 4 years. Should he be a patient investor and continue to hold? Rajesh, what's your view?
Of course, the company is doing very well. If I'm not wrong, it's almost at 52-week highs. And it should be continued to hold. By any chance, if it corrects to around 1,500 odd levels, new investors can even enter into this. So it's a buy from our side.
Okay, all right. It's time for a rapid fire round. Rajesh as well as Ruchit, try to keep your answers as short as possible. The first one is coming on G Vernova TND. Kunal from Chennai wants to know whether this is a good buying opportunity. Ruchit?
Wait for decline towards 3,800 to 4,000.
Okay, Apollo Microsystems is the other one. Bharat from Vijayawada is holding 400 shares at the price of 408. Continue to hold, and what could be the target price? Once again to you, Ruchit.
Hold for potential targets around 490.
Okay, the next one is on Kirloskar Bros. Dr. Lavanya from Eluru is holding 300 shares at the levels of 2180. Continue to hold. Rajesh, any idea on this one?
Continue to hold.
Okay, the next one that is coming in on Siemens Energy. This is from Dilip, who's writing us from Kolkata. Wants to know if he can continue to hold this one. His buying price is 3198. Rajesh?
It's an ad from our side.
Okay, Tata Power is the other one. Our viewer is saying that it's fallen quite a bit. Has it found its bottom, and whether he can buy right now? Ruchit?
No signs of bottom, so just wait and watch.
Okay, the next one is coming in on City Union Bank. Pakshal from Jodhpur wants to know the levels that he can enter into this counter. Would you recommend that, Ruchit?
Around 205.
Okay, HFCL is the other one. Our viewer is holding 50 shares and wants to know if he can continue to remain invested in this one. Rajesh, your view?
See, the kind of run-up it has witnessed, it becomes quite risky. So
Yeah.
it would be better to book partial profit.
Okay, the next one that we have is on SW Solar. Shankar from Bengaluru is holding 300 shares at the levels of 223. He wants to know 1 month target on this one. Your view, Ruchit?
Expected to trade in a range. 220 is the support and 260 is the resistance.
Okay, the next one that we have is from S. Khan, who's writing us from Bengaluru. He's holding 39 shares of Eternal, bought at the levels of 279, and holding Swiggy also at the levels of 446. Both of these, should he continue to hold, Rajesh?
Try to get out of Swiggy and switch that money to internal, and both these are for short term only.
Okay. CDSL is the other one. Sri Krishna wants to know if this is a good hold, maybe accumulate more at these levels. Ruchit?
Hold existing position.
Union Bank, Vignesh from Bengaluru wants to know whether he can continue to hold the 1,000 shares that he bought at the levels of 170 from a short-term perspective. Ruchit, on the charts for Union Bank?
I would recommend to exit.
Pine Labs, from a long-term perspective, is it a good buy right now? Rajesh, this is from Raja, who's writing us from Delhi.
Avoid.
PC Jewelers is the other one flying in trade today. 2,085 shares bought at the price of 13 rupees. Wants to know whether it's a good buy right now. Ruchit, would you recommend that?
Hold existing positions but won't recommend fresh buying.
Okay, Bank of Baroda, our viewer bought it yesterday. Manoj Sharma bought 60 shares at the levels of 261. Is that a good buy is what he's asking, Rajesh?
It's a good buy. Continue to hold.
IRCTC is the other one. 100 shares bought at the levels of 600. Rajesh, continue to hold?
Continue to hold.
Alright, that brings us to the end of this rapid fire round. Rajesh as well as Ruchit, thank you so much for taking out the time and helping us answer almost 97 queries that we've managed to answer, combined both, of course, the morning and the afternoon edition. But like I said, viewers, completely out of time on this edition of Ask Profit, but do stay tuned. India Market Close comes up next.
Superstar Stocks of the Day, presented by Tata Azura, हर रास्ते का सुपरस्टार.
केसरिया से मन जोगी हुआ रे, दिल झूमे देखो मतवारा हुआ रे, केसरिया से मन जोगी हुआ.
हर पल मनाओ केसरी त्योहार. विमल, बोलो जुबान केसरी.
It is happening now. New tomorrows, new challenges. And all of it needs energy to work. Not afraid to imagine big. Because when energy stops taking, when it just gives, people can move. Really move. At this moment, the world's evolving. And so is energy. Suzlon. Good energies that work.
माँ भी हमेशा पीमाक मस्टर्ड ऑयल में ही खाना बनाती थी.
कुछ तो बात है इस दिल में.
PMark, the mustard specialist since 1933.
सरसों से सरसों.
You founded this company in a way when you were 15.
I think Airborne really started off as more so a project than a company. The very honest TLDR answer to why I started this company is it was just very boring during COVID. I didn't want to spend this extended summer break rewatching Suits for a 5th time.
There are now, at least, quite a few folks in India who are getting into the drone delivery space. What is disruptive about your version or your vision of drone delivery?
Our goal is to create a technology stack that leads to delivery drones that are orders of magnitude cheaper. We are actually shockingly close to being more cost effective than trucks, to being more cost effective than, let's say, a Tata Ace.
From a pet project to building a company which actually makes sense. You need someone to believe that this is a viable project, not a project, but a viable entity. Who was that person for you?
That was Grad Capital. So they were our very first check. They invested in me when I was 16. It only over time became apparent to me that like nobody would have backed a 16-year-old that was still in school the way Grad Capital did. It was also a funny experience because like Abhishek Sethi, the lead investor there, literally had to get on a call with my dad to convince him that you should let your son take this money.
How much of your formal education did you complete?
I did not go to college.
Why?
I think I felt there's nothing that, I can learn out of college that I couldn't learn myself.
India Inc.'s most respected names chose India Inc.'s best and brightest.
I'm delighted to be chairing a committee of such distinguished fellow businessmen, bankers. It's just lovely to be back on this NDTV jury. I have been a fan of NDTV for a long time.
Many of the nominees are extremely close together in terms of what they've done.
I think it's also important that how they are reshaping the industries, commercial activities which they are into. And it's a very judicious mix of people to choose from. My compliments to the team.
Who will earn India's top business honors? Find out at the NDTV Profit Business Leadership Awards. India's unshakable news habit. NDTV.com is India's #1 English news website.
Hi, I'm Tamanna Inamdar. Watch me on NDTV Profit, where I break down the day's biggest business stories. What happened, why it matters, and what it means for your money.
Watching India market close, it's been a good week for the Indian equity markets, and it looked initially like we would be closing on a high, but we've given up a little bit of ground towards the end of the session. The only question remains, do we lose even more ground, or are we poised for a last hurrah at the end of the week? Where we stand right now is 24,272, up just about 0.4%. And we've seen a few pockets of strength, and of course IT is that pocket today. It's come off the high point of the day though, currently trading with gains of about 1.9%. One of the bigger contributors, it's HCL Tech, on account of that large deal that it won, as much as $1 billion, in fact more than that, in the AI space. And that's one of the big talking points today, but it's come off the high point. Remember, after yesterday's significant gains and today's gains as well, some money being taken off the table. Yesterday, of course, you saw evidence of short covering in the IT space. Pull up the Nifty Bank as well, because that's an underperformer. It was an underperformer yesterday as well. This is largely on account of the cohort of public sector banks that are underperforming today, and we'll get into that in just a bit. Pull up the heat map for the Nifty 50. Let's take a look at how the spread looks. There's more green on the screen, but there are a few key names in the banking pack that are down in the bottom rung. One of them is Axis Bank, the other State Bank of India. State Bank of India in particular, a heavy weight on the benchmark Nifty 50, as a result of which you're seeing a little bit of pressure, both Bank Nifty and Nifty 50. But Kotak Mahindra Bank also losing about 1% or so. And then you have the likes of Tata Motors, PV, Bajaj Auto, as well as HUL, Larsen & Toubro also losing a tad bit of ground. What's working today is HCL Tech, and holding out with significant gains from the start of today. I told you the reason why. It's up about 6%. Bajaj Finserv is looking okay. Max Health, Dr. Reddy's Laboratories, Bharti Airtel making a bit of a gain. Apollo Hospitals and the hospital pack, really that's something of a focus in the recent past, and then followed by Sun Pharma and Ultratech. So quite a few large cap counters are gaining a considerable amount of
ground. It does help that both the Nifty heavyweights, HDFC Bank as well as Reliance Industries, are trading in the green today, and so they're not a drag. Pull up the broader market indices though, because that's where they've flipped from green into the red. They were trading in the green at the start, but they were underperforming the benchmark now more so, with cuts of about 1/3% for the mid-cap index. Small cap index also just about flat at this juncture, having lost quite a bit of ground, more or less mirroring what you've seen in the mid-cap index. But pull up the advanced decline ratio, because you will see that the gap has actually closed quite considerably. It was a pretty wide gap at the start of trade, and it has now closed. Finally, pull up the sectoral indices. You will see that the IT index is once again on the top, but it's been eclipsed at this moment by the realty index, which is also gaining quite considerably in the recent past. Healthcare and pharma looking good. You saw Apollo Hospitals, but the other hospitals are also doing okay. Metals as a pack is doing well because the dollar index is actually cooled off overnight, and that always bodes well for the underlying commodity as well as the index as a whole. There you go. Pull up the PSU banking index components, because really this is where the big pressure is. In trade yesterday as well, you saw Bank of Baroda, that was an underperformer, but in trade today you have Union Bank of India, you have Bank of Baroda that's losing a further 3%. Remember, it closed with cuts of over 4% yesterday, and this is on account of the 5,700 crore settlement that it has been forced into. Indian Bank, Bank of Maharashtra, PNB all losing 1.7% or more. So what are the key factors that are at play at the end of this week? It's the benchmark, which has gained for the third consecutive session, and that is if those gains continue. The gains are led by IT as well as private banking names. You saw a couple of those names in the green, ICICI Bank among them. Resistance is seen around the 24,350 mark, and a decisive close above this could push the Nifty 50 towards that 24,500 mark. So far though, that mark has been elusive. Immediate supports for the Nifty are now 24,150 to 24,200 levels, and IT continues to be the top gainer for the second consecutive session. Actually, it now has slipped into second place behind Realty. The advanced decline ratio, as I pointed out, has narrowed. The Nifty Bank is under pressure on account of PSU banks, which are in the red, and resistance for the Nifty Bank. Pull up those levels, 58,300, 58,420, and the support is seen at 57,790 as well as 57,600. We've got Deven Choksi, who is the Managing Director of DR Choksi FinServ, joining us right now. Deven bhai, good afternoon to you, and thanks so much for taking the time. A couple of things playing out. One, it seems like there's once again some bit of strength at the large cap end of the spectrum, and the other thing is that there are fund issuances that are coming to the fore. The QIPs are coming back. What do you make of this, and what does it tell you about the appetite on the Lal Street right now?
Yeah, Alex, good afternoon. Well, yes, I think the QIPs, and at the same time, I think the new IPOs, starting with SBI's IMC business and followed by the NSE and the Geo platforms, they're going to be ruling the second quarter of the financial year, more or less, and maybe I think including in the third quarter at the same time. So from a perspective of looking at, I think, how market accepts it, the key point which I take home, today market wants this kind of paper to come in, like Adani Enterprises QIP issue, where probably are also inviting some of the large global institution investors like BlackRock and Capital International into the country. So to a greater extent, I think it's a capital flow once again returning back into the equity market through this kind of large papers that we are seeing. Overall, the market will be very happy to see such kind of larger issues coming into it, because it is these larger issues with a larger market cap dominance would ultimately invite some of the bigger investors into the country, and that's where probably I think we'll be seeing more active capital market. So yes, I guess I think this is going to be ruling in the current financial year, of course, but at the same time, I think very happily it can create larger amount of wealth for investors.
I just want to double down on that just a tad bit, and we'll go into some of the details of the QIP that everyone's talking about in just a bit. But Deven bhai, one fallout is that these large issuances can suck out a little bit of liquidity from the secondary market, one can look at it in multiple ways. In a sense, what you're saying about the need for the paper and the deepening of the market is certainly appreciated, but it could come with a little bit of short-term pressure on the secondary market as well. At least one can say that there's a positive in that FIIs have stopped selling with the velocity that they were selling a little while back. Would you agree?
So I think let us look at the data in perspective. Today you have got the SIP funds basically in excess of 30,000 crore plus in every single month. So that is largely absorbing the secondary market part of the activity where they're deploying additional sum of money, which is fundamentally important. And many of these funds are going into the flexi cap schemes, I think, wherein probably the focus is also equally there on the mid cap and small cap companies. So from that perspective, I think they have their own course. They have got their own segment of market which they probably invest money into. Now coming to some of the larger ones, like I think the names which we are talking about, Adani Enterprise, or for that matter even SBI, the MC company, and followed by Jio and the NSE. Now all put together, suppose if they end up collecting 80,000 crore to 1 lakh crore over a period of next 3 to 4 months, in my viewpoint, I think these are the investors who are basically institutional investors who are putting more money into some of the larger companies. Vis-a-vis, I think the mid-size investors, I think, who are putting money into some of the mid-cap and small-cap companies. So earlier days, I think, yes, we used to get a little worried that I think if slew of issue comes in, the market activity may slow down. But given the kind of breadth that now we are experiencing in the marketplace, I don't think that I think the market activity will slow down. On the contrary, I see a good possibility of some of the larger institution funds coming into Indian market, particularly global space, and they could possibly start leveling into some of the large cap companies which have been neglected on the valuation at this point of time. So I see a good possibility of market returning to the balanced environment, I think, from the tilted environment at this point of time, which is highly skewed on the downside for the large cap companies.
You know, while we're on the subject of fresh issuances and new issuances, the fundraising, let's talk about the Adani Enterprises QIP. And in fact, I would love to get your opinion on this, Devin Bhai, but I've also got Sanjay Ashar joining us. Before I go to the both of you though, let me get my colleague Somit in to give some perspective on what has happened, because that QIP got lapped up practically as soon as it was opened up. Wasn't that the case, Somit?
Well, yes, that was pretty much the case. The 10,000 crore QIP, they had a green shoe option to increase it to 15,000 crore, and immediately the company, in fact, yesterday night the QIP opened, and today morning they had to increase it to 15,000 crore rupees, given the fact that the demand was quite strong. In fact, what we are getting from our sources is that this QIP was subscribed nearly 4 times. So that is the kind of demand that we are seeing. Despite the fact that the QIP amount being such high, we are seeing 4 times demand coming in from investors. And to name a few of the investors that we have got to know from our sources, firstly, on the global side, the Capital Group, Goldman Sachs, BlackRock, Blackstone and Nomura are among the prominent buyers. But when it comes to domestic mutual funds, largely what we are picking up is that largely all the mutual funds have put in money for this QIP. To name a few: HDFC Mutual Fund, ICICI Pru, Kotak, Aditya Birla Sun Life, SBI, Tata Mutual Fund. Unusual strong demand is something that we are seeing for this QIP coming in. Now, how will the funds be utilized by the group? They will be using it to fund the expansion projects of the various group businesses. Apart from that, some of this money will also be used for the new PVC plant, and some of these funds will also be used to support the concession fee payment for road projects. So that is how this 15,000 crore will be deployed by Adani Enterprises. But unusually strong demand is something that we are seeing coming in for this QIP. Nearly 4 times demand is what we are picking up from our sources, despite the fact that the QIP size being on the higher side at around 15,000 crore.
Right. Somit, please join in on this conversation. I do want to ask Sanjay Ashar the first question on this though, because, and of course, Sanjay Ashar, Senior Partner, Crawford Bailey. Sanjay, thanks so much for joining us this afternoon. This issuance is coming after the removal of several legal headwinds for the group. And it is an opportune time to, in a sense, display the confidence that institutional investors have now in the premier entity or the headlining entity of the Adani Group. What does this tell you about how institutional investors are now viewing Adani Enterprises and the group?
I would say the following, that after whatever had started from a legal perspective, the legal issues, and those legal issues have been settled. So therefore, the investors have got confidence that whether legal issues or regulatory issues in India or outside India are all behind the Adani Group. And therefore, nothing is going to come back in the way as far as from a legal perspective is concerned. And therefore, the road is absolutely clear and there won't be any hiccups or there won't be any roadblocks, at least from a legal perspective, so that the investors are very confident. And therefore, therefore we can see that it's oversubscribed, and of course it's gone up to 15,000 crore of the QIP money which is being raised.
Where do you think, or where should investors expect most of this capital that Adani Enterprises has raised will be deployed? Will it be the airport business, data center, green hydrogen, mining services, roads, or the new incubation business? Because all of these businesses have a good growth part going forward. Where do you think this money will be deployed the most?
You have the already got the aluminum smelter announcement, which has also come up. And that's a significantly large activity, I think, that they are going to be undertaking, of close to about 1 lakh crore, I think, of investment going into that between two partners. Easily, I think one can assume that the higher amount of allocation of money is also happening into the green hydrogen space, where the activity is now getting into the maturity stage, possibly because of the backward integration into the wind and the solar plants has already happened. And now possibly, I think they will start the electrolyzer process. So there again, I think they will be putting in a large sum of money. Already last year, the copper smelter has started, and I think it is likely to ramp up the capacity further. So there again, in the priority space, I think the money should be going into. The data center business, I think, which is gradually getting ramped up along with, I think, the partners like Google and the Microsoft. There again, I think the deployment of money. So all in all, sum it up together, I think we can see clearly a capex cycle of around 35,000 odd crores on a year-over-year basis till 2030. That's, I think, the cycle that the company is likely to be undertaking. On a last year EBIT of around 16,000 crore, this is, I think, more than 2 times the amount which is likely to be getting invested. And that's where probably this 15,000 crore worth of QIP money, which is 5,000 crore included along with the green shoe option, I think is basically going to get added into. So we believe that 35,000 crore worth of capex program across all these businesses likely to continue for next 4 to 5 years, given the kind of given the kind of size that they're building in each of these particular verticals.
Devin bhai, do you think that this QIP will accelerate monetization of or demerger of some incubation businesses over the next few years as well?
I think the roadmap given by the company is very, very clear. Starting from next year, financial year, that is 27-28, likely to see the road assets and the airport assets first going off the block and getting separated, listed, as the case is likely to be, I think, for these two assets, because both these assets have entered into the free cash flow generation situation. Apart from, I think, the regular capex, they are now basically having the free cash flow generation situation, including by the end of this financial year for the new airport that they have commissioned. So from that perspective, easy to assume that 27-28 will be the first year in which they will be possibly monetizing these assets to begin with, and followed by that in the next year, one could possibly see the monetization of data center and probably, I think, the other businesses, including the PVC business that they have been incubating. So yes, I guess I think the next 3 years of roadmap suggests that one after another asset likely to find the monetization path till 2030.
So, Sanjay, just doubling down on the institutional interest, and I'm actually looking at the interest from very large global entities like Blackstone, BlackRock, in the context of the group's fundraising globally. And a lot of people know this, equally a lot of people don't know this. There's a significant debt raising plan that the group has and a presence globally. So what does this mean for that program heading into the next 2, 3, 5 years? Sanjay, for you. Sanjay, can you hear me? Okay, I think we've lost the audio with Sanjay. So, Devin bhai, if you can hear me, then that is a question to you as well, which is that you've had, actually, let me ask Sanjay this later, but I have a question specifically for you. The airports business, and this is not one of the entities that we've spoken about, but I do want to ask about this. One large part of the development of this particular business, which is being incubated as part of Adani Enterprises, is the City-Side Development Program, which is going to gather a significant amount of pace in the next 2 to 3 years. In the context of the businesses that are controlled by Adani Enterprises, how important do you think this is going to be?
AeroCity is, I think, a natural expansion of the airport facility that you are talking about, because anything to do with the hospitality is definitely, I think, finding its traction in the given situation. Now, take, for example, Navi Mumbai airport that they have put across. In the surrounding place, I think if you don't have enough amount of hospitality, the usage of this particular airport, I think, would probably not take off as much as I think one would like it to be. So it's a more of a complementary stroke supplementary investment that one can talk about, which is going along with the airport. And the same situation emerges even for the other airports, I think, where they are participating for the newer development, greenfield development as well. So from that perspective, I think AeroCity remains a formidable or a requirement as far as the business model is concerned in itself. At the same time, I think they're cash generating business. I think the most important part of this particular business is that having put in the larger amount of capex to begin with, which is front loaded, but in a subsequent period of time, I think the amount of money that you start generating is almost a free cash flow that you keep generating out of this kind of business. And that's what the beautiful part of this particular business model is. As we see it, I think to substantiate this point, as we see it, I think around 16,000 crore worth of EBITDA of last year, if I take 30% CAGR formula to it, I think by 2030, it becomes somewhere around 67,000 crore worth of EBITDA making company. And most of these assets, which are basically now deployed as a front-loaded capex program, are likely to be generating a significantly large amount of cash flow, which gets reflected into this particular EBITDA. So that's where I believe that I think this model is more of a complementary model. It supplements the initiative of creating the infrastructure like airports.
Okay, Sanjay, if you can hear me, and the question that I was asking you, my audio didn't go through to you, but beyond this QIP, there is a very significant borrowing program or bond program that the group undertakes in the global markets. And the kind of participation that has come through in the form of Blackstone, BlackRock, among others, bodes well for that. Would you agree? Okay, I
this
think,
is a question to Devin Bhai, right?
No, it's for you, Sanjay.
Can't hear you.
Yeah, so I'm going to try one last time. Sanjay, if you can hear me, my question to you...
Yes, now I can hear you.
Yes. My question to you is, I'm talking about the institutional participation from overseas, Blackstone, BlackRock, etc. A lot of people know that the group has a very significant bond program in the global market. What does this mean for that? Does it bode well for the bond program in heading into the next 2, 3, 5 years?
100%. As I said earlier, a little while back, that all the legal issues, whether domestically or internationally, which were there some time back, have all been put to rest. And therefore, whether it is equity market, whether it is equity issuance or whether it is bond issuance, whether it is from domestic enterprises or international enterprises, including the marquee names, such as BlackRock, such as Blackstone, etc., is all a good thing, since keeping in mind that all the legal issues have almost died. So that these legal issues will not come in the way for the purpose of bond issuance.
Right. Devin Bhai, just one question from my side here. Given the fact that Adani Enterprises has always traded at a premium valuation because it incubates new businesses and then there's demerger and listing, so it always has been trading at a premium valuation. But does this QIP reinforce these premium valuations now going forward as well?
Yes, I would think so, because I think total dilution in the equity is little less than 5%. To be very precise, around 4.3, 4.35% kind of a dilution which is happening into the equity. And it is collecting about 15,000 crore worth of rupees, I think, which is, when you top it up along with the last year's EBITDA, it is basically, I think, complementing 32,000 crore worth of cash flow kind of a situation which is being talked about at this point of time. And I think their capex program is 35,000 crore plus per year. So obviously, I think this kind of flow is definitely expected. Their current EBITDA is growing at a speed of around 20% CAGR. And if this kind of issuance are also bringing in money, that means the balance sheet debt is significantly brought down. In fact, net debt to EBITDA that today you have as of last quarter, I think, which was around 3.2 times, I think is now coming down to 2.5 times, which is also making a significantly large sense for the global investors, because I think they don't see the company extraordinarily leveraged. At the same time, the company would save around 1,200 crore worth of interest costs, since they are taking this 15,000 crore worth of inflow by way of QIP in implementing the projects. So whichever way you look at it, I believe it's basically bringing more of a financial discipline. And I'm very happy that I think each of these businesses that they're incubating, they are systematically leveraging the market premium that they are actually commanding. Largely, the market premium that they are commanding is also due to the fact that I think the machine is running at a compounded speed of around 30% on EBITDA side, which is not the case globally. So that is where some of the global investors are more excited about it. So I second the thought that yes, I think premium valuation is justified in this case.
Fair point. All right. On that note, let me thank Sanjay Ashar for joining us this afternoon. Pleasure speaking with you, sir.
Pleasure.
Okay, so that's the perspective on Adani Enterprises. The standard disclaimer, of course, that this is NDTV Profit, and you're watching this on the NDTV Group, which is owned by the Adani Group through AMG Media Networks. Andrew Freris, the Chief Executive Officer at Ecognosis, is joining us right now. And Andrew, thanks so much for taking the time. This is the first time I'm speaking to you after the dissipation of the conflict in the West Asia region. Are you more sanguine about risk assets heading into the second half of this year? And how do you view India and the rest of the emerging market basket?
I'm not sanguine at all. The war in Iran hasn't finished, and it will not finish for several more years. Let's not be deceived that there is a 60-day ceasefire, which they have already broken twice, and they are not even discussing about the deal. They're discussing about a memorandum of understanding, and there will be continuous problems with the Hormuz Straits. So the price of oil is likely to continue to be, let's say, volatile, although now it has started to come down. I'm on record saying that within 1 year to 18 months, the Hormuz Straits will be an irrelevance. Okay, they would have faded out because there would have been different ways of substituting both the oils and the route coming through. So the oil crisis wouldn't have finished, but the crisis between Iran and the United States would have been there. Point number one. Point number two is the American stock market is grossly overvalued. I've been telling my clients to bear it down as much as possible, and if necessary, concentrate on cash or concentrate on some, but by no means all Asian markets, one of which unfortunately cannot be India, because it has been one of the worst performers in the market. As a footnote, however, one thing which is in favor of India, it doesn't have an artificial intelligence sector, and therefore it has been able to evade what has actually happened in the markets, for example, of South Korea and Taiwan. When the boom bursts in the States, they will also feel the stroke. In terms of sectors or areas, I still like defense stocks a great deal, And I still like selectively investing in green energy because this particular crisis has clearly focused on the inability to continue to maintain dependence for the transport sector on oil, which is produced in the Middle East. And therefore, electric vehicles, more than ever, will be something to look at.
It's very interesting what you're saying, Andrew, because what is perceived to be India's biggest flaw at this moment, the absence of an AI play, is what you're saying is actually a strength and certainly something to focus on. The question to you, though, is in the pockets that you've said that you're interested in, there has been a considerable run-up in the defense pack, but particularly, there are stocks that have gone up quite substantially, and even in the energy space. So are you actively looking at opportunities to invest in those spaces here in India?
Very much so, to the extent that there is both liquidity and availability. India has got possibly the third biggest defense sector in the world. I'll say that very slowly. It has possibly one of the biggest, if not the third or fourth biggest sector in the world, in terms that India is, if I remember well, the second biggest importer of defense products. And also India itself is producing defense products. So the defense sector is there and it is available. Now, defense sector means a hell of a lot of different things. You have it all the way from building boats to building drones. And the two things are by no means the same. So I have to be very careful in saying one has to examine the individual companies and one looks at. And I can think of several defense sector companies in Asia that have done very well indeed. Those in South Korea, but then they are linked with artificial intelligence to some extent. And those, of course, in Japan, and to some extent those in Australia. But as I said, India has the advantage that we can forget about what is going to happen to its artificial intelligence sector, because it really doesn't have one of any significance, and concentrate on things that are potentially viable. Hence, the defense sector, for me, continues to remain a very important area because countries will continue to spend. The wars haven't finished. The war with Ukraine hasn't finished. The war between Israel and Lebanon hasn't finished. The war between Iran and United States hasn't finished. Money will continue to be spent. It's a cruel thing to say, to appear as if I'm glad that people are dying and we can make money. That's not at all the issue. But the issue is as blunt as that. Where do I put my money in firms that are likely to have very good prospects? And the answer is defense.
Yeah, Mr. Ferris, thank you so much for taking the time, and pleasure as always speaking with you. Have a good day. Right, we're still in a very quick break. On the other side, we'll continue to speak to Devin Bhai, who's with us, and Kunal Shah, who is a senior technical and derivative analyst at Mirae Asset Sher Khan. Very quick break. We'll be back on the other side to talk about markets. Stay tuned.
Superstar Stocks of the Day, presented by Tata Azura, हर रास्ते का सुपरस्टार.
केसरिया से मन जोगी हुआ रे, दिल झूमे देखो मतवारा हुआ रे, केसरिया से मन जोगी हुआ.
हर पल मनाओ केसरी त्योहार. विमल, बोलो जुबान केसरी.
It is happening now. New tomorrows, new challenges. And all of it needs energy to work. Not afraid to imagine big. Because when energy stops taking, when it just gives, people can move. Really move. At this moment, the world's evolving. And so is energy. Suzlon. Good energies that work.
आपका पार्सल फिर से हमारे घर पे आया है.
कुछ तो बात है इस दिल में.
माँ भी हमेशा पीमाक मस्टर्ड ऑयल में ही खाना बनाती थी. ये आपके लिए.
कुछ तो बात है इस दिल में.
PMark, the mustard specialist since 1933.
सरसों से सरसों.
You founded this company in a way when you were 15?
I think Airborne really started off as more so a project than a company. The very honest TLDR answer to why I started this company is it was just very boring during COVID. I didn't want to spend this extended summer break rewatching Suits for a fifth time.
All right, welcome back. You're watching India Market Close, and it's not quite the TGIF we would have hoped for, right? You've given up a lot of the gains. You're still in the green, 24,261 on the Nifty, but not quite the highs of the day. We saw nearly 150 point uptake. What's been sliding on the Nifty? Let's just pull up the heat map and the contributors very quickly before we get to our segment Heard on the Street. It's some of the banks that have come in with a bit of pressure. Axis, State Bank of India among them, M&M and L&T amongst the others. Kunal Shah with us this afternoon. He's Senior Technical and Derivative Analyst at Mirae Asset Share. Kunal, great to have you on the show, and apologies for a bit of a delay, a lot of programming before we got to you. But really, where are the hurdles for the Nifty now?
Good afternoon, Tamanna. Good afternoon to everyone. I think overall what we have seen in the Nifty index in the last 2 weeks, we have been just consolidating in this broad range. And today we are going to get just a closing somewhere close to that 24,300, which was an important hurdle for the markets. So I'm expecting the next week the move to be continuing on the upside and Nifty to head towards 24,600, 700 on the upside. Now the lower case begins at 23,800, should be a strong support. So again, we are going to get a positive weekly close for the market, even though we are not going to close above 24,300. So which is positive. So the market remains as a buy and dip. 24,600 is what I'm expecting on the upside. Now for the bank Nifty, it has been hovering around that 58,000 mark since the last 3 weeks. And again, even on the bank Nifty, we have been forming doji candles, that is indecisiveness. And once we break above this 58,500 hurdle on the upside decisively, the move will continue on the upside. So again, for bank Nifty, currently there is no trade setup, but I think overall once 58,400, 500 is taken out decisively, bank Nifty is heading towards 59,000, 59,500 on the higher end.
And what are the stocks that you're liking this afternoon, Kunal?
I think for stock specific, my first pick over here would be Bharti Airtel. Again, the stock has already formed a bottom and now is showing signs of high top, high bottom formation. So that would be my first pick on the buy side with a stop loss of 1850 on the downside, looking for targets of 1990 to 2000 on the upside. So I think Bharti Airtel is likely to see some good momentum in the next week. So that is my first pick. Second pick is a buy from the cement space, and that is ACC. So ACC again has seen bottoming out formation, and again the stock has witnessed a fresh breakout on the weekly and the daily chart as well. So here also it's a buy for me at the current levels with a stop loss of 1320 on the downside, looking for targets of at least 1460 to 1500 on the upside.
Devendra, I just want to talk about one segment of stocks, and we highlighted this morning about how the Chinese companies that have been cleared for procurement by India have had a negative impact on some of the suppliers here. So GE T&D, Hitachi, Siemens, CG Power, all of them having a very, very tough day. But some interpretation saying that this is an extreme reaction. Just wanted your take on some of these companies.
Tamanna, none of these companies are going to see any kind of dip in the revenue. Neither they are going to see any kind of fall in the order book intake that they are basically receiving in their regular business. In fact, I think one clarity emerges very clearly that the way in which India is accelerating on the implementation of renewable energy program. The 2027 target they achieved in 2025, 2030 target of 500 gigawatt is expected to get achieved in 2028 itself. Now, if you run ahead of time as far as implementation of renewable energy is concerned, the entire ecosystem driving the renewable energy, particularly I think the likes of transmission and distribution businesses, along with I think the equipments which it requires, which also include transformers in this case. These companies which we have probably do not have enough amount of capacity built up at this point of time to take up the additional amount of business either. And transformer business, I think they do take longer gestation for execution. And that's where possibly they have, out of no choice, opened up, I believe, for Chinese companies. To my mind, I think this is not going to take away any kind of prospects from existing Indian companies and from their order book. On the contrary, I feel that I think the program will get implemented little faster compared to otherwise. So that is the reason which I believe the government has taken this view.
All right. On that note, Deven Bhai as well as Kunal, thank you so much for taking the time today. Kunal, we'll speak to you more soon. Our chat today was a little curtailed. Thanks so much for taking the time. Right, well, let's head across to Somit Sarkar now. He's been waiting by to tell you about what he's hearing from the dealing rooms. And Somit, a lot of issues like we've been talking about and seemingly QIP activity picking up again. But what are the stocks that you're hearing about?
A lot of individual stocks that remain in focus. Firstly, it's Polycab and L&T. Now, there are sell flows on the large HNI desk. Dealers indicate weak Q1 earnings coming in from both the names. When it comes to Dishman Carbogen, dealers indicate that a large prominent HNI has been accumulating this counter in trades. Keep an eye out for Dishman. For Shree Cement, there are buy flows on the PMS desk. Dealers are expecting strong Q1 earnings here. For M&M, multiple dealing rooms are recommending buy calls to their clients based on technical charts. And when it comes to Titan and Kalyan, there's a buzz of very strong Q1 update that could come in over the weekend. Dealers are expecting nearly 40 to 50% growth in these counters. And lastly, when it comes to Premier Energies and Vari Energies, buy flows at lower levels seen on the institutional desk for both the names. They have recovered from the day's low, and dealers are expecting strong operating margins on both the counters that is expected in the first quarter numbers. Keep an eye out for both the renewable names as well.
All right, so quite a few stocks to keep on your radar. Swami, thanks so much for that. We're joined on this leg of the show by Jay Bala, who's the founder and chief market technician at Cash the Chaos, as well as Neeraj Devan, who is independent market expert. Thank you so much, gentlemen, for taking the time. Jay, I'll come to you first on what your perspective is, one on the benchmark and two specifically on the Bank Nifty, because for one reason or the other, this index is underperforming. Does that end in the coming week?
When you mean underperforming, Alex, do you mean Bank?
I'm talking about the Nifty Bank has been underperforming in the recent past.
Yeah, I would, from a structural point of view, I would slightly differ. Basically, the Bank Nifty is slightly outperforming the Nifty because it's clocked a higher high from the April lows. So I think Bank Nifty will reach fresh 52-week highs past the March, February highs quicker than where Nifty is, which Nifty was. And in both cases, I'm anticipating fresh all-time highs to come through. You know, when we spoke last time with you and Tamanna, when Tamanna was rejoicing for crude dropping below 100 barrels, and I was saying the crude is going to drop below $60 per barrel, and it's happening now. We've reached 67. So we are here, and the markets are doing what I'm anticipating, and I projected crude to drop below 50, which was December low, and it will go well below it. And the markets are on the right path there. So when it comes to the Nifty, let's divide that into two halves. One is the very short term, and one is the medium term. The very short term, it's a bit ambiguous because of the IT sector. I expect Nifty to probably drop below 23,800 and then resume its bullishness. If the Nifty were to cross 24,600 straight away, then we are already on a bullish trajectory. From a medium-term perspective, from a 3 to 6 months perspective, I'm anticipating the Nifty to cross fresh all-time highs and probably reach 29,000.
29,000 in this calendar year, Jay Bala?
That's right, very much. Probably it's maybe quicker than that, probably closer to Diwali.
Closer to Diwali, 29,000. We're going to earmark this, and then we'll see if we are going to rejoice around Diwali or not. That's fantastic. And when do you see Brent below 50?
Yeah, see, Brent in the very short term is extremely oversold. So 64 is a support for WTI. From 64, I anticipate a small counter trend bounce, but it's heading lower. And right now we have filled the gap that started on the 28th of February, which was the point where the Iran-US imbroglio began. That gap has been filled. And just in the very short term, because of the oversold nature, we could see an extreme short-term bounce of somewhere about $73 per barrel for the WTI. And then I'm anticipating it to break the $61 mark, and then later on $54 mark. And by December, I would anticipate WTI crude to be somewhere about mid-45s.
Okay. Jay, stay on with us. Going across to Neeraj for a quick take. Neeraj, I want your take on the IT sector.
As far as good afternoon first. So as far as the IT sector is concerned, the kind of the market selling that we've seen there, I think after yesterday morning, I had this view that the selling, I think, should have stopped now. So whether the stocks will make a base and make good upward momentum, that is difficult to say, because something has to come from the companies to nerve the market, because Indian companies came out with the fourth quarter results and then the guidance and the commentary was really weak. So that led to a further fall and the momentum got totally lost. But there can be some trading bounce back because stocks had come down a lot. So that's what we've seen yesterday and some follow up today also. But to make it base and to make a forward trend, it's very difficult to say. I think right now it's more stock specific. There are certain companies which are product driven. They have solid product revenues coming in. They are still seeing some buying. But overall, I still have a little cautious view as far as IT is concerned.
On IT, and perfect segue to speak about our stock of the day. Nothing cautious as in the way HCL Tech has been treated by the market today. It's emerging as a top gainer on the Nifty after announcing a $1.14 billion strategic deal with a Fortune Global 50 company. Jasmeet, joining in on why HCL Tech's seen as a stock of the day and how significant this one announcement is.
Well, Tamanna, thank you for that. As rightly said, the company signs its a $1.1 billion deal with a European client, and this deal comes from the firm that is a part of the Fortune Global 50. While the size of the deal is not something that's causing the rally of this particular stock, but the commentary by the management where they have seen this deal is a net new addition, which basically means the companies are seeing a turnaround and the deal wins are starting to come up, and that's a positive moment that Street's really liking, and that's why HCL Tech is up nearly 5% after touching 7.5% high in today's deal. Well, let's quickly talk about the deal. Well, the deal is for providing AI-led operating model to the client, and deal also includes energifying and dividing the entire portfolio of the client and workflow management with the AI-led sources. We will look at the deal tenure. The deal is signed for 5.5 years, which also has an extendable tenure of further 5 years, and it's a net new deal. Let's quickly have a stock check for this particular counter. As we have seen, the stock has rallied nearly 7% in today's trade and hit the intraday high, which is the highest single day gain in last 14 months, and that's huge. We look at the other key aspect of the deal. We also make a note that this particular counter has given a negative return on the previous 5 consecutive months and has started July on a positive foot. So far, it's up 6% in the month of July itself. If we look at the stock check for today, it's up nearly 6%, while Nifty IT is up nearly 2%. And on YTD basis, HCL Tech is down 30%, while Nifty IT is down about 27%. Let's quickly look at the outlook. Well, that's a key important for the company given the results are expected in couple of weeks. While the revenue guidance was cut in FY26 for FY27 on the back of that weak Q1 that the management was seeing. Now, if you look at the overall revenue growth guidance, it stands at 1 to 4% versus 4 to 4.5, and the band has been increased, as we can see, compared to FY26 because of the fear and the slowdown in the demand, while the service revenue guidance in the same way has been cut by nearly 3%. But the EBITDA margin, the margin the company is looking at, they have extended that particular band from earlier 17 to 18 to now 17.4, 18.5. And also management has made a commentary. In the previous quarter, they did leave out a deal worth $1 billion because the deal was not very attractive. And company signing in this deal is showing the positive momentum that the margins are something that would be stable at the current levels. While the company's Q4 is expected in this particular quarter, so it's a wait and watch of how does that thing pans out going ahead. Now, we look at the overall street expectation and the ANR for this particular counter. We do know that this particular counter currently has majority buy calls and expectation going ahead, but the valuation becomes a key for this counter. Given the HCL Tech's current value as of the day, it stands at 15 times below its 5-year and 10-year average, which is in line with the Nifty IT valuations at 15.2 odd times. As of now, it's a wait and watch of how this deal ramps up and starts into the revenue, but the deal momentum, as is a new deal, shows the positive momentum for the particular stock.
Okay, thank you for that, Jasmeet. Neeraj, you just talked about how you are still wary of IT. What would you make of HCL Tech? And when you see certain companies really trying to add on to that deal pipeline, have AI tie-ups like they've done with Sarvam, etc., they've taken a stake. How do you look at an HCL Tech specifically?
As far as some companies which are announcing these acquisitions, Persistent also now it's one, and that the stock got beaten down. Now, HCL Tech, I think, though the acquisition that they're making makes sense because, we've been wanting them to spend money on AI because they all been sitting on huge cash piles. So valuation-wise, I have no problem with HCL Tech. It is only the sentiment which has to reverse. The sentiment will reverse only if the companies come out in maybe Q1 results and they say that things are looking better now because it is the companies which came out with a guidance which was weak. And, for the full year, they gave a very weak guidance for the whole year. So that has to somewhere change. If, though acquisitions, a couple of them that HCL Tech has done are looking interesting. They're looking like they're going to be, value accretive right from day one or right from the first year. So they look good acquisition. But as a whole, as the overall business is concerned, there has to be some guidance or some change in the management tone that is required to be seen.
Got it. Okay. All right. We have to slip into a very quick break, but on the other side, we'll talk about the top buy today, sell on Monday ideas and a lot more. Stay tuned.
केसरिया से मन जोगी हुआ रे दिल झूमे देखो पतवारा हुआ रे केसरिया से मन जोगी हुआ
हर पल मनाओ केसरी त्योहार विमल बोलो जुबान केसरी
It is happening now. New tomorrows, new challenges. And all of it needs energy to work. Not afraid to imagine big. Because when energy stops taking, when it just gives, people can move. Really move. At this moment, the world's evolving. And so is energy. Suzlon. Good energies that work.
माँ भी हमेशा पीमाक मस्टर्ड ऑयल में ही खाना बनाती थी।
कुछ तो बात है इस दिल में
PMark, the mustard specialist since 1933.
सरसों से सरसों
You founded this company in a way when you were 15.
I think Avon really started off as more so a project than a company. The very honest TLDR answer to why I started this company is it was just very boring during COVID. I didn't want to spend this extended summer break rewatching Suits for a fifth time.
There are now, at least, quite a few folks in India who are getting into the drone delivery space. What is disruptive about your version or your vision of drone delivery?
Our goal is to create a technology stack that leads to delivery drones that are orders of magnitude cheaper. We are actually shockingly close to being more cost effective than trucks, to being more cost effective than, let's say, a Tata Ace.
From a pet project to building a company which actually makes sense. You need someone to believe that this is a viable project, not a project, but a viable entity. Who was that person for you?
That was Grad Capital. So they were our very first check. They invested in me when I was 16. It only over time became apparent to me that nobody would have backed a 16-year-old that was still in school the way Grad Capital did. It was also a funny experience because Abhishek Sethi, the lead investor there, literally had to get on a call with my dad to convince him that you should let your son take this money.
How much of your formal education did you complete?
I did not go to college.
Why?
I think I felt there's nothing that, I can learn out of college that I couldn't learn myself.
Welcome back. You just have about 15-20 minutes left for the markets to close this Friday. And it's not been a bad week at all. Although you are seeing markets coming off their highs. Jay Bala, Cash the Chaos, and Neeraj Tiwan with us. Jay, any BTST or actually buy today, sell Monday ideas that you have?
Yeah, I'm very bullish on the real estate space, and I've been bullish since the first week of April. And today, DLF's move is telling me it's having a sharp breakout. And I wouldn't be surprised if on Monday the stock reacts to some kind of trigger and raises up. I would anticipate this to be past 700. So currently at about 676, 675. A stop loss at about 652, and anticipating it to cross 700 on Monday.
Okay. All right, let's talk about Genus Power. It's in focus. Its smart metering pivot is driving strong growth backed by a robust order book. The smart gas meters are the next growth trigger, though rising debt remains a key watch point. Parth is joining in to take you through a deep dive into the stock, which, by the way, is spiking as we speak. Parth, what do you have for us?
So Genus Power has been a very interesting counter in the recent times. The stock has gained almost 45% from the April lows, but in the recent time the stock has dipped around 15% from its recent highs. Now if we look at the reason why the stock is pulling some eyeballs, well, on the 30th of June, GIC has sold over 11% of the 15% stake that they previously owned. Now this 11% stake among the buyers are very famous investors like Madhu Kela, like Akash Bhansali, and this is the reason why the stock is in the watch list of many investors right now. Another interesting thing about Genus Power is how they have changed their business model. In their older business model, they used to sell the meters directly to the state utilities, but now they are executing the entire smart metering project. Before, the revenue was recognized just after they were dispatching the meters, but now they are not only manufacturing, they are installing them, they are operating them, they are even doing the maintenance. So this means that before they had very limited post-sales revenue visibility, but now with the maintenance network around 8 to 10 years, they are getting that long-term recurring revenue, and that is helping the company. Before, they were collecting cash just after the product sales, but now utilities are paying through those milestone contracts, and this is helping the company because before they had the lower working capital requirement, but now even if they are putting up higher upfront investment, they are getting that recurring long-term revenue. So this is what is benefiting Genus Power right now. But in this newer business model, you need to understand the Gemstar structure as well. In this Gemstar structure, what happens is Genus doesn't get those contracts directly. Gemstar is a special purpose vehicle that Genus has a 26% stake in. Gemstar gets those contracts and Genus does the execution part. Gemstar signs the contracts with the electricity utilities, and Genus, being the execution partner, they do the supply, installation and the project execution. So all the execution revenue flows to Genus, while the Gemstar gets the project profits. And because Genus owns a 26% stake in Gemstar, those 26% of the profits flow back to Genus as well. So this is the whole Genus and Gemstar structure. Now we need to check if this transition has worked for Genus or not. Well, let's start with the order book. From 21,000 crore to above 25,000 crore. Revenue, they have jumped 4 times, from 1,200 crores to almost 4,800 crores. PAT has jumped almost 7 times, from 87 crores to almost touching 600 crores in FY26. Also, ROC has improved 11% to 24%. Receivable days from 176 days to 115 days. Cash conversion cycle almost touching 250 in FY24 has now come down to 188 days. Moving on to the management guidance as well, they have said that they will improve this working capital cycle by another 50 to 75 days. On the revenue front as well, management has guided for a FY27 revenue in the range of 6,000 to 6,500 crores. Now, what is next for Genus Power? They are horizontally diversifying themselves. They are not only doing those electricity meters, they are diversifying into gas meters as well as water meters. Now, here lies a very big opportunity because the domestic PNG connections in India, which were just 1.6 crore in FY26, they will reach 12.6 crore by 2034. And what government is doing is also really interesting. They will roll out the smart gas meters both in the existing and new connections. So this will create a huge opportunity in the range of 35 to 36,000 crores for Genus Power, and this is the biggest trigger what Genus has right now, and that's what is driving the stock price up.
Okay, Genus in focus. Jay, is this something you're tracking on the charts? Let's get a chart check
That's right.
first on Genus, and again another spike as we've been covering the story.
That's right. See, I'm very bullish on the BSC capital goods space, particularly towards the power sector, and also the defense stocks. So Genus Power, from a long-term perspective, still got fresh record highs to come through. So I would anticipate this to be a bullish price action, and I think from a 3 to 6 months perspective, I expect this to power ahead.
Okay. What about, if you just look at what Neeraj's view on this is?
See, as far as the segment they're into, there is definitely a lot of scope, and they're further going for gas, water meters. So they'll be expanding their product portfolio. And valuation-wise, the stock is not expensive. And looking at the ROC of 20-24% that they are now at, and if they're able to maintain the growth that they showed last year, I think the stock is not expensive and has definitely some leg as far as valuation is also concerned. So I think for a long-term investor, it will make sense even to invest, at this price. I think 2 to 3 years view, definitely there should be an upside in the stock.
Got it. Okay. All right. Interesting update here. India's visa resumption for Bangladesh could revive medical tourism, and that is set to benefit hospital chains like Narayana Health as well as Apollo Hospitals and Fortis Healthcare as well, through higher international patient inflows and revenue recovery. Varsha joining in to talk about more details here. A few of these hospital stocks, Varsha, are climbing, perhaps on account of this, but what are the key details here?
So we have seen a demand when it comes to Bangladesh visa demand, wherein India has resumed visa services for Bangladesh citizens. Over 1.4 lakh visa applications have been received within 24 hours, and the strong demand has been reported for medical visas. Now, why this matters for hospital? Because before 2024, if you see, 3 to 4.5 lakh Bangladesh patients travel to India annually for treatment, but patients' flow were hit by political unrest and visa restrictions in 2024, and visa resumption could revive a key medical tourism market in India. Now, why Bangladesh? Because Bangladesh is a key market, contributes 50 to 60% of India's medical tourism inflows. Most patients travel to Kolkata, Bangalore and Chennai, and international patients typically generate higher revenues for hospitals. Now, biggest beneficiaries over here would be Narayana Health, which operates 1,453 beds in Kolkata, strong exposure to Bangladesh patient traffic. Even Apollo Hospital, if you see, has the highest exposure, has 761 beds in Kolkata through Apollo Gleneagles, and the strong international patient franchise over here reported 27% drop in Bangladesh related revenue during the disruption. Fortis Healthcare have seen a recovery play over here, operates 373 beds in Kolkata, well placed to benefit from rising cross-border patient inflow. So overall, these are all the companies which will actually benefit, considering the huge demand that we have seen in Bangladesh visas.
Okay, thank you for that. I want to quickly put the spotlight on Sumitomo Chemicals. Stock has been firing today, and it's quite interesting why. Their wholly owned Korean subsidiary, Dongwoo Fine Chem, has signed a joint venture with a company called Samsung Electromechanics. What they're going to make is glass core substrates. What is this? It's a key material for advanced AI chip packaging. So, we've been talking about the AI trade from an Indian perspective and the plumbing or the nuts and bolts around it. Sumitomo Chemicals seems to be an interesting play there. Neeraj, have you been tracking the story? Any thoughts here?
Well, I don't have any particular view on Sumitomo because it's not under my coverage, but I'm positive on the chemical space. I think one is because of the raw material pressure would ease for some of these companies. And second, there was some restriction as far as export and trade was concerned, which also will benefit some of the Indian companies. So I'm positive on the sector, but no specific view on Sumitomo.
Quick chart check on Sumitomo in case you've had a chance to see it.
Yeah, I did, Tamanna. But the short term is a bit ambivalent, but looking at the medium term, it probably looks bullish. But I don't have a very clear handle. But like Neeraj said, I'm also bullish on the chemical space. And within the chemical space, I like Aarti Industries. So I would be, because I don't have a good handle on Sumitomo, but it just looks bullish. So I would rather go with Aarti Industries rather than Sumitomo.
It's not bad. One top call before we let you go, Jay.
Yeah, the pharma sector is heading to pushing further into fresh record territory. Bullish on Alembic Pharma from a positional perspective. A stop loss of 710. I would anticipate it to push towards 1,000 mark.
Stop loss for Alembic?
710.
Okay, 710 is your stop loss. Thank you so much, Jay. Thank you so much, Neeraj. Have a great weekend. Markets are decent. I mean, not the best of what they could have been, but we won't complain too much, Alex. Even the advanced decline ratio has kind of narrowed down. So that bullish sentiment couldn't be carried through to that extent.
Yeah, some fatigue coming through, but so actually this is more or less the peak of the range that the Nifty 50 has been in since the 15th of June.
Yeah.
So that upper level was 24,300. It's failed to break that on the upside. And I think that's something that a lot of people might have anticipated. I wonder if anything changes into next week. More than anything else, I think the fatigue in the broader markets has crept in because of the kind of gains that you've had heading into today, with cuts of about 0.25% for the mid-cap index, the small-cap index ending flat or completely unchanged. In fact, the Nifty Bank has been an underperformer today, and that I think is one of the key stories today and yesterday.
Let's pull up the intradays actually. Let's pull up the intradays for the small cap and the mid cap, because then you can see that slide coming in through the day. That's the bank Nifty that I'm seeing, but I want to see the small cap and the mid cap index. There you are at the low point of the day on the mid cap 150. For the small cap as well, you are close to the low point of the day. Let's pull up the heat map very quickly on the Nifty, and I mean HCL Tech has of course been that big star, 5.5% up. Max Held DRL also creeping up. So the top deck, at least with the Nifty, has gotten reshuffled to some extent with the addition of pharma. Look at DRL, Sun Pharma, and Max Held there, and hospitals. And Varsha did that story about how the Bangladesh visa lift is going to help. Axis Bank, Mahindra & Mahindra, State Bank of India, and Tech M. Actually on the lower end, the excitement around IT is not really touched Tech M today.
Yeah, absolutely. And some of the public sector banks actually losing a considerable amount of ground today. So you have HDFC Bank that's trading in the green to the extent of about 0.7%, and ICICI Bank in the green as well. So there are private banking players that are in the green, but State Bank of India on the other end is not doing too well.
And as we close up, we'll pull up the weekly chart of the Nifty as we round up the Nifty, the Bank Nifty, and all of those, because the week after all of this has not been too bad. 0.5% up. We are crawling back, I would say. But over the last 2 weeks, things have been better. I want to pull up the Nifty IT next. Okay, Bank Nifty over the week is 0.77% down. Nifty IT is, even after the wonderful last couple of days you've had, it's still 1.5% down. And that goes to show you that in the broader scheme of things, there's going to be some time for the recovery after the gashes that we've seen. Small cap and mid cap, let's just pull that up very quickly before we wrap up for the day. 0.5% down on the Nifty, mid cap 150, and the small cap at least has been 0.69% in the green. So some ways to go before we can say that we're out of that kind of sluggish trade.
Yeah, absolutely. So you'll take it. It's been a decent week, but I think we've got lots to talk about on the editor's cut. That comes up next. Stay tuned. From Tamanna and myself and the team that put this show together, thanks so much for watching. Stay tuned. This is NDTV Profit.
Yeah, and you'll have Vinay Jessing on the other side.
Co-powered by CoinSwitch.
Good afternoon, you're tuned into Crypto Minutes powered by CoinSwitch for your daily dose of news and updates from the crypto world with me, Shreyanshi Singh. Let's take a look at the top headlines first things first. Bitcoin above $61,500 on strong macros. Robinhood rolls out public blockchain for UK residents. Meta Planet hits 43,000 BTC milestone. Bitcoin long-term holder back to accumulation. Well, those were the top crypto headlines at this hour, but how should you navigate digital assets, manage risk, and spot the next big trend as well? And how would you really navigate tax basics in simple terms? Let's hear out the commentary coming in from Raj Kapoor, founder, India Blockchain Forum now.
I like this question always because everybody asks me this question. India didn't ban crypto or anything, but we are living in some sort of a paradox. If you look at it, we have not decided what is crypto. We say it doesn't exist, yet we tax it. But it is taxed, yes. If we make money, we should be taxed, yes. But there are 5 things which I think every one of us should know. We know that there's a 30% flat tax on every gain. It doesn't matter if you held it for a day, 2 days, 5 years. It doesn't make a difference. It doesn't matter what tax bracket you are in. Flat is flat. We, in fact, have the highest crypto tax regime on this planet right now, 30%. The second thing which we should know, 1% TDS on every single transaction. Well, this isn't an extra tax because it's advanced tax and you can claim it back at the time of filing. But actually, it kills liquidity. Traders bleed out in this micro deduction before even they know they've made any money. So they've already paid the 1% tax before they make money. Third, zero loss offsets. Everybody should know these things because if they're investing in crypto, they should know these things before they actually invest into it. You lose on Bitcoin and you win on Ethereum. Sorry, there's no netting. Every asset lives and dies in its own silo. No other tax regime in India works like this. That's a very brutal thing, but that's how it is. Fourth, there is no carry forward. This year's losses, they die this year. They don't follow you into the next year's return. So sorry, guys, if you made a loss this year. It cannot be offset next year. And the fifth one, which we all should know, there's an 18% GST on exchange fees. Platforms that take commission get an 18% stacked on top, therefore rising the cost of every trade. Now, these are the 5 things you should really know as far as crypto taxation is concerned. We also know that taxation is important, yes. But I think we also need to know that it should not be harsh. We need to bring in more people and liquidity. So we built a tax system for an asset class, and still we don't legally define it. So we are taxing the destination without drawing the map. And if you look at it, by April 2027, India joins the OECD's CARF framework as automatic global data sharing on offshore wallets. That means a Dubai wallet, your Binance account, your invisible holdings, it stops being invisible.
Those are the basics of how crypto is taxed in simple terms. But as we wrap, remember you can reach out to CoinSwitch's dedicated helpline where anyone can connect with in-house experts to get their queries resolved, whether it's about crypto regulations, taxation, or the broader industry as a whole as well. The team is available to provide guidance and help users make informed decisions. And that's this edition of Crypto Minutes powered by CoinSwitch as well. Thank you so much for tuning in.
माँ भी हमेशा पीमाक मस्टर्ड ऑयल में ही खाना बनाती थी।
कुछ तो बात है इस दिल में। PMark, the mustard specialist since 1933.
India Inc.'s most respected names chose India Inc.'s best and brightest.
I'm delighted to be chairman of such distinguished fellow businessmen, bankers. It's just lovely to be back on this NDTV jury. I have been a fan of NDTV for a long time.
Many of the nominees are extremely close together in terms of what they've done.
Gender parity to be reflected while we choose leadership as well.
It's also important that how they are reshaping the industries.
We got a fantastic jury and we've left all decisions to the wisdom of the jury.
Who will earn India's top business honors? Find out at the NDTV Profit Business Leadership Awards.
आपका पार्सल फिर से हमारे घर पे आया है।
कुछ तो बात है इस दिल में।
माँ भी हमेशा पीमाक मस्टर्ड ऑयल में ही खाना बनाती थी। ये आपके लिए।
कुछ तो बात है इस दिल में। PMark, the mustard specialist since 1933.
Welcome. You're watching Editor's Cut. It's that time of the week when We finally let our hair down and we go over all the interesting things that have happened through the week, what we've seen and what's going to happen next. This has been an exciting one and also a not so exciting one. What I mean is that if you look at markets, and Alex and I were just going over the weekly data, they've moved hardly an inch in the entire week, but it seems like there have been so many events happening, right? From crude prices dropping to IT finding its mojo again, all of that has played out. But it's not really showing on the screen, beyond a point.
देखो जुलाई में 2% मूव होना है. अगर फर्स्ट 2 दिन में ही 2% हो गया तो बाकी आके महीने क्या करेंगे?
No, but volumes apparently dipped. You saw BSE and MCX see a bit of a downturn because of that in the first 2 days of July.
Yeah, I think. But if the updates are any indication,
then the earnings could be a surprise, right? On the upside.
Positive surprise.
But it's only the BFSI space, right? I mean, consumption.
Not bad.
Not everything is good. Like, for example, take a DMart.
Avenue was bad.
Yeah. Avenue is the only one that's bad.
DMart, Marico.
I would say Avenue is the outlier. Marico is not a smaller player.
Yeah, but I think there's still some
look at that glass half full.
Yeah.
Okay, so here's what I'm seeing for this week. The tide, I think, is finally turning for Indian markets. Key headwinds, whether it's a blocked Strait of Hormuz to high Brent prices and tariff wars, are receding. Initial Q1 updates are pointing to better resilience than expected during the US-Iran war. Because remember, the whole fear that Q1 of this financial year is going to be a washout because of high Brent prices and everything that happened. The Q1 business updates so far say that maybe it wasn't that bad. Banks will be in the spotlight in the first quarter if updates are anything to go by. Watch out for that space. Tech stocks are having their moment in the sun, but just in the last 2 sessions. And only true believers are willing to bet on Indian IT at this point. I mean, I've heard at least 2 marquee investors talking about having zero presence of IT in their portfolios for between 9 months to 15 months. The Palantir CEO's comments, I thought, were also noteworthy this week and are adding to growing questions over the AI trade. I also had the opportunity to have a great conversation with the valuation guru Aswad Damodran, and one of the things that he said amongst others, and you should go back and watch that interview if you have a chance over this weekend, is that don't blame AI for foreign investors not finding India exciting. And he goes on to say, just look at the top companies on the Nifty and how old there are. Newer companies, new innovations and ideas are not coming in, and quick commerce is not how you define innovation. So some food for thought there. The next big bet, I think, over the next week or so is to see what happens with monsoon. Does it make up for the deficit in July? It has happened in the past. Maybe it'll happen again. And that's really where the hope hangs, I think.
Absolutely. And to add to what you're saying as well, when you're talking about the AI trade, I think globally, you're seeing that rotation of money from the AI trade to other sectors as well, because a lot of your AI-linked companies have actually seen profit booking in this week. Talk about names like, you have names like Micron, SanDisk, Nvidia, and Broadcom. All of them have actually come under pressure. So probably there is that little bit of rotation that's happening there as well. So capital, according to me, somewhere has started moving into sectors that is offering you strong earnings visibility. And that's exactly what Tamanna was talking about right now, that your data is probably pointing to sectors where you could see that visibility coming in there. One sector that I'm identifying over here is real estate. A very interesting ride over there because the preference is shifting probably towards tangible assets and the domestic growth themes as well. Look at the real estate index as a whole. Up almost 35% if you have to talk about FY27 so far. And if you are looking at the capital flows that have come in as well, the money that is coming in terms of real estate as an investment, that is almost at a 6-year high for the first 6 months of 2026. So it's not only your domestic investors, even your foreign investors are putting money somewhere in real estate. So probably I feel that's where the game is shifting right now, towards tangible assets.
Very interesting. So me, actually, the headline that came out yesterday and that we spoke about in the evening, stands out, right? The gazetted notification that came through from the government, the Labour Ministry specifically, that had to do with the EPF or the Employee Provident Fund contributions. You have a clarification that was issued by the government to say that you can choose to limit your contributions to the scheme to the extent of 12% of 15,000 rupees, which is the current wage ceiling, right? That wage ceiling can change in the future, but it says that you can limit it to 12%. So at this juncture, that number stands at 1,800 rupees, which means that your contribution can be brought down to that level. The employer would match that.
So 3,600 in all.
3,600 in all.
Which anyway eventually is part of your CTC, right?
Which is part of, yeah.
So you can reduce the element which is part of your CTC that goes on PF to 3,600 technically.
Yes, and what happens to the rest is that it actually comes in hand. Now, here's the thing. In the new tax regime, your contribution to the Employee Provident Fund is taxed. The employer's contribution to the Provident Fund is not taxed. So incrementally, you might be paying a little bit more tax on the margin, but the advantage of that is that you have more access to money. So 3 scenarios that I see, and all of them are actually positive. If more people choose to go to their employers and say, I want to limit my contribution to the Provident Fund to 1,800, 3 things can occur. 1, people will spend more, in which case consumption goes up. That's positive. Number 2, you can invest it either in mutual funds or directly into the stock market, in which case flows into the Indian equity market are higher. Third scenario, you can ask your employer to actually move that to the national pension scheme, because even under the new tax regime, if your employer contributes on your behalf, that becomes non-taxable. So you can say, bring down my contribution to 1,800 and put the amount that I was contributing into the NPS, which is also going to the equity markets and fixed income, which is positive. So all told, I think it's a positive move.
Yeah, and not a problem for the employer except for maybe some compliance headache initially, if at all.
Yeah, a lot of people would say, look, people are very attached to the Employee Provident Fund because it's, let's face it, it's a great product. For the most part, it has allowed people to have that exempt status. To a certain extent, that exempt status exists because your employer's contribution is still zero. But having said that, there are still better products out there. Equity for the long term has been proven to be the best asset class to invest in. So therefore, if you're building a nest egg and if you have the option to remove it and to put it into a long-term equity product, if you have the risk appetite to do so,
why not?
Why not?
I'm an all-out equity man, but because there's a portfolio approach on the fixed income side, there's probably nothing better than the PF,
exactly.
the 11%
EED
status. So maybe
so it's a choice. It's a choice.
Exactly. Don't argue with the person.
No. It's a choice. Ultimately, and I've said you need to consult your advisor and take the choice that's best for you. It's good that the choice exists.
Or watch Money Wise. The wiser. Money Wise. Okay. Now, one last thing on this, and before we get in Vijay, and we've summed up almost everything, but I thought I've gotten back into reading some serious stuff meaningfully now. And one of the best reads that I had in this week gone by was this small piece from Gavekal Research. And Louis Gave has put this out. He says, of course, he said that SpaceX market cap has come off meaningfully from the levels that it was, right? But even at the current levels, SpaceX market cap is higher than the market cap of the entire cryptocurrency industry.
Okay.
But the big thing that he's saying, and this is the really interesting piece, he says, so one asset that produces no cash flow and which actually burns through cash but holds the future promise of one day possibly delivering cash flows is now worth more than another asset which will certainly never generate any cash flow but which does offer the promise of burning through electricity. Together these two are worth more than the entire GDP of Japan. Think about it.
But SpaceX will also burn through electricity. I think burning through electricity is par for the course for everyone.
But crypto is just another level of burning electricity, right? Just some crazy. So I just thought this whole comparison, right? That two assets, both of which don't have cash flow, are worth more than a GDP of a really powerful country like Japan.
Correct.
Quite something.
Yeah, and all of that is worth more than what is the traditional businesses in India which are seeing no excitement. Your FMCG, banks, IT, capital, capex pushed infra plays. No one's excited about that. But that's what we want to ask Vinay Jaising. And as he joins in today, Vinay, welcome. He's CIO and Head Equity Advisory at ASK Private Wealth. Welcome.
Thank you so
to
much.
Editor's Spot. Great to have you here.
Appreciate your time. Thank you so much.
We appreciate your time.
Exactly.
Thank you for coming in on a Friday evening. So, do you think we've turned the corner in Indian markets?
I think hope is a better word. Every 3 days we say we think. Most of our investors says, when will the FII stop buying and start selling again?
Stop buying.
Exactly. That's why, wait and hope is a good word. Last 10 days have been very good for the Indian markets. You've seen 2 flows come in. The first flow is the FDI flow. The debt flow coming in because of what the government has done on the G-Secs, and the second is the FII inflows for equity. So FIIs are putting it both in equity and in debt. Debt has been a solid $5.5+ billion. Touch wood, we've ticked the box more than FCNRB on what we've done on the G-Secs for the FIIs. But the second and more importantly, as we saw the currency get sweeter from 96 for them to 94, though it's again gone back to a little above 95. They're seeing stability and you're seeing them come back to the country. Is 10 days good enough? Because you've seen $1.5 billion of equity inflows coming from FIIs. Too short a period of time, but let's cross our fingers.
But that's deals, right? I mean, per se, secondary market numbers, do they look?
No.
They don't show, on the provisional numbers don't show a flow.
Selling dissipate a little bit.
If you add the total for the last, so if you look at just the last month, you'll see $5.5 billion of outflow.
Yeah.
But if you add the last 10 days of inflows, that's when you see the inflows have really come in. They're again tepid, like $100 million, $50 million, $100 million. But you add them up, they come to a solid number. So they're not that bad, but that's why I said, to her question, let's hope it continues. Because you started the month with such a big negative number, when you see the month-end numbers, you'll say, gosh, we've still lost $5.5 billion after losing $18 billion, and we are down $30 billion for the year for the equity. But we would have been down $31.5 billion. We're down only $30 billion, which is more than what we lost last year, as far as FIs.
So this is music to the ears, right? Because 24, 25, we've had 2 years of nearly 3 lakh crores of outflows.
That's
and
right.
26 has been that bad too. So therefore, any kind of stoppage is actually not bad news at all.
Not just stoppage, you're seeing a trickle of a reverse.
Yeah. So, interestingly, if you see post the treaty being inked, I won't say it's signed, the war treaty being inked, because you're still seeing issues come up. You've seen India as one of the best performing markets, especially the small cap, which is very different from what you would believe, because we are all seeing 1 month data, 3 month data, longer term data. The global markets pre-war, which is Feb 27 to today, are up between 10 and 25%. The Indian markets, large cap, are down between 5 and 7%.
Right.
Small cap, from that date, is up between 15+%. And if you see in the last couple of days, just when the treaty got signed, they're up about 5%. Very small period of time, but let's cheer to that.
What's getting them back?
I think it's the same story, right? So if you think 1 week, not even 1 week before the war treaty got signed, we heard RBI and the finance minister coming out with a capital stack for the debt sector, which was, I think, amazing. First they spoke about FCNRB. Now FCNRB should not be undermined. The last time we got substantial inflows of FCNRB, which was in 2013. Currently, you've seen SBI come up aggressively on FCNRB, and they're also allowing people to lever. You get a 14% return, which is not a bad number for the debt market at all. You will see HDFC Bank and the others, which are still at that 6.5, 7 without leverage, tie up with some global vendors. You will see the Standard Chartered and the global banks doing something to give you a 20+% leverage return coming in FCNRB. But that ball is not yet clicking. The ball which is clicking is the second thing the government has done, which is they've allowed FIIs not to have a withholding tax. That means they are not going to keep an interest rate tax in the country, nor are they going to keep a capital gain tax in the country for debt. Now, these normally are not reversible. And post this being done, you've seen about $5.5 billion of debt coming. Now, remember, they've also done one more thing. Typically, if you look at the Bloomberg debt index, and they are a $3 trillion index, right? In Jan, to the best of my knowledge, they were debating about India getting included there, and the big question was,
withholding tax. Now, if that's been addressed, come July, which is where we are in, if they make an announcement that India is being allowed to be part of the debt funds for the world, even if you get 0.7%, 0.7 on 3 trillion,
is quite substantial.
It's $25 billion. So slowly and steadily, you're seeing debt inflows come into the country.
So all of this has to do with the currency, right? But at the core of it, even before the conflict began and the whole conversation about crude started, the few issues that were always highlighted from the global standpoint is there is no AI trade, that has not changed. Two, where is the earnings on the large cap end, which is where they invest ultimately, and maybe on the border, on the fringes, they're starting to go into the broader markets. But ultimately,
I don't know if that's right.
You don't know if that's true.
But I'm going to come back here.
That's what you're hearing. That's what people are saying, that they are scouting in the mid cap and the small cap space.
That's right.
But they're not going to large caps. They're selling large caps. That hasn't changed either. Where's the earnings?
So two small questions, right? What do you sell? First question, right? What do you have?
Liquid, liquid funds.
What you have, which is liquid, it doesn't change the market. So it's selling the large cap.
Yes.
So that's what you're selling. Now, if you look at the large cap broader index, there are some names in large cap, in ports or in telecoms, wherein the growth is north of 20% per annum. But you take those out, where else do you see more than a 12 to 14% 3-year growth? CAGR, right? For them to move that fast is becoming difficult.
Yeah.
Right, so there is a problem. They have to reinvent themselves, come into new businesses. So that issue, yes, some of them are very cheap, be it the IT sector, which we spoke about last time, or the banking sector. The private banks are relatively cheap. Can't debate on that. And with this FCNRB, they will get deposits coming into the country, and the loan book growth is looking super appealing.
Yeah.
Right, so the consumption can take off. But here, their dilemma is, isn't that the same story for NBFCs? And isn't that a better story for the NBFCs, where you're seeing the loan book growth being even faster? Not MFI, but the SME space. So why not buy those? Now, going back to your, I think, more pertaining question is, we are being haunted by the ghosts we had earlier, which was currency, which was not being an AI trade, and earnings, right? These are the three big things. Let's take all three of them slowly. So first, currency. Currency got aggravated by the war because of crude oil issues. Now the crude oil price has gone from pre-war levels to back to pre-war levels. $140, $120, $70. You're pretty much home there. So that's touch wood. But we still consuming Russian crude, which means we are not giving money back to the rest of the world. Typically in Russian crude, what happens is when you're consuming the crude, the dollars don't go to the external world. So you're saving the currency. So what I think from a peak of $720 billion, we are at about $670 billion. There's a $50 to $60 billion last 3.5 months, which has outflowed.
This is a forex reserve, right? Forex just reserve. For the benefit of our viewers.
My apologies. Forex reserve.
No, completely fine.
So the forex reserve outflow has been stopped by crude oil prices going down, at least by $6-7 billion. And even the cumulative amount we're taking from Russia, I think that money remains largely in the country. So you're seeing forex reserves now will start creeping up again. So the current account deficit, which was supposedly by most of the analysts touted as a minus 2.5% number, is going to become minus 0.5 or 0. So that's a huge positive. So currency is stabilizing. Gold, the government is trying their best not to allow people to buy more and more gold from the rest of the world. Gold prices have corrected by 15-20% in the last 2 to 3 months since war. So gold is acting like any other commodity, post-war, which is interesting, right? Even with the DXY firming up, all commodities are falling, gold is still falling. Silver is falling a little bit more, but on a year-on-year basis, it's doing well. So you're seeing a lot of, how would I put it, efforts being made by the government to curtail the forex reserves. If FCNRB and what the government has done on the debt front, and they've done a couple of swap situations as well for banks as well as PSUs, 1.5% swap rate, that would enable $100 to $150 billion of debt inflows into the country. I think people are seeing that. The FIs are seeing that, and which is why too early to tell, but that will be the starting point of flows coming into the country. In the last 20 odd years, you've seen flows come into the country of this size 4 times, where the currency is appreciated.
We just have 5 minutes on the show, so the other 2 points we'll have to breeze through. Yeah, please.
So, but when the currency appreciates, what happens is the money remains in the liquid market and it goes to capex, which is why small cap and mid cap space, where you get capex enablers coming in, do very well. One last quick point. India is not an AI market. Yes, it's not. But where are the AI companies in the world? What are they sourcing from India? Are they sourcing capital goods? Are they sourcing generators? Are they sourcing hot boxes? Are they supporting DG sets? Are these going from India? Are these becoming 30, 40, 50% of sales? Those are the companies which seem to be...
Are you seeing any of those?
A lot of them. Those are the companies which are...
What are the recent, I would say, discoveries that you've seen? What new are you seeing? Because right now the biggest problem we seem to have is that there's no new story to tell.
So, new is relative. Something new to me, you is not new to me. Okay. But I would say, again, going back to...
Out there in the ether.
Yeah. So, overall, you're seeing the capital goods sector. I would say, strategic infrastructure and AI ecosystem, the picks and shovels. If you see, even the Magnificent Seven are not moving up as much in the last couple of weeks as are their enablers doing it. And we're seeing the same thing out here. You look at it in the power industry, those companies which are getting contracts from the Facebooks of the world. You look at it in the capital goods sector, those companies which are getting contracts from the Siemens or the GEs of the world. Their earnings, their order book is like 10 to 11x, which means they've got a 40+% earnings growth. You look at the defense industry, you're hearing so much of pure volume growth coming in for them, that the earnings trajectory is not 15 to 20%, it is 30 to 40%. It's not in large cap. That's the only, I think, issue.
Yeah, so part of the conversation that has been happening is the Nifty really representative of the Indian market's potential? The Nifty seems outdated right now. Is that fair to say?
So, a trick question to you all, how many billion-dollar companies in Nifty? 50.
Billion-dollar revenue companies in the Nifty?
No, billion-dollar market cap companies.
All of them.
How many billion-dollar companies in small cap? 250. Just in the interest of time, I'm not getting the trick. So it's 4 times or 5 times as much as the Nifty 50 companies. So where will you find a larger cap billion-dollar company becoming $5 billion? Mathematics tell you that out of 5,200 companies, you'll find more billion-dollar companies which much more earnings growth in that space, not in the Nifty 50. Very simply.
So Vinay, you think FIs are now open to doing the billion-dollar entities in the small cap 250? And part 2, where within the 250, which buckets are you most overweight on?
Okay. I'm keeping on using the word because it's very small data points which we have. Very excited of the capital stack and the debt which the government has done. If the currency remains stable, the last 4 times the currency appreciated, the markets in India did really well. 4 times in the last 20 years. And I'll send you some tables to see that, in the future. You probably have been sent it, but I will send it again. So that's one important point, right? When flows come in, they go into the market, they go to be used for either consumption or capex. We believe that's the space you've got to look at. You've got to break yourself up into 4, right? What is going to drive liquidity? Is consumption going to drive liquidity? Or because liquidity has increased, will the NBFCs get the gain as compared to the banks which will pass it on to them because the consumer space will do well? So that's a space we're looking at very aggressively. The second space we're looking at aggressively is the AI ecosystem in the country, which is being driven because of the power requirement of US. US's power requirement has gone up by 5-6%. If that goes up by that much, who is there to give them those fuel cells or those hot boxes? Who is there to give them the generators, the air blades? That entire ecosystem comes, a lot of it comes from here. There's $1 trillion of capex in a year, is what the Magnificent Seven are saying. 25% of it, $250 billion, goes to the non-hyperscalers or accelerators. Even if 20% of that, $50 billion comes to India, you're pretty much home for these people. So that's a space you want to look at. Finally, make in India. IT is a space which is difficult because AI is kind of a boxing alley out there. You want to be away from it, though IT as a space also has AI-enabled companies in them. So I can't say whether you're underweight or overweight IT, but pure services space you've got to be concerned on. But there are many AI enablers coming up in the country. There are many companies which are tying up with the NVIDIAs of the world and allowing companies in India to use them and growing on the GPU stack. So I think there is enough and more.
Yeah, you just have to look more closely. We are completely out of time. Yes. But Vinay, thank you so much for coming in. and giving us that quick, short masterclass in what to look at in Indian markets. I think he sounded positive. He kept saying,
yes,
you sounded positive at the end of it.
Let's cheers to that.
Let's cheers to that. All right. That's
the best line.
That's all the time we have on this edition of Editor's Cut, but we'll be back same time, same place next week. Stay tuned.
Thank you so much. Cheers, guys.
Thanks, guys.
आपका पार्सल फिर से हमारे घर पे आया है।
कुछ तो बात है इस दिल में।
माँ भी हमेशा पीमाक मस्टर्ड ऑयल में ही खाना बनाती थी, ये आपके लिए।
कुछ तो बात है इस दिल में। P-Mark, the mustard specialist since 1933.
You founded this company in a way when you were 15.
I think Avon really started off as more so a project than a company. The very honest TLDR answer to why I started this company is it was just very boring during COVID. I didn't want to spend this extended summer break rewatching Suits for a 5th time.
There are now, at least, quite a few folks in India who are getting into the drone delivery space. What is disruptive about your version or your vision of drone delivery?
Our goal is to create a technology stack that leads to delivery drones that are orders of magnitude cheaper. We are actually shockingly close to being more cost effective than trucks, to being more cost effective than, let's say, a Tata Ace.
From a pet project to building a company which actually makes sense. You need someone to believe that this is a viable project, not a project, but a viable entity. Who was that person for you?
That was Grad Capital. So they were our very first check. They invested in me when I was 16. It's only over time became apparent to me that nobody would have backed a 16-year-old that was still in school the way Grad Capital did. It was also a funny experience because Abhishek Sethi, the lead investor there, literally had to get on a call with my dad to convince him that you should let your son take this money.
How much of your formal education did you complete?
I did not go to college.
Why?
I think I felt there's nothing that, I can learn out of college that I couldn't learn myself.
India Inc.'s most respected names chose India Inc.'s best and brightest.
I'm delighted to be chairing a committee of such distinguished fellow businessmen, bankers. It's just lovely to be back on this NDTV jury. I have been a fan of NDTV for a long time.
Many of the nominees are extremely close together in terms of what they've done.
I think it's also important that how they are reshaping the industries, commercial activities which they are into.
Markets end mixed as benchmarks outperform broader indices for the second day. Nifty rises for the third consecutive session, led by IT and private banks. HCL Tech surged to the top of the Nifty after winning a $1.14 billion deal to build an AI-led operating model for a Europe-based Fortune Global 50 client. Adani Enterprises upsizes QIP to 15,000 crore rupees from the launch for 10,000 crore rupees after the issue draws about 3.8 times the demand. Proceeds to fund expansion across the group. Sources tell NDTV Profit that the QIP launch draws blockbuster response coming in from top global and domestic investors. A big boost for India's defense sector may be around the corner. Sources say the Defense Acquisition Council could clear procurement proposals worth over 1 lakh crore rupees, with drones and ammunition high on the agenda. Government acts against Chinese apps, orders to remove BAT, BMS and also Epoch Ion after e-rickshaws were remotely shut. And in fact, MeitY secretary says that the government will ensure also that damaging apps don't come up. Amid WhatsApp controversy, Zoho's instant messaging app will no longer have the username-based account feature, announces Sridhar Vembu. Also, METI secretary flags serious possibility of impersonation. Former Supreme Leader Ayatollah Ali Khamenei, his week-long funeral ceremony began in Tehran. It will conclude with Khamenei's burial in Mashhad. Hello and welcome. You've tuned into Profit 360. I'm Nisha Podar. Let's take it straight to the markets. Dalal Street ended the week on a strong note, with the benchmark indices really extending their winning streak for a third straight session. Now, the Nifty closed above the 24,300 mark, gaining over 1% for the week, while the Sensex ended above 77,700 levels. Well, Jasmeet is right here to give us a full market roundup on the action for this particular week. Jasmeet, take it away.
Well, a flat day for markets today, but Nifty 50 ends in green and gains about 0.3%. In terms of top gainers in Nifty 50, we have stocks like HCL Tech and Max Health gaining the most, while HCL Tech saw an uptick of nearly 5.6% on the back of that new deal win of 1.1 odd billion. If we look at over the week, we have seen the markets have seen a good momentum throughout the week as well. Nifty 50 ends in green and gains about 1%. In terms of the broader market for the week, we have seen broader market have showed a mixed performance compared to the index. If we look at Nifty Midcap 150, that saw growth of nearly 0.5%, while underperforming the benchmark, as the benchmark was up nearly 1%. We look at the top gainers in Nifty Midcap 150. We have stocks like Oberoi Realty and we also have Hexaware Tech, both gaining the most for the week and gained about 10%. In terms of Nifty Small Cap 250, that saw an uptick of nearly 1.5%, outperforming the benchmark. And in terms of the top gainers in Small Cap 250, we have stocks like AGS Logistics and Zensa Tech, both logistics and a tech company. We have seen both of them gaining about 50% through the week. Now, in terms of the sectoral trend, the sectors end on a mixed note for the current week. While Nifty PSU Bank and Nifty Bank end in red, while Nifty Oil and Gas and Nifty Auto ends flat for the week. In terms of Nifty PSU Bank, they were the top losing sector, down about 2.5%, while Nifty PSU Bank ended in red in the second consecutive week. In terms of the other key stocks in Nifty PSU Bank, we have stocks like Bank of Baroda, which is a top losing stock in Nifty PSU sector, down about 10%, while Nifty Realty ends up being the top gaining sector for the week, gains about 8%. While in terms of the top gainers, we have Oberoi Realty and Lodha Developer, both gaining the most for the week, and they've gained about over 10%. If you look at the other key sectors, Nifty Bank snaps its 6 weeks of gaining streak and ends in red, while Nifty IT snaps its 4 weeks of losing streak and ends in green and sees the positive momentum coming in the last 2 days of the trade, while Nifty Financial Services, Nifty Pharma, Nifty Realty ends in green for the 4th week in a row.
All right, thank you so much, Jasmeet, for the entire roundup. But the highlight for the trading session, at least for today, was HCL Tech. Take a look at that particular counter, over 5% gain and a major really show of confidence coming in from HCL Tech, which really led the entire IT index to be the top gainer in terms of the sectoral performance at 1.7% increase. So HCL Tech really provided a rare bright spot for the IT pack today, with the stock surging as much as 7% earlier in the trading session after, remember, announcing a $1.14 billion AI deal with a Fortune Global 50 company. Now, the sharp rally lifted the sentiment across the IT sector, helping the Nifty IT index to really outperform the broader market. And for HCL Tech, remember, the deal comes at a crucial time after 5 consecutive months of negative returns, also giving investors hope that large AI-led deals can be won and could help offset the sector's growth concerns when it comes to the AI pivot by the IT services firm. So this is coming in as a show of confidence, and with this particular deal, the entire IT pact looked much better. All right, to another corporate development, Adani Enterprises upsizes its QIP to 15,000 crore rupees from the launch for about 10,000 odd crore rupees after this particular issue really draws about 3.8 times the demand. Varsha is right here with all the details of this fundraise and what's it going to use the proceeds for. Varsha.
Well, yes, 10,000 crore rupees QIP, and wherein company has inched up to rupees 15,000 crore. Now, where will these funds be used? Of course, to fund expansion projects across group businesses. Part of the money will also be used for a new PVC plant, and funds will support concession fee payment for a road project. But the important thing over here is, the interesting thing is, sources tell NDTV Profit that QIP launch draws blockbuster response. Now, top global and domestic investors rush in. Issue was oversubscribed, sees strong 3.8 times demand on base size. Marquee global investors have been interested, and leading Indian mutual funds have been backing this QIP. You have names like Capital Group, Goldman Sachs, BlackRock, Blackstone and Nomura have seen the participation. Issue also sees participation from virtually every major MF house. Just to name a few, you have HDFC Mutual Fund, ICICI Prudential, Kotak Mutual Fund, SBI, Aditya Birla, Tata Mutual Fund. All these mutual funds have the company has seen interest from them. Also, if you see, several institutions seeks larger allocation than available, and issue was subscribed within 48 hours from start of the road show. Total bids were estimated at around 3.8 times, and participation of investors suggests institutional appetite for Adani Enterprises QIP. So overall, a very good a blockbuster interest coming from the bigger institutional funds in this QIP.
All right, thank you so much, Varsha. In fact, we spoke to Deven Choksi on the expanding of the Adani QIP and the return of the institutional capital flows into equity markets. Listen in.
Today, market wants this kind of paper to come in, like Adani Enterprises QIP issue, where probably you are also inviting some of the large global institution investors like BlackRock and Capital International into the country. So to a greater extent, I think it's a capital flow once again returning back into the equity market through this kind of large papers that we are seeing. Overall, the market will be very happy to see such kind of larger issues coming into it.
All right, so that was Adani. Now, Deutsche Bank's retail business sale to Kotak marks the latest foreign bank exit from India. What's really pushing the global banks to really scale back the retail operations? HSBC remains the only major foreign bank with a sizable retail footprint here. Piyush is here with all the details and explains why it is an expensive affair for the foreign banks to really stay in India. Piyush.
That is right. Deutsche Bank has become the latest foreign bank to actually exit its retail business in India. It has sold its retail banking portfolio to Kotak Bank for around 280 crore rupees. We have seen earlier also how Citibank sold its consumer banking portfolio to Axis Bank in 2023. And before that, in last decade also, we have seen how Commonwealth Bank of Australia had exited Indian markets in 2016. Royal Bank of Scotland had exited India between 2013 and 16, whereas Barclays had actually shut 1/3 of its retail branches in India in 2012. Now, why the exits? There are three main reasons for it. First is taxation. Now, according to the Indian tax laws, corporate tax for foreign banks has been set at around 36.5 to 38.2%, and domestic banks pay only 22 to 25% corporate tax. So this has been a long pending request from the foreign banks that India should consider reducing corporate tax on foreign banks. Second major aspect is that foreign banks don't really have a lot of retail presence in India. They don't have retail deposits as much as the domestic peers do. Their cost of fund is higher, so they can't really compete with Indian banks on India's retail credit market. Now, the third aspect here is that a lot of foreign banks also of late have been seeing, not just foreign banks but Indian banking industry has seen a heightened regulatory supervision, the regulatory scrutiny on all the banks have increased quite a lot, and foreign banks feel that the cost of compliance with each of these regulatory guardrail is sort of too high. So these are the three major reasons that foreign banks continue to exit from India's at least retail market. They continue to invest significantly in attracting the wealth management pie that the country has.
All right. Thank you so much, Piyush, for breaking it down for us. Now, important news development breaking on your screens. And Defence Acquisition Council, or DAC, approves the capital acquisition proposals worth about 52,000 crore rupees to enhance the combat readiness of the defence forces for the Indian Army. Now, approval granted for the procurement of the anti-unmanned aerial vehicles electronic warfare system as well as Akash Tarang, man-portable anti-tank guided missile, also systems medium-range surface-to-air missile. Akash Tarang will, remember, provide the effective anti-UAV protection to the army formations. Joining me is Major General Ashwini Sivach, who's a defense expert. All right, he will be joining, but that's the big development really coming in. Defence Acquisition Council, who held its meeting earlier today and was deliberating on how to bolster India's defence preparedness, and that's why this important information is going to be critical for the country's defence mechanism. In fact, the acquisition proposal is worth 52,000 crore rupees to enhance the combat readiness of the defence force. So that's the big story that we are really tracking at this particular moment. And remember, for the army, the approval granted for procurement of anti-unmanned aerial vehicles, or UAV electronic warfare system Akash Tarang, man-portable anti-tank guided missile, or PATGM, those are the critical bits. Now remember, for our defense mechanism and our preparedness, these are critical bits that DAC, or Defense Acquisition Council, has really, today approved, and this is the proposal that is worth 52,000 crore rupees. In fact, we had earlier stated that this particular DAC meeting is going to be extremely critical. Now, government has ordered the removal of 2 Chinese mobile applications, BAT BMS as well as Epoch Leon, from both the Play stores, and the action really comes after reports of they being misused to disable the e-rickshaws in Delhi surfaced. Now, BAT BMS as well as the other, that is Epoch Leon, are battery management apps that really connect via Bluetooth and in remotely shutting down lithium-ion batteries. Now, MeitY Secretary S. Krishnan has said that decision has been taken as it raised safety concerns, and let's listen into what he had to say about this particular bit and the ban of the 2 Chinese apps.
That is right. I mean, there are a couple of apps which came up to our notice yesterday, and both of them have been taken down from the app stores. The point is that, this is due care that the app stores have to exercise, and we will take it up with the app stores to see that possibly damaging apps do not come up.
All right, let's also have a look at the report on the chaos these apps have really caused and the concerns that really persist.
A moving e-rickshaw can be stopped within seconds with a tap on your smartphone. Well, that is the viral social media claim, and something that you must have been seeing trending all over the social media, and this is via a Chinese company based app, which is a battery management app. It is BMS. You'll see that this e-rickshaw is now connected to our smartphone. We will try to switch it off here, and we are switching it off, and now you'll see here something new. That is that this pop-up will come here, which will be asking you to put in the password. This is in fact a recent update. Question here is that after the restrictions have been brought in, so all is now well Well, the question is no, because there are many other similar kind of apps. One such is in fact the Epoch battery. As you can see, we have connected it. Now we will be proceeding it and we'll try to switch it off. So in fact, we'll be trying to switch this particular e-rickshaw off. And as you see, that e-rickshaw has in fact turned off. क्या आप चला पा रहे हैं? यही होगा. Display ही चला गया है. So this is another app, as you see, with a similar kind of chaos that the earlier app was creating.
Dealers say they're now receiving complaints involving another battery management app as well. According to them, drivers are increasingly approaching workshops after their compatible e-rickshaws stop functioning unexpectedly.
2 दिन पहले से जो है ना, हमारे पास में रात को 3-4 गाड़ियाँ बंद हुई थी, तो हमने जो है वो हमारे पास आए, तो हमें यूँ लगा कि टेक्निकल इशू हो सकता है, कोई बैटरी में एरर आ गया होगा, तो हमने वो ऑन कर दी. उसके बाद में जब नेक्स्ट डे जब हम लोग आए हैं, तो मैं तो थोड़ा सा लेट आया था, उससे पहले हमारे जो स्टाफ थे, तो जब उनका फ़ोन आया कि गाड़ियाँ कम से कम भी नहीं तो 40-50 गाड़ियाँ, मतलब 10 गाड़ी 5 गाड़ी हमारे पास में आती थी. एक गाड़ी को हम लोग ऑन करते थे, उससे पहले पता चल रहा कि 2 बंदे और धक्का मार के आ रहे हैं.
For e-rickshaw drivers, this isn't just about technology. It's about their livelihood. A vehicle that suddenly shuts down could mean losing an entire day's income. And without warning, drivers fear that they could be stranded in the middle of a trip.
Now, amid WhatsApp username controversy, Zoho's Sridhar Vembu has announced to disable the username feature on messaging app of his company, and MeitY Secretary S. Krishnan says that there is serious possibility of impersonation. Hence, the government has sought explanation coming in from WhatsApp, Telegram, as well as Signal. So, all these 3 apps are on the radar of the government. Listen in.
I have no comment to make. I mean, we have taken up the issue of using usernames because there is a serious possibility of impersonation, and there is the kind of encouragement that it provides, or the facility it provides for committing more cybercrimes, which is a very serious issue. The Supreme Court, in the case relating to digital arrests, has taken up that matter. And this is another dimension of the way that cybercrimes can be committed, which is the reason why we have directed WhatsApp to explain why they have this feature, and likewise we have similarly sought explanations from others. So that is the status.
All right, and 6 days funeral ceremony for Ayatollah Khamenei has begun. The funeral, delayed by months due to the war, will really conclude with his burial in Mashhad, as Tehran turns the event into a powerful display of national unity and religious symbolism. According to reports, Mujtaba Khamenei, the son of Iran's supreme leader Ali Khamenei, is expected to skip his father's funeral over fear of a possible assassination attempt. In fact, representatives from more than 100 countries are expected to attend the funeral of former Iranian Supreme Leader Ali Khamenei. All right, moving on to a major tragedy that has unfolded in Uttar Pradesh area, and where an LPG tanker exploded after crashing into a toll plaza, killing at least 5 people in this particular incident and also injuring several others. In fact, CCTV footage shows that the tanker losing control, ramming into the toll booth before a gas leak triggered a massive fireball. Now, the blaze was so intense that the flames were reportedly visible from nearly 2 kilometers away. Now, fire teams as well as police rushed to the spot as authorities launched an investigation into the cause of this particular crash. All right, an incident there, a tragic incident at that. With that, completely out of time on this edition of Profit 360, but do keep it with NDTV Profit. Thank you so much.
माँ भी हमेशा पीमाक मस्टर्ड ऑयल में ही खाना बनाती थी।
कुछ तो बात है इस दिल में। PMARC, the mustard specialist since 1933.
You founded this company in a way when you were 15.
I think everyone really started off as more so a project than a company. The very honest TLDR answer to why I started this company is it was just very boring during COVID. I didn't want to spend this extended summer break rewatching Suits for a fifth time.
There are now, at least, quite a few folks in India who are getting into the drone delivery space. What is disruptive about your version or your vision of drone delivery?
Our goal is to create a technology stack that leads to delivery drones that are orders of magnitude cheaper. We are actually shockingly close to being more cost effective than trucks, to being more cost effective than, let's say, a Tata Ace.
From a pet project to building a company which actually makes sense. You need someone to believe that this is a viable project, not a project, but a viable entity. Who was that person for you?
That was Grad Capital. So they were our very first check. They invested in me when I was 16. It's only over time became apparent to me that nobody would have backed a 16-year-old that was still in school the way Grad Capital did. It was also a funny experience because Abhishek Sethi, the lead investor there, literally had to get on a call with my dad to convince him that you should let your son take this money.
How much of your formal education did you complete?
I did not go to college.
Why?
I think I felt there's nothing that, I can learn out of college that I couldn't learn myself.
India Inc.'s most respected names chose India Inc.'s best and brightest.
These kind of awards and jury lineup, you are truly giving it the right weightage.
The eminent juries who are here and that itself speaks for the commitment towards highlighting the advantage which India is having. What I am looking for in this is that we should be awarding companies and individuals who have focused not only on growth but also on bringing good governance.
Be part of jury and vote on the people, the men, the women, the companies in India who have the right stuff is a great opportunity for us.
Who will earn India's top business honors? Find out at the NDTV Profit Business Leadership Awards. India's unshakable news habit. NDTV.com is India's #1 English news website.
Hi, I'm Tamanna Inamdar. Watch me on NDTV Profit, where I break down the day's biggest business stories. What happened, why it matters, and what it means for your money.
Hi, I'm Neeraj Shah. Watch me on NDTV Profit for the most incisive market intelligence and meaningful corporate conversations.
And I'm Alex Matthew. Markets, mutual funds, insurance, personal finance. I help you cut through the noise and make smarter financial choices. And here's where you can watch us.
Hello and welcome to KYC, a show where we decode as to what is this company going to be all about, what the company has done in the past, and going ahead, what is that outlook going to look like with all their capex plans et al. First up, I'm sure everyone wants to guess what the company is all about. This is a company that we're talking to who's one of the leading paper manufacturing companies in India. Does this give you a clue? Not yet. 23% market share is what they command in the copier paper market. Copier paper is usually the Xerox paper that we use, the photocopy paper that we use, the printing paper that we use. That's what we're talking about. 23% market share. However, the stock is down nearly 40%
from its all-time highs. Any guesses here? I'm going to reveal that up shortly. The company that we're talking about over here in terms of what this is all about, let's pull up that one on the screens and we will tell you. This is JK Paper. You know, this is one of the leading companies that we've actually looked at since very long. All of us have been using this paper also in our day-to-day lives. Moving on, if you have to know more about in terms of what we should know over here, because the stock is kindly underperformed, let's look at the other aspects as well in terms of the company and the questions we have. One, strong volume growth is what we've seen. The question is, will we see that in the profitability and in terms of the margins as well going ahead? That's one of the key questions we have. Secondly, all the disruptions that have happened, you know, from paper prices going down, especially from raw material prices which have gone up, have the disruptions bottomed out now from here on? Because the fourth quarter showed a significant improvement as compared to what the last couple of years have been. And from this down cycle, can JK Paper actually emerge as a stronger player, stronger contender, not only from a performance perspective when you talk about financials, but also for the shareholders? Apart from that, you're looking at the debt reduction. Now, the debt is pretty much reasonable. The question is, with the kind of capex plans that it has, does that also come in place? And in terms of capex, they've just commissioned one plant in Gujarat. We're going to talk about that as well. The cost synergies that are coming in on the back of the progress of this BCTMP plant, because that is something that will go ahead and aid the margins of the business going ahead. And overall, the milestones that would actually define successful FY27 for JK Paper and the years to come. What is that going to look like for the company? Usually we talk about the company first. First up, a company that is established in 1962, part of the JK group of companies, which is the JK organization. Overall, if you have to look at the company, it's evolved from a writing and printing paper company to actually packaging board, and that is also one of the moats that the company has, because that's a high margin business. The company is operating in an integrated paper mill in Odisha, Gujarat and Telangana. So these are few of the three regions where the company has presence in terms of the plants as well, and they own some of the most recognized paper brands in India, and that's what we were talking about, the Xerox paper, the printing paper. These are the brands that we look at in terms of what they own: Copier, Easy Copier, JK Cedar and JK Excel Bond. Moving on, apart from talking about the brands, let's actually talk about their leadership. Branded copier paper, the company is the market leader there. And if you have to look at other segments as well, it's amongst the top 3 integrated paper manufacturers in India, and this is by capacity as well as by sales volumes. The question is, when does this happen and translate into revenues, margins, profitability? If you talk about FY26, their paper and board sales actually reached a record of 8.19 lakh tons. Close to 8.2 lakh tons is what they've been able to achieve as well in terms of volumes and sales. And they produce close to 8 lakh tons per annum, and this is across the integrated mills that they are operating in the 3 regions, Odisha, Gujarat and Telangana. So this is all about JK Paper, but let's quickly give its rankings as well. Now, if you have to look at the criteria that we've picked up, first up is their capacity expansion that we're talking about, which has just come on board right now on the 30th of June. Income statement, balance sheet, cash flow, the others remain as is. We're not really going to look at the outlook of this company right now, because we know what the company has done and everything relies now on the expansion and the fruits it bears for the company. Your return ratios, your shareholding pattern, street credentials and valuations as compared to its average and peers. First up, let's actually look at the first parameter that we're watching out for in terms of where the capacity expansion is concerned. Now, first, they've started the commercial production at the new hardwood BCTMP plant. And this is something that the investors were actually watching out for, because this is backward integration. This will be margin accretive as well to some extent. And this is a bleach chemical thermomechanical pulp plant. So this is what BCTMP actually stands for. Moving on, if you have to look at the expansion plans. This is an advanced facility at the Central Pulp Mills unit, which is in Songarh, Gujarat. This is where it is located. And they've invested close to 650 crores to build this state-of-the-art plant. In terms of the benefits it has as well, production capacity of close to 1.2 lakh air-dried metric tons per annum. This is what you're looking at in terms of full capacity. This will boost the company's internal pulp making capacity. Now, because the pulp making capacity gets boosted, the raw material that comes in for manufacturing is what becomes cheaper. So it reduces the dependence on expensive and imported pulp that we're talking about. And very lastly, if you have to look at margin expansion, that's what we could see out of this as well. So a thumbs up given to capacity expansion. Now moving on, look at the income statement, what's happened there. This is a thumbs down to some extent, because if you look at the revenue, 3-year CAGR is 3%. Your EBITDA as well, no major improvement there. Margins, in fact, that has slumped from a 14% to a 13%. And your net profits have kind of halved. 412 crores in FY25 to almost a 241 crores in FY26. This is the FY26 picture, but I want to bring to your notice what's happened in the fourth quarter as well. The question is the fourth quarter a beginning to the growth cycle? 18% revenue growth, 26% EBITDA growth. Your margins have improved by 100 basis points, in fact, from the fourth quarter as compared to the FY25. And your net profits have seen a growth of 36%. So your Q4 has been slightly better as compared to the previous quarters and the previous year. So that is a positive slightly. However, look at the margin trajectory. 25 improved to 31. 23 was a very good year, but I think rest of it is history right now, because it was the entire paper cycle which has gone down, which has impacted margins, and you've gone down to levels of what, 14 and 13%. Will FY27, because of the additional capacity, have something more in store for the margins? So thumbs down in terms of the margin trajectory so far. Apart from the margin trajectory, if you have to look at the other aspects as well, let's look at the balance sheet from here on. Now, there is some bit of strength over there. If you look at the borrowings have come down to 1,700 crores to almost a 1,574 crores. The cash in the bank has increased as well substantially from 73 crores. It did dip in FY25. However, it's come back to 180 levels. So that is a positive. Equity is increasing along with your other equity, and the book value has also been on an uptrend. So a couple of factors which are positive. So it's a pretty neutral balance sheet that the company has been sitting on. So that's what you're looking at in terms of the balance sheet. Cash flow, a positive. That's the reason a thumbs up, because look at the improvement also in terms of the net cash flow. From 27 odd crores, your net cash flow actually dipped down to almost negative 45 crores. Improved to 111 crores. So that is one of the key positives. And secondly, the flow to profitability also has been pretty good. And these are the two factors why we've given it a thumbs up as well in terms of the cash flow. Now the return ratios, again a strong performance there if you have to look at, in terms of FY23 to 24, where if you look at the ROC, the return ratios have almost doubled. However, a slump and deterioration coming in terms of FY25 and FY26, and that is the concerning area. What is this telling you? That JK Paper was generating strong operating profits relative to the capital employed in the business, and the period is actually coinciding with a favorable paper cycle, better realizations, healthy profitability, and this I'm talking about 23 to 25. But the sharp deterioration that we've seen here is what is concerning. The question is what happens, because ROC below 10% is generally considered weak for a capital intensive manufacturing business, and the decline is indicating that this incremental capital that the company would have invested is generating significantly lower returns than before, and hence a thumbs down mainly on FY25 and 26. So that's with regards to where the return ratios are concerned. Now moving on, if you have to look at the other aspects as well in terms of the factors that we are considering, let's look at the next part of the shareholding. This is a thumbs up because your promoters have consistently increased stakes. So from a 50% you've gone down to 53%. In terms of FIs and DIIs as well, substantial increase coming in terms of the shareholding. So this is a positive where your promoters, your FIs and DIIs have some trust and faith in terms of the stock as well. However, your public shareholding because of that has gone down from 37 to 29%. So retail is subdued because of the returns. Now let's look at the street credentials over here. In terms of street cred, again a neutral because it is negative, but a 2 to 3% decline is telling you that the stock really has not done anything. It's neither given any returns nor eroded that kind of value as well for shareholders, and hence we've given it a neutral rating. And if you see 1 year period as well, it's down 5%. Someone who's holding the stock for 5 years, a 59% is the kind of returns that you've seen for a JK paper, and hence a neutral rating there. Let's look at the valuations. Very interesting because it's cheaper as compared to peers. Andhra paper 67 times, JK paper 23 times, and this is I'm talking about the current PE. Now in terms of West Coast, both of them are at par. The reason why we are giving it a thumbs down is because a 23 times to a 5-year average of 9 times. That is telling you what's happened here. So way expensive as compared to its 5-year average, and as compared to peers as well. I mean, not done anything in terms of value for the investor. So hence a thumbs down in terms of the valuations are concerned at this point in time. So that's what we're looking at in terms of all the rating parameters here. But let's look at the final scorecard of what comes up for a JK paper. Considering all the 8 parameters, a thumbs up on capacity expansion and cash flow. However, income statement is a down, balance sheet is a neutral. If you have to look at the other 4 parameters as well over here, you have return ratios, valuations, which is a thumbs down, street cred is a neutral, your shareholding is a thumbs up. This gets you to a total of, if I'm not mistaken, a 4 on 8, which is still very decent. A 50% there coming in from a total of 8. 4-star is the final rating. A.S. Mehta, President and Director at JK Paper, joins in. Mr. Mehta, welcome to the show. Always a pleasure to speak to you. This is Hiral on this side. You know, my question first up coming to you is...
Good morning.
Good morning. My first question coming to you is overall with regards to the commercial production which is started at the BCTMP plant. If you could give us more details in terms of what is the utilization going to look like in the current financial year and what is the ramp-up plan?
Okay, this pulp mill we have set up is for our packaging board plant because this is a special pulp which is called BCTMP, means the mechanical pulp, and it is a hardwood mechanical pulp produced from the local wood available. And currently we are able to produce close to 80% of the rated capacity of this pulp mill. And going forward, in a few months' time, we should be able to produce 100% out of this pulp mill.
So, Mr. Mehta, from what we understand, because of this facility, I mean, this facility is more in terms of backward integration as well, and that is something which helps with all the volatility that you're seeing for, you know, the pulp. What is the kind of benefits that you're going to see from a financial perspective?
See, ultimately, the BCTMP pulp mill, what we have put up is, rightly you have pointed out, to address the volatility of the global pulp prices. Pulp means, again, the mechanical pulp prices, because we have seen in past the amount of volatility. It was that at one point of time, the rate used to be $450 a ton and went up to as high as $900 a ton. So that kind of a volatility is very difficult to address and mitigate. So what we thought is that it is better to have a BCTMP pulp mill. And in fact, this was thought when we were putting up the board machine itself. It was only a question of time. We timed it in such a manner that it should be available in the year 25-26. In fact, we thought that it should be available in the year 25-26. But because of the global disturbances, in fact, some of the equipments were delayed and we could commission it on 30th of June. Financially, I would say that when we produce our own pulp, then we don't have to dry it out. The liquid pulp can itself be used. And when we buy from the market, the market pulp is a dried pulp. So in fact, for anybody who is producing the pulp, drying it and shipping it out, I mean, at least $50 to $100 is the extra cost. $50 is just a cost of a drying a pulp. So, I mean, even if it is the same cost parameter, everything remains the same. At least you save $50.
So help me understand, Mr. Mehta, historically, 100% of the mechanical pulp requirement was something that JK Paper was importing?
Yes, we were importing 100% for the packaging board, the mechanical pulp, which is close to 50% of the total raw material component.
Interesting. And this gets your dependence on imports down to 0%?
No, we still will need something around 20% for the mechanical pulp from the softwood. Because the mechanical pulp is the two component, hardwood and softwood. So in India, we can only produce out of the hardwood. So close to 30% our dependence will be, I mean, out of 50%, the 30% will be our own pulp now. So that means the 60%, the dependence has come down.
Understood. Now, my other question to you over here is, basis the 80% dependence which has come down, what is your analysis internally in terms of the cost save that you will have? Because, and compared to the investment that you've made to this plant. So, analyzing the return on the amount, ROCs, and what are the returns looking like then?
See, when we conceived this project, our thought was that the return on this project should be close to 15%. So this is what I'm saying, that the return on invested capital of 600 odd crore. So 15% would be the return. And even today, my gut feel is that, see, we can't calculate this year over year.